quick.
Where real-time market coverage meets expert strategy.
Market is
The
bouncing
opening bell
crazy
to the
right now.
closing bell. We've got you covered.
Get inside the minds of pro traders.
My point is that they're getting
How
rate
is
of
that?
change in sales based on their guidance, but not the same rate of change on EPS.
Follow the biggest headlines, live analysis, breaking news, and sharp trade ideas minute by minute.
With shows built for action, we break it all down in real time with speed, accuracy, and precision.
I think one of the most important things is you're making a play in a risk-defined way here going into earnings.
So that would be a further downside area to watch.
Smart insights, actionable data, veteran traders, and trusted financial journalists streaming live and on demand.
Schwab Network, streaming 24/7, any screen, anywhere, free. SchwabNetwork.com.
Morning movers bring traders the biggest headlines to start the day. From volatile
Overnight swings to the earliest analyst calls. Get your watch list ready. 8 a.m. Eastern, Morning Movers, only on Schwab Network.
Believe me, when it comes to investing, you'll love Carl's Way. Take a left here, please.
But there's a...
Carl's Way is the best way.
Is it? At Schwab, how I choose to invest is up to me.
Exactly. I can invest and trade on my own.
Yes, and I let them manage some investments for me, too.
Let's move on, shall we?
No can do.
I'll get out here.
Where are you going?
Schwab.
Schwab, a modern approach to wealth management.
Hello, everybody. Happy Friday, or is it? Welcome to Morning Trade Live. I'm Sam Bartas, live from the floor of the New York Stock Exchange. We've got plenty to hit on both here and abroad over the next hour. So here's a look at what is coming up on today's show. 80% of the market cap of the S&P 500 has reported third quarter earnings. We'll take a look at the Q3 report card and assess what could be next for growth. And over the next hour, review example trades for Nvidia and Alibaba. Both companies are reporting earnings next week. For now, let's take a look at where markets stand about half an hour
Let
into
my tea
trading.
cool
to
down a
kick
little
off what
bit.
has been a pretty volatile old week, and we have down arrows across the board. So we are piling on the losses that we saw yesterday. The S&P 500 feeling it to the tune of
What'd you say?
about 0.5% right now to the downside. We're at 6,700.
Yeah, I
Just
should be
above that
connected
as
now.
we stand. The Nasdaq, as we
Everything.
continue to see the air
Ooh,
coming
we
out
got
of
these
the tech,
$26
down
now.
about 0.5%. We've had
And it's
Dan
bouncing
Ives
like
talking
crazy.
about how this could be a buy the dip opportunity, but very much the AI valuations and also credit risk conversations now starting to creep in. Dow Jones is down about 1% in trade right now, and the Russell 2000 down about 0.2%. So we see risk off as we get up and running for this Friday. Not a huge amount of cheer. Let's check out
I like the
foreign
way
markets because
I like the way I
we
was
see that
trending.
the action was pretty grim out in Asia and across Europe overnight as well. Look at that, not looking too pretty out in the Nikkei 225 in Japan, 1.8% lower. Hang Seng Index down almost 2%. I'll dig into why later in the program. We've got the German DAX currently on the back foot to the tune of 1.5%, and the FTSE is doing the same thing at the moment. So we continue to watch the performance out in Europe as we close things out for the week. Let's take a look at futures products because the 10-year yield coming on at 4.06 as we saw this morning, picking up steam now at 4.11. The dollar index slightly higher, but still sitting
US
stable
is
at
what helped
levels
me
of
get my
99 for the DXY.
obtain my
We're
lawyer.
seeing gold taking a
About
traded
lawyer
down
up here
almost
telling me
3%
doubts.
in trade today. We're just above that
I only
4,000
paid for
level right
this.
now.
I
Crude
ain't even
oil
paid
dropping
for
a bit, up
nothing for real.
2.2%.
I need
We're
some
at
more
59
money.
bucks a barrel, so just shy
Yeah.
of 60. And Bitcoin, that
Yeah.
has been a big story for us
Everything
this morning.
revolves around
Risk off
money.
as very much has seen a correlation with the tech sell-off, down 1.6% right now. We did cross that level of
He trying to
95,
tell
but
me
it picked up. We're at 96,000 as we stand.
what
So
I
that's
can
your
do.
scorecard for this morning as we get up and
And I'm
running
trying
for
to tell
trade.
him,
Let's get to
no,
Kevin
I can
Green,
do
who joins
more
me
than
now.
that.
We've seen the VIX spiking. We're at 21 right now. And actually, I'd just like
Well,
to mention that I got a
where is
note
this?
out just momentarily from John Kosa, a good friend of our network as well, who obviously has the Asprey 6, saying the US stock market's internal health is flashing negative signs across all 6 metrics now. What do you make of the action we're seeing, KG, out there?
Yeah, obviously we have seen a little bit of pressure to the downside for the S&P 500 to start off, but we are off the lows so far.
That
Now,
makes
what
sense.
I am kind of noticing is market breadth is actually
found the
weakening
support.
as we are getting
I was just like,
a
where
little
is
bit of
this
a
at?
bid, and
Just
that's
out
because
of
we are starting to
limbo,
see a
like-
rotation back into those Mag 7 names.
That's how you found
Look
the
at
support
Apple,
right there,
it
yo.
was actually in the green, now it's turning a little bit into the red. Nvidia also was in the green as well, so you are seeing that maybe that concentration trade starting to take effect here, but we still have a long way to go in order to try to recapture some of these losses. Obviously, over the last couple of days, especially when you're looking at overnight trading, there has been
All right, how's
concern
this look
about
on this
liquidity in
thing?
the market just overall. We
I
have
zoomed
seen
it up
that
a
kind
little
of
bit.
coming out of the market that can create a little bit of volatility, which leads the VIX to move to the upside here. You also have the credit default swaps and a lot of the concerns around the AI trade, maybe the valuation taking a toll here to the downside for a lot of these tech names. And then Bitcoin, it lost the 100,000 level. Obviously, that's a liquidity gauge, especially when you're looking at the tech stocks as well. And you are starting to see, obviously, equities kind of moving a little bit lower. This is a key area of support for the S&P 500. Let's see if we're going to be able to hold this. We have seen us bounce off of these levels over the last couple of weeks or so. Are we going to do the same, or are we going to flush to the downside? From a market breadth standpoint, it seems like we are relying on a select few names in order to try to get us out of this hole here today, which is not that great. But maybe we do see this broadening out going into the close as we head into the weekend. I'm not sure how that's going to really end up so far right now, but that is something to be mindful of. Microsoft actually just turned into the green right now as well. So once again, a little bit concentrated, maybe some buy the dip mentality taking place, and it seems like that's been the trend over the last couple of months. And maybe this one is not going to be any different here when it comes to this pullback.
Okay, so perhaps some dip buying going on this morning. I mean, Ives was out with a note certainly suggesting that tech could be an opportunity there as far as the sell-off we've seen in that sector. But as you mentioned, we are seeing pretty much all the sectors in the red this morning, all but utilities, which is just hanging on there just above the line to the upside at the moment. But what you're saying as far as coming off the lows, perhaps speaking to why we've seen the 10-year actually picking up right now, we're at 411. Let's talk about some of the headlines that we're tracking this morning as well, KG. The Trump administration preparing potential tariff exemptions on things like coffee from certain trading partners to address some of the affordability issues. Talk us through what the significance of that is and what it could mean for markets.
Yeah, we are seeing maybe a little bit of an easing when it comes to a lot of these tariffs, especially for the products that we are unable to produce here in the United States. As you kind of talked about, there is some chatter here, especially U.S. Trade Representative Greer talking about potentially easing or providing some exemptions for tariffs for certain countries around products like coffee, cocoa, as well as bananas. Now, this could also expand out to the beef trade as well with Argentina. That has been a sticking point for the administration over the last couple of weeks. And I think that gives you a little bit of a sign here that maybe some of the pricing pressures, some of the inflationary pressures, especially after the election that we saw, might be actually impacting the administration, and you might see a little bit of a reversal. Now, obviously, these are very small wins, but any type of win that you can get on the tariff front could actually be a positive for a lot of these markets, especially when you're looking at the staples companies, the companies like Walmart, Target, those that actually do import these goods, these groceries, if you will. This could actually alleviate some of that pain, and hopefully, the hope is that this is also going to transfer over to the consumers as well, bringing those prices down, hopefully inflation coming in a little bit lower. That would also give the Fed a little bit more confidence that they can cut rates here. Now, obviously, this is going to be a near-term solution. Let's see what the final solution is going to be when it comes to the tariffs overall. We still have the Supreme Court case that's being heard right now, and it does appear that we actually did announce a reduction in tariffs on Switzerland as well. That's something that has been going back and forth over the last couple of months or so, but it seems like there is a resolution there where we are bringing those tariffs down to that 15% minimum benchmark here. So some optimism on the trade front here. Not the major headline for today, but something to keep an eye on.
Okay, and something else
in today's trading here. So we actually had two news items overnight that impacted the energy market as a whole. The first one is the Ukraine strike on Russian assets on the Black Sea.
Yeah,
There
or
was
my
a
capture
port there,
card.
a major port when it comes to oil exports that was actually hit last night. Now this port actually impacts around 2.2 million barrels per day.
Ooh,
When
market's
it comes
gonna
to
bounce.
exports, if you have the equivalent, it's around 2% of the global market supply here. So that's why we were seeing that move to the upside. There was also a pipeline that was impacted as well. They did temporarily shut down that pipeline. There is talks right now that they are going to reopen that pipeline, so that's probably why we saw a little bit of a give back for the advances here. And then we also have this news item that Iran actually did seize a tanker. Now this tanker was carrying basically tanker fuel, if you will. And this is actually something that has not happened in a fairly long time. And maybe this is just a one-off type of situation, but if this is something that actually does create a trend, do we actually start seeing the logistics lines starting to be impacted? And do we actually start seeing a spike in tanker rates, which could actually push prices higher as well? We know the global supply front is still in a glut for the most part. If you're looking at the physical inventory around the globe, and the demand side has been a little bit lackluster, but that's the reason why we are seeing this pop to the upside. Once again, these supply shocks have been short-lived. Maybe they last a week or 2 weeks when it comes to the price advances before the market really starts to price that in, and then we continue to move lower here. Nothing on the demand front has really changed over the last couple of days.
Okay, let's just switch gears to what we're seeing as far as gold. Could you sort of talk us through what we're seeing as far as the price action there? It's coming off quite a bit. It looked like a couple of days ago we were sort of back in arm's length of those record highs, but it seems like it's taking a bit of a breather now, just above that key 4,000 level right now.
Yeah, so the gold trade, the silver trade has still been looked at as a risk-on type of trade in some respects.
All right, y'all,
retail
rejection.
traders. And this morning, as well as yesterday, kind of going into the close, gold and silver dropped dramatically going into the COMEX close yesterday. And you did see a follow-through day today. This just looks like more liquidation taking place. We talked about the lack of liquidity in the market and the fact that a lot of traders and investors are looking to raise capital, and that's also happening in the gold market and the silver market as well.
Man, the market.
Pull back to the downside. We have hit an area of support at that 4,050-ish area. Let's see how we actually resolve this. Once again, kind of going back to the Swiss announcement when it comes to tariffs, gold is actually a part of that. And it seems like a part of that deal requires that the U.S. actually has one main smelter here in the United States in the gold market. Moving those tariffs to the downside could actually reverse a lot of the price action for gold to the upside, because the higher the tariffs, the higher the prices for gold and a lot of these precious metals. So that's another reason from a fundamental standpoint that we are seeing gold actually reverse here a tad bit. But I think it's more looking for capital, looking to raise some cash, rather than maybe some of the other macro factors that have been in place here over the last couple of months.
Yeah, and as we mentioned, also an interesting move in crypto with Bitcoin sub 95 today. It's picked up now, but it's important to highlight Michael Saylor, who's been telling us here at Schwab, looking at 150 by the end of the year. I mean, he's coming out today saying we are buying. So we're going to be watching what he has to say on Monday when he has a further announcement on that. Thanks so much for that, KG. Coming up, more than 80% of the S&P 500 market cap has reported third quarter earnings. We'll dive into the report cards and look ahead to what's coming up next when Morning Trade Live returns here.
Break out. Tesla might run it there. Hey, you guys hear me okay? Mic check 1, 2. Okay. Thank you, man. I've been trying to get that together for a while. I appreciate you. I swear, once I get right, bro, like, I'm gonna look out for everybody. Cole, you need anything? You good, Cole? Come on in, bro. Sorry, I'm moving a little
I'm Nicole
slow.
Pedalides at the New York Stock Exchange. Live interviews, market movers, and real-time coverage right from from the floor.
talking to a lot of
Subscribe
people, so.
now at SchwabNetwork.com.
You gonna call you? Wanna talk to us?
What's up, Carl Nation? It's your number one broker with the best
Hey,
full-service wealth management
cut Skull
skills
out,
in the
and I
biz.
kicked him out the party
Actually, I'm
yesterday.
seeing something from Schwab.
Uh-oh.
Yeah, Schwab lets you invest and trade on your own.
Oh,
And
yeah.
if you want, they can even manage
We got
for
like
you.
3
Not to
rolled up.
mention, Schwab has a team of specialists for taxes, insurance,
I
and
look,
estate
look
planning,
y'all
along with
rejection.
low fees.
See the
We're
scramble.
experiencing technical difficulties.
Carl.
Schwab, a modern approach to wealth management.
No politics, no spin, just the market from open to close and beyond. Streaming 24/7, any screen, anywhere at SchwabNetwork.com.
Might be
We're back
going
on
all
Morning
this
Trade
back.
Live. Applied Materials is lower this morning after the company reported an earnings beat and issued strong guidance. What
Amazon's
may be
on
giving
some
investors pause is a warning about China. The company expecting spending from that market to decline next year due to U.S. export controls and has already flagged a potential $600 million hit in 2026 revenue due to those restrictions. So we are seeing shares in AMAT down about 1.5% in trade today. But here's the winners for you on the session. Yes, there are some bright spots despite the sell-off that we're seeing across the major
Yeah, we're gonna
indexes
have a
today.
Christmas
A couple of names to highlight here. We've got DoorDash higher by about 4.3%. Micron catching a bid there, up by over 3%, which is interesting, obviously, because we've seen some of these memory names actually selling off in recent sessions. GE Vernova up at 3.3%, and Workday is up at 2.6% as we stand. So that's your winners board. Let's take a look at the laggards on the session. And we've got Bristol Myers taking the cake there, down at 4% in trade this morning. We've got Netflix on the back foot as well, down about 3.9%. And the rest are doing, I suppose, in the range of about 3 to 3.5% as well. So that's your losers board on the session for this Friday. Let's get to our first guest for the show, and that is Victor Spetz, head of global desk strategy over at Macquarie Capital. Long time no speak, Victor. It's very nice to have you on the show. So as we continue to look at these earnings, I mean, we've heard from 80 to 90% of the S&P 500 so far. It's telling us that things are holding up. I mean, we've seen a beat rate over 80%. What have your thoughts been as far as what they've said
you know
and
what?
what they've said about the future?
The 30-man looks promising.
Well, thanks very much for inviting me.
Hold up.
Absolutely, it's been a terrific reporting season. If you think of beats to miss ratio, the way we calculate it, it's basically the best in decades. If you go back to earlier part of the year, people were expecting earnings per share growth rates to be maybe 14, 15%. During the turmoil of April and May, those expectations were cut back to 8 or 9. We're coming back again towards 11 or 12%. So the reporting season was very good. The problem, I think, the way the market is seeing, what's going to happen over the next 1 or 2 years? Should we accelerate revenue and earnings per share growth rates? What is going to happen to risk-free rates? What is going to happen to equity risk premia? So that's what the market currently is struggling with. But the reporting season itself was incredibly good. As I said, the best in decades.
Yeah, and I mean, if you told someone that back in April, I mean, they probably would have laughed, as you mentioned, with respect to just the forecasting as to the EPS growth here. Just wanted to focus on big cap tech and what we've heard from some of these names. I mean, they continue to spend, and I suppose you've got to give credit to Wall Street. It's been very patient up until this point, very much taking these companies' word for it. When do you start to think that the street will question the ROI? Because we've already seen signs, we saw it with Meta, of a bit of capex indigestion.
Yes, we're already seeing heart palpitations. In other words, the market is becoming a little bit nervous. Is AI a bubble? Absolutely it is. All general purpose technologies, whether it was internet, whether it was electricity or canals, are bubbles. They all require bubbles. The only question is, what stage of the bubble are we in? And at what point in time would investments start coming down and returns starting to increase? I think we're somewhere around 1998 compared to the dot-com crisis of 2000, 2001. So I don't think we're right on the cusp of a collapse of both investment and values. But we're getting gradually there. So Wall Street still has some degree of confidence. But as I said, as in the late 90s, you can see the first heart palpitations starting to come through.
We certainly are, and perhaps it's going to be a first of perhaps several quarters where, you know, those start to beat moving a little bit faster, maybe. At least that seems to be the view out there. I just want to get your sort of take away from mega cap tech on what we've seen with the rest of the earnings. Obviously, it's going to be a very critical week next week with some of the retailers, and of course, Nvidia will be thrown in the mix there. What are you seeing as far as what we're hearing from these companies about the so-called K-shaped economy and stock market right now?
Well, that's exactly the right description, K-shaped, or you can say the economy is deeply divided. If you remove AI investment, as well as the wealth's impact through equity market and consumption by the top 1 to 10% of the households, U.S. economy would have been stagnating. So what you're seeing today in Europe would have been replicated in the United States. It would have been a stagnant economy with still a relatively high inflation. And so what you're seeing in the announcement period, a dichotomy between consumer-oriented and the business-oriented sectors. Consumer-oriented sectors and the old economy generally have not done as well. If you think of the new economy so far, earnings are up more than 15%. If you think of the old economy, excluding the financials, earnings were only only about 3 or 4%. That's still better than the previous quarters. What it tells you is that at the lower end consumption, you do have problem. So investments outside artificial intelligence is stagnating or declining, and the bottom 50% of the households are starting to retrench.
What do you make of the hyperscalers taking on more debt to fuel these capex and AI ambitions? I mean, as long as the earnings look good, does it, continue to help things chug along, or does this start to become a concern at some point?
At some point, it will be a concern. That's why I keep referring to sort of late 90s versus the .com in early 2000. Because the telecom boom between 1994 and 2002 is broadly equivalent, at least relative to GDP, what we're experiencing right now with artificial investment going on through the economy. And so the question is at what stage it becomes critical. I don't think right now. There are two things to watch. Number one, as you correctly said, increasing leveraging that is starting to happen. Up until now, AI investment was predominantly funded from underlying operational cash flows, but that's no longer possible. The second thing to think about is what I describe as American currency. That's a Japanese term which describes intertwining of companies. They increasingly have sort of very close supplier, vendor, as well as a cross-shareholding relationship. So it's always going to take one company doing not as well, and it could cascade very, very quickly across the entire system. So increase in leverage and increase into interrelationship and cross-shareholdings between various companies, making it much more problematic as we progress through 26 and into 27.
Just painted a very interesting picture, Victor. I mean, leverage with the corporate and the circular financing. It's like everyone's holding their hands. It's going to be a dominoes effect if maybe one falls down, but we have to wait and see. But certainly something to think about. Always appreciate your insights, Victor. Thank you so much for joining us. Victor Schvetz, Head of Global Desk Strategy at Macquarie Capital. Coming up, we'll get a closer look at the big picture with the team from Charles Schwab. Morning Trade Live. We'll be right back.
I'll do it on YouTube. I can put that up first. Yeah, that's the best thing.
I'm Diane King Hall on the floor of the New York Stock Exchange. When markets react, we are live with analysis that matters. Watch now only on SheldronFrost.com.
You know what I'm saying? When people drive me around and stuff, I gotta be able to have my music.
How's it going? First
locked in on this.
Sometimes,
Next. Try it again.
you could have done better.
Please.
Same goes for where you invest. Level up and invest smarter with Schwab.
Whether you're a bull or a bear, you'll want to catch the latest market action on Morning Movers with me, Diane King Hall, live from the floor of the New York Stock Exchange, only on Schwab Network.
Trading at Schwab is powered by Ameritrade, giving you even more specialized trading support. Connect with the Schwab Trade Desk, our team of passionate traders ready to tackle your trading questions, no matter how complex. Plus, get 24/7 live help and access support by phone, email, and in-platform chat. With Schwab,
Who
right
is?
into the close.
I'm trying to get
Here
you
on the
paid too,
floor,
though.
I bring you real-time sentiment from traders driving the action.
And in Chicago,
Yeah,
we break
but
down the data, technicals, and
I have,
trades you need
bro.
to see
I
before
need it
the
on
bell
YouTube,
rings.
bro.
Live coverage of the close every single day. This
Yes,
is
I am, bro.
Market
I'm
on
trying to get both
Close,
of them, bro.
live weekdays 3 p.m. Eastern, only on Schwab Network.
I mean, you got it. Listen, like, the more viewers, the
We're back on Morning Trade Live. Home Depot is lower today after being downgraded to hold from buy
I
at
need a lot of watch
Stifel.
hours.
They say that Home Depot improvement
That's
space
one of
is
the things
at
that I've been
best
struggling
stagnant
with.
and
People don't
potentially
know about me or my
deteriorating, and
videos
says
on
the
my
near-term setup is
So I'm
too
about to make some
challenging. Home
better
Depot is set
content.
to report earnings on Tuesday.
Helping a lot of
Right
motherfuckers
now,
trying to
shares
get
down
to,
around
like,
1%
you know,
in trade. Welcome
help
back to
people with
Morning Trade
everything.
Live. It's time now for the big picture.
I'm about to
Let's
just start
welcome in
making
Colin
some
Martin,
portions
head of
too,
fixed income
honestly.
research and strategy, Schwab Center for Financial Research. So
But
we're seeing a bit of a sell-off here and
it has
a
to be
few
free
moving
all the
parts.
time.
I'm just looking at the latest Fed
Me,
commentary actually
honestly.
coming out of
But if
Jeffrey
it's free all
Schmidt,
the
which
time
has
on
been
YouTube, it's
an
gonna
interesting
be
dot
more. It's
there,
gonna be more.
particularly with regards to not agreeing with the rate cut
I
that
mean,
we saw the previous
I really want
month, and
y'all
then
in
once
both,
again
but
saying that he's unsure
yeah, you know what I mean.
that
So
we
that's
should be
what I'm
bringing
saying.
this
I
down
just gotta
even
be
further,
more
citing persistent inflation
get
concerns.
towards
What are you
3,000
making of
watch
all
hours.
this
I gotta
Fed
get
speak?
all the
Because
watch
we've also
hours
had
up.
Kashkari saying that he doesn't support a cut, but
Which
really on
ain't
the
that
fence
much.
now.
I'm
What does
trying,
this
you
mean?
know what I mean?
Well,
The
it means
more
a lot
people
of
I can
uncertainty going
connect with,
forward,
a
but
lot
it
of
means
people
that there
not doing
clearly
nothing to get
isn't
here.
a consensus
The
view
watch hours
about
flying
what,
up.
what the next step from the Fed is. It's an interesting point with Schmidt. He was the lone dissent at the October meeting,
So that's why I'm
which I
not
think
flying
caught
through
some
these
people
stocks
off
at this
guard.
exact
But what we've
moment
seen
because
since then, it's been over 2 weeks now, we've seen a number of Fed
everything is
officials,
straight. I'm connected now. Now I just need
voters
to
and non-voters alike, talk about the need for a more patient approach right now and a patient approach into 2026. So it's going to be really interesting over the next few months and quarters as we get the rotation of Fed voters. You know, Schmidt,
I hit Roosevelt. I was finna give us
less certain about what he's going to do in December. Maybe there's no need for a cut, but he only has one more vote this year, and then he's off the rotation. So that's going to be very interesting, along with potential new Fed governors
That dude alone
as we
is
look
clear.
into
I gotta make
2026.
some money.
I think
Like,
what we can expect, though, are
learn to
more
take a
dissents
loss.
going
Like
forward.
sometimes you take a loss in the market.
Lately, usually it's been one or two when we do
She
get dissents.
could
We
be
haven't
one.
gotten many meetings where there's been 3 dissents, but clearly there's a wide range of views on the committee right now. I think it's going to be really difficult
I gotta
for
get Cole out
Chair
of here.
Powell and whoever the chair is as we go into next year to build that consensus. So I think so I think we might start to see more dissents. And that just might result in more treasury market volatility because it shows the actual outlook and
Did you on my
trajectory
team or
of
not my
uncertainty.
team? What's going on?
Okay, and
I don't know
just
what
very
you're talking
quickly,
about.
I mean,
What
what does
about
it
yesterday?
mean then
Today is a
for
present.
the rates market?
I don't
mean,
care
fixed
about what
income
happened
because
yesterday.
you
We
know,
going on what we doing
the
today. We're
market
gonna make
seemed
the
to be
most out
now
of today.
pricing in. At least it was the case yesterday of less than a 50%
that
chance.
bullshit.
So we're not even talking about
Talking
coin
about,
toss
I don't even know
anymore.
what she
It's
was
less
talking
than
about, so
that.
unless you don't
So
know
where
what I
do you
was
see
talking
things
about.
going from here?
You know
Yeah,
what I'm
well,
talking about? I don't even know what she
if
was
they
talking
don't
about.
cut in December, and
She don't even know what
the
we were
bar's
talking about
pretty
because she don't know
high,
what she was
because we
talking
think the economy is doing pretty well right now. We don't see a need for them to cut. And given what we've heard from officials, it seems like that
Amazon's looking
likelihood might
promising.
continue to come down. Now that we still have 3 or 4 weeks before that meeting, we're going to get a lot of data, albeit a little bit choppy and maybe not as comprehensive as we'd like once we start to get that government data. But we still have time to really kind of
Look at
frame
this
out
God
what
candle
to
on
expect.
Microsoft.
But I think what it could mean if they don't cut in December, and then maybe we get the idea that it could be a more extended pause than what the markets are expecting, that would lead to some upside surprises for Treasury yields, especially short term. You know, the markets are forward looking. They've kind of already adjusted lower in anticipation of those rate cuts. If it seems like this is going to be an extended pause, then maybe we see short and intermediate term yields rise a little bit to kind of readjust to that outlook.
Okay, good to know. I do want to just switch gears to sort of credit markets and the conversation that has been emerging this week, particularly about these hyperscalers taking on more debt. I mean, there's been a lot of conversations using Oracle as an example around their CDs, that spread surging. Investors appear to see a higher debt risk, or at least credit risk, I should say, in big cat tech right now. What are you seeing on that front as far as some of the spreads when you look across, corporate debt and credit risk right now?
Sure. Well, if we look at it from a big picture, so I'll talk about the tech and hyperscalers. From a big picture standpoint, the markets were generally priced for perfection. Spreads were very, very low, without much room to move lower. So in terms of what your expected excess return paid. Considering investment grade or high yield corporates, it was relatively capped. But that means if things kind of took a turn for the worse, there's more downside there. And that's been a reason for a little bit more of our cautious outlook there, just to kind of manage expectations. I think the risk with some of the tech issuers right now is to make sure that these, the scale we're seeing and all this debt issuance to continue growing, building out, including all the data centers, is what does this mean for profits and cash flows over the short term? Will this actually result in stronger cash flows to be able to service that burden in the next few months and quarters? And I think that's somewhat of a risk right now. Kind of adding that together, even though there are risks out there, and even though we think the markets are priced for perfection and maybe a little bit of a cautious outlook, we're not worried that we're going to suddenly start to see a huge uptick in defaults or something that will be systemic to the financial markets, because I think it's going to be concentrated in very low-rated issuers, in triple C rated issuers or below, who tend to have very low interest coverage ratios to begin with. When you mention companies like Oracle, you think about companies with high credit ratings, we think that's less of a concern.
Always appreciate it, Colin Martin. Thank you so much. Happy Friday. Have a great weekend. Ahead of fixed income research strategy there from Schwab Center for Financial Research. Coming up, it is time for the morning trade, and we'll take a look at NVIDIA. Analysts are raising their price targets ahead of next week's earnings report, and we'll dive into the latest moves and bring you an example trade for that name when we come back.
Trading at Schwab is powered by Ameritrade, giving traders even more ways to sharpen their skills with tailored education. Get an expanding library filled with new online videos, webcasts, articles, courses, and more. All crafted just for traders. And with guided learning paths, stacked with content curated to fit your unique goals, you can spend less time searching and more time learning. Trade brilliantly with Schwab.
Schwab Network delivers real-time market insights, live from the NYSE, NASDAQ, the SIBO, and beyond. From earnings to economic data, we cover what matters as it happens. Streaming 24/7, anytime, anywhere, free on SchwabNetwork.com.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. Are you a long-term investor? Our investing webcast series breaks down different investing styles, including growth, value, income, and more. Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest.
Oh, look at that.
Tune in live or on demand. Head over to schwab.com/coaching and start learning today.
From the most iconic trading floor in the world, this is Opening Bell with Nicole Petalides, live on the floor of the New York Stock Exchange. The countdown, the setups, the stories that make markets move. Minute-by-minute breakdown of the biggest headlines, earnings, global movers, just the trades that matter. As the bell hits and the markets react in real time, Opening Bell, live at the
Oh, look at the market shop bounce,
right
bro.
when it counts.
We're back on Morning Trade Live. Let's focus on NVIDIA. The company's earnings report on Wednesday and is likely to be the biggest market catalyst on the schedule next week. Analysts are expecting adjusted EPS of $1.24 on revenue of nearly $55 billion for the third quarter. Shares are up more than 35% this year, but have pulled back to start November. We are up in trade today just by about 0.25%, so that is the focus of the morning trade. Joining us now for a closer look at this name is Schwab Network host Marley Caden. Very good morning to you, Marley. Happy Friday. So NVIDIA is going to be one of the biggest catalysts, no doubt, for the market next week when it reports earnings, and you and I will be there breaking down the numbers. But ahead of that, we've seen some price target boosts. Talk us through what the analysts are saying here.
Yeah, and the analysts are still very bullish. Despite that pullback you mentioned, we have seen NVIDIA under some pressure of late, but we are seeing some really bullish calls here from the analyst community. So Wells Fargo raising their price target today up to $265 from $220. Right now they're trading at $187.21. They're keeping that overweight rating on shares as well. They're saying that they see the third quarter and fourth quarter of 26 both guiding upside. They think that they'll come in better than expected. They're also increasing their estimates. Those increased estimates are the reason for the price target change. They also think that there will be a consistent 2027 30 times PE multiple, given NVIDIA's strong growth and what they call its best-in-class positioning for continued data center and AI investments. And no argument there. I think pretty much across the board, everyone acknowledges NVIDIA is the leader. Morgan Stanley also raising their price target. They're up to 220 from 210, keeping an overweight rating. The firm says that their industry checks are showing that material acceleration and the strongest results that they've seen in the last few quarters in terms of its Blackwell ramp up. So they're raising their estimates above Street View, and it says that they still believe that they're conservative despite raising them above Street View. They said that Blackwell remains the AI chip of choice and that Vera Rubin demand signals are very strong. And they also believe that NVIDIA shares have underperformed their AI peers, but that should reverse. And that's not the first time that we've heard that sentiment echoed here on the network. And then our last one is Oppenheimer. This came in yesterday. Now, they raised their price target up to $265 from $225. They also maintain their outperform rating ahead of results. They see that same upside consensus to Q3 sales. They're expecting EPS of $1.25 on revenue of $54.7 billion. Q4, they're expecting that to rise to $61.5 billion. EPS of $1.42. They're saying that's led by the GB300 Ultra. They're also saying that these hyperscalers continue to upside their CapEx, reflecting
Look at that volume, y'all.
AI appetite. They're viewing that as
Boom.
a positive, not as an AI bubble signal. And adding that their backlog is growing. So a lot of really strong fundamentals here, a lot of potential growth drivers cited in these reports. And it is important to note, even though NVIDIA has pulled back recently, they're still up more than 35% this year. And in the last their stock price has doubled in 4 of the last 5 years. So, I mean, just exponential growth when you're looking at their chart, which, like you mentioned, comes to the point that if there's any miss at all here or anything super positive, we are going to see the market move along with NVIDIA no matter which direction it goes.
Yeah, and there's a really interesting Wall Street Journal piece out this morning talking about how obviously NVIDIA has really wanted access to the Chinese market, but then you've got now Amazon and Microsoft going, hold on a second, not so fast, which is a bit of a sort of rare divergence we're seeing between what are two big NVIDIA customers. But even with this and sans China, the analysts remain bullish. So I suppose that's going to be an interesting theme playing out as well. Thank you so much for that, Marley. I'll catch you a bit later on. Let's trade it now with Dan Deming, managing partner at KKM Financial. How are you approaching your example trade for this big one, the Super Bowl of earnings, as they like to call it, come next week?
Yeah. Hey, Sam. I think that you're seeing the selling pressure is creating an opportunity here for some potential move back towards the recent highs. So I think that, looking at the way the implied vols are structured going into this announcement next Wednesday, it does create an opportunity to position for an upside move and do it in a way to lower the exposure from the get-go by buying a call 1x2. I'm looking at the December call 1x2, the 185-200 call 1x2. And that you can do that for actually a small credit here, and it gives you a capture range higher than where we were trading in the end of October. So the break-even is 215 on this to the upside. So it gives you a range to capture to the upside here if we see some higher price action in the stock, particularly after earnings. Now, this is one way to capture that. Now, we do have some risk above 215, then you start to lose money on this trade, but there's still a pretty big capture zone to get us back towards those highs and even above those highs before this becomes a problem trade on the upside.
Well, I mean, tech bull Dan Ives did say that perhaps this tech sell-off would be a buying opportunity. We're already seeing, I suppose, some dip buying this morning. We're off the lows. We're seeing companies like NVIDIA, as you mentioned, Microsoft, also Apple, just fractionally higher today. We've had some nice numbers for Apple as far as China sales are concerned. What do you make of the action we're seeing out here for this Friday?
Yeah, it's very different than the last couple of days, Sam. And what I mean by that, you pointed out, you are seeing some dip buying going on, like the other couple of sessions where we saw the selling pressure really accentuate as we move through the session, and some of those high flyers really getting sold where defensive names were being bought. That is not necessarily the case today. We're seeing, the selling pressure early in the morning. Now we're seeing some buying pressure, and you're seeing those stocks that have been beaten down the last 3 days finding some higher price action while the defensive stocks are being sold. So a different dynamic today. It'll be interesting to see if we're able to get back to unchanged by the end of the day.
Watching, we've got 67.29
today seeing early market action. Tech, options corner, futures focus, technical analysis, morning movers covers it all. Grab your coffee and tune in every trading day at 8 a.m. Eastern, only on Schwab Network. Stay connected to what moves the market. Download the Schwab Network app and stream anytime wherever you are.
Live from Chicago, this is Trading 360. I'm Marley Caden. We track macro forces, market trends, and company news that shape investor decisions, all with expert analysis and actionable context. From inflation data to sector rotations, earnings to policy, it's a comprehensive view of the market every trading day. Trading 360, in-depth market coverage straight from Chicago. Weekdays at 11 a.m. Eastern on Schwab Network.
Welcome back to Morning Trade Live. I'm Sam Bartis, coming to you live from the floor of the New York Stock Exchange. It's time now to take a look at the sectors that are moving markets this morning, and Alex Coffey joins me to do just that. So we are off the session's lows now. We're seeing a little bit of a rebound in tech this morning. Talk us through what you're seeing today, Alex. Happy Friday.
Yeah, happy Friday, Sam. I would say the cavalry have arrived. Dip buyers really taking control of the market here. 4 of the sectors are higher. Obviously, the market's still lower. 30% of the S&P 500 is all that's higher on the session. But if you compare where we were just an hour ago, this is a significant improvement. For context, before we came on, and when I was on the panel earlier before, I was actually looking at the NASDAQ 100 market breadth, and only 10% of the NASDAQ names were higher, so 10 of them. Well, now that is 32, so closer to a third. In the S&Ps, we were just below, near 20% of the names were higher. Now it's closer to 30%. And so when you look at the S&P 500 intraday, I wouldn't be surprised if we see a green print, within the next half an hour possibly if this continues. We oftentimes talk about the Magnificent Seven. At one point today, all 7 of the names were lower. It's 3 of the names are higher now, but most importantly, it's NVIDIA, it's Microsoft, it's Apple, and that's enough to actually make the indexed version of the Magnificent Seven higher on the session. So the day has brightened substantially. Volumes are heavy. If you have a watch list, it's flashing with some pace today, and it just indicates that it's a very, very heavy volume day so far.
Okay, yeah, so we are certainly seeing some of these sectors turning around now. Energy as well, utilities are catching a bit. Just talk us through some of the sectoral breakdown that you're seeing off the back of what has been a big day of rotation, particularly into healthcare, which is losing a bit of steam this morning.
Yeah, Sam, when you see it, it's all about context today, right? Because you're still going to see a lot of red on the screen, but it's substantially less than it was just an hour ago. So, watch as this day develops and watch as things go from red to green. That's going to be your indication. So you started to see that in the performance of the percentage of names that were higher. You started to see it happen within the sectors. So right now, only energy, utilities, and IT are higher, but you have industrials about to turn green. You have real estate on the verge of turning green. So today is about pairing losses, and if you can, getting over that unchanged line.
Yeah, good sector breakdown for us, Alex Coffey, and a good look at the Mac 7 as well. Thank you so much, as always. I appreciate your time. Let's widen our scope now and take a look at global markets. The session was not pretty out in Asia overnight. Stocks mostly selling off, tracking the tech wreck we saw on Wall Street yesterday, and amid these reduced rate cut bets now. The South Korean coffee feeling the brunt of it, falling at 3.8%. Tech giant Samsung down more than 3%. NVIDIA memory supplier SK Hynix sinking below 6%. Over in Japan, the Nikkei losing 1.8%. SoftBank tanking 9%, extending losses after selling its stake in NVIDIA, which it revealed earlier this week. Not helping things in the Asian session, downbeat China data. Economic activity indicators slowing across the board, raising concerns about whether the momentum there is fading. October retail sales, which is a key barometer of the health of the Chinese consumer, softening from September despite the national holiday. Industrial output consistent with what we saw in exports, which contracted, remember, growing at the slowest pace in over a year as factories closed for Golden Week. Fixed asset investment, a bigger worry, slumping to the lowest level since 2020 during the onset of COVID-19 as property investment continued to drag in double digits. Fresh housing data also pointing to continued downward pressure in the economy. New home prices falling the most since October. as this leads stimulus in the world's second biggest economy, the thinking here is that there's not a lot of urgency right now, as China is on track to meet its 5% GDP target thanks to a strong start to the year and front-loading of those exports. But fiscal policy is expected to be more supportive moving into early next year. Coming up, it's time for Inside Out, and we'll take a closer look at Alibaba, speaking of China, and other Chinese retail names ahead, and bring you an example trade when Morning Trade Live comes back.
Hey, investors, you know the market moves. Schwab is here to help you move with it. So, whether you're buying, selling, holding, or planning, whether you're ETFing or 401k, saving, spending, or even retiring, you can count on Schwab for market insights, live support, powerful trading platforms, and 400 branches, all at your service, all so you can invest your way. Sounds nice, right?
I'm Alex Coffey.
And I'm Jenny Horn. This is Next Gen Investing, where we track the trends shaping tomorrow's market.
From tech to energy, crypto to consumers, we focus on what's driving investor sentiment right now.
Clear analysis and forward-looking market coverage every trading day.
This is a make-or-break level for this stock.
And that could certainly be a short to near-term catalyst.
Next Gen Investing, 1 p.m. Eastern.
Only on Schwab Network.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. Are you a long-term investor? Our investing webcast series breaks down different investing styles, including growth, value, income, and more. Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or on demand. Head over to schwab.com/coaching and start learning today.
On which one to get.
Not to worry. I'm here to help you decide. Follow me.
I really am stuck. Coming.
Real-time access, data-driven analysis, from U.S. equities to global macro matters. Schwab Network connects the dots. Watch live, subscribe free at schwabnetwork.com.
It's the one you're looking for if you want the most powerful iPhone, maxed out
Welcome
with the
to
most
Schwab
features.
Network, where real-time market coverage.
I am too, but I'm also running a business. But there's something else you can want.
We've got you covered.
You really just be coming here to like.
Get inside the
Oh,
minds
man,
of
like-
traders.
My point is that they're getting a higher rate of change in sales based on their guidance, but not the same rate of change on EPS.
Follow the biggest headlines, live analysis, breaking news, and sharp trade ideas minute by minute.
With shows built for action, we break it all down in real time with speed, accuracy, and precision.
I think one of the most
I'm
important
on two
things
different
is you're
phones
making a
because
play
the
in a
market
risk
bullish as hell.
defined
You don't
way
see
here
price
on your
action.
earnings.
Look, market bouncing hill right off the support. Break it. Like, look at this bounce. What are you even doing right now? Playing the game.
And trusted financial journalists streaming live and on demand.
Yeah, blow gas and get this money. Like, look at the market breaking out. Trying to touch this resistance and break out. Look at this. It's on bullish action right now. What are you even talking about?
We are back on Morning Trade Live.
So,
We've got a
you sound like you blow gas all day and do
China
nothing.
e-commerce this week with JD.com and Tencent reporting earnings yesterday.
Hey, come in here and get this easy money in. What are you working for?
China Internet ETF is up more than 30% this year and hit a
Yeah, I know, right? You working for your money, and I need some help. You ain't even supporting me. I don't even know why you out.
Thanks so much for your time, Brendan. So nice.
Oh! You see me out here? I have no mic. I need that type of support. I had to. I had to expect. I had to start flexing my power and doing some moves to get my shit now.
Yeah, thanks. Great to reconnect, Sam. Good to see you.
No, I was talking to you. I ain't talking about you. I'm talking to you.
I think yeah, the data, the economic data in China has been not too hot, not too bad.
I'm getting more viewers as you leaving. As Siggers is leaving.
You still
He
see
was my friend. Look.
That's what the financial results from Tencent.
Hey,
JD,
look, I'm heard. Listen, I have a service to help you, my man.
Earlier this week.
If you don't want to take advantage, that's on you. I asked you why you heard. You can't give me a reason.
Right. I think overnight we had this real
whose party is this?
US
Whose party is this?
AI
Whose crazy.
valuation-induced sell-off.
Me neither.
Really, growth stocks globally were just kind of hammered, particularly the semiconductor stock in Japan.
Yeah, we got him up out of there,
So it's a
chat.
little bit
I don't even know what he was talking about.
big
And he left
picture,
the.
China's
He
doing
one time, but
okay,
he
but
leaving
some
the
of the
stream. He
companies
left the party.
geared to China's
He got him
economy
up out of there.
are finding opportunities.
Yeah, they certainly are. And I mean, as you
He
say,
gonna come back
Tencent,
though. Watch this.
Jingdong,
He probably
JD.com,
gonna cuss
not
us out.
looking too
But
bad.
oh,
Even
watch
if
out,
there
y'all.
was
You
a
know we
little
had
bit
a.
of margin
You gotta see
pressure
how
there,
they
it does look
how
like
they
the
test him on this
investments like JD
resistance.
is making into perhaps some of the food delivery wars is paying off for them. Tencent is now getting into this 3D
Gonna add all
images,
that out,
new
though, y'all.
world frontier of artificial intelligence. I don't even think we've got past this frontier to get to the next one. But
Yeah,
I'll leave it
man.
there.
On my journey to get my babies, bro, it's been rough, y'all. I'm telling y'all. But we're gonna get them kids. We run the business. We're gonna get them kids.
One next, and this has been a big one because it's up like 90% year to date. It's really been a favorite this
We're gonna
year,
get them there. We're gonna
particularly as a
turn
sort of more
wheels.
inexpensive way to play the whole
print.
AI theme.
Constantly.
Talk us through what you're watching as far as the metrics, because
Every
my
single day we're gonna
understanding,
print.
it's really been the core business. It's been getting back to what it's good at,
All right, y'all.
e-commerce, and also when it
All right,
comes
good
to
morning,
the
Cole.
cloud. As far as those revenues, they've been holding
Good morning,
up.
Cole. Come here and get this money, man.
Yeah, the core e-commerce business.
I
has
heard
been
you say
challenged
that, but come here.
because of very light domestic
Come here,
consumption
come here,
in
get
China. I think there's going to be increased
Come here and
policy
get this
support.
money,
You know,
bro.
we've got the draft of the 15th five-year plan, which really
I told you to come here and get this money,
emphasizes
bro.
raising domestic consumption. At the same time, the actual e-commerce.
Bro, they put some money on her and make some real money. That's on you. You ain't making no pennies. Put some real money on her. What are you talking about? What did you talking about? Put some money on her that you got, that you talking about, and make some money on her.
More than 20% growth in
No,
cloud. So I think
no, you do what you do.
Focused on the
No,
cloud
bro, this is what everybody doing,
some
bro.
of the
This is what everybody should be doing,
based
bro.
on the tepid top
Come on,
line
bro. You,
growth due to
no, bro. You ain't doing code right, bro. You ain't, yeah, bro. That ain't working for you. You still working.
You know, what people do see as more of an
Bro,
inexpensive
bro,
way to play the whole
bro,
AI theme.
slow down. Let me push you up on some game for a second. What you talking about? What you talking about? You can do that 5x though. Why would you want to do that and be one dimensional when you can be fucking 720 and know more shit and have more money? What are you talking about?
Sort of validation of robotics, humanoids, etc. I'm just wondering what you're seeing as far as that company, as to how much credence we should give to the story.
Then find all the flaws and tell me, and we'll go through them together. If I sound like a pyramid scheme, come prove me wrong.
I think you know, CraneShares is known because of
the market breaking out, y'all. Bullish.
Alibaba's IPO really helped push.
Bro, look at the market right now. You don't see this fucking bounce?
Is going to put our COID ETF. So we launched a global humanoid robotics ETF.
All right, I will.
And I think this Unitree, the largest
I'll show everybody. I'll show you
company, they're making.
I'm about to show you as our print today.
In China today, Unitree, they're going to go public. Very
I'll
likely
show you what I'm doing
December.
today.
It's going to be a massive IPO.
And what's in there too. I'm gonna show you all my
very similar. You know, I think the
those you
automotive
want to see?
companies,
Got
as
you.
well as a lot of the
So
OEMs
right now,
globally don't
networking,
realize
and I'm
that
making this money.
they're actually going to become robotics companies.
So are you trying to make some
Elon
money?
Musk has spoken to that. You know, there's actually talk of is Tesla even going to be making cars in 5 years? Is it solely going to be producing Optimus? XPeng, the big Chinese EV automaker, very similar visionary CEO founder who believes that the company is going to really morph into a humanoid robotics company. And there's a whole host of players that we think are going to be beneficiaries of this trend. And it really is driven by AI. It's kind of interesting to me, Sam, that as much as people talk about AI, they're not talking. It's not connected to humanoid robotics, but that's something that's coming. And I think
I know how I read a chart though. I know how I trade. I know how I invest.
Yeah, I mean, Coy is a good friend of our network here at Schwab. I mean, he was here with me on set.
Yeah,
so,
we got
we go way back, and we always welcome Coy onto the set as well. Brendan Ahern, always a pleasure. Thank you so much for joining me here today. Happy Friday. Have a great weekend. Chief Investment Officer over at CraneShares. Let's trade it now with Tom White.
We just don't need a minute.
So we mentioned Alibaba out with
This ain't
earnings
the
in
hangout
coming weeks.
spot.
What's your example trade and
We
approach
ain't here
for
to
this
make money. We don't need none of that.
Well, it's had a good run. Chinese stocks have, Appaloosa just came out. It's their top holding. David Tepper's Appaloosa and some other hedge funds.
You know what you want
since the start of the year. So that's
I don't want to work all day.
Stocks up 87, 88%.
Everybody become millionaires.
About
I'm about to
16,
become
17% from those
myself.
recent 4-year highs that we saw. last month, but still a lot of momentum to the upside.
You can work
They
if
have
you want
earnings
to.
on the
Go ahead
25th,
and work,
so that's going
That's
to
how you
be
gonna
maybe
get
a
the money to
potential
get into the
catalyst,
market so you
but
can
also
invest.
higher implied volatility in that November 28th weekly option series. So that's the one I looked at.
But if you're around me,
Going out about 14 days till expiration, you're going to capture that earnings event, so implied volatility levels are higher. So I looked at a neutral to bullish short put vertical that takes advantage of upside exposure, but then if the stock doesn't do anything, or maybe even the stock pulls back, I can still profit on this type of strategy. So in that November 28th weekly options, sell the 150 strike put out of the money to the downside by about 10, 11 bucks, and then buy the 140 strike put. So a short $10 wide neutral to bullish put vertical. Collecting roughly, I've got 225 credit on here. That's where it was trading before the market reversed, and now we're higher. So probably trading about $1.70 right now. But the credit you collect is what you can make on this particular trade. So if you collect 225 bucks with $775 in risk. A little bit more risk versus reward if you collect only $1.70. But that break even on this one of 147.75 over the next 2 weeks, that's about 8% below the current share price in there. So you got that big cushion to the downside. The probability of that short 150 strike being out of the money at expiration, which is what you want the stock to remain above 150. That's about 70% probability. So probabilities in your favor, higher implied volatilities due to earnings. You just need the stock to remain above basically about that 148 level.
Up 1% today, up 90% year to date for Barber. Going to be reporting earnings at November 25th. That is Tuesday before the US Open. Thank you so much for joining us on that, Tom White, as always. And we are looking at a bit of a dip buying situation here for the markets this morning. We've actually seen stocks turning into the green in some sectors. Thanks for joining us here on Morning Trade Live. I'm Sam Vardis. Download the Schwab Network app, available in the Apple App Store, and tune in 24/7 on schwabnetwork.com. Trading 360 with Marley Caden is coming up next.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. The Platforms and Tools webcasts are designed to help you broaden your knowledge of platform features and resources available from Schwab. You'll learn tips and tricks to help navigate Schwab.com, Thinkorswim, and mobile-based platforms. Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or watch on demand. Head over to schwab.com/coaching and start learning today.
Welcome to Schwab Network, where real-time market coverage meets expert strategy.
From the opening bell to the closing bell, we've got you covered.
Get inside the minds of pro traders.
My point is that they're getting a higher rate of change in sales based on their guidance, but not the same rate of change on EPS.
Follow the biggest headlines, live analysis,
teach
breaking news,
everything
and sharp trade ideas
teach everything I
minute
know?
by minute.
With shows built for action, we break it all down in real time with speed, accuracy, and precision.
I think one of the most important things is you're making a play in a risk-defined way here going into earnings.
So that would be a further downside area to watch.
Smart insights, actionable data, veteran traders, and trusted
I
financial
can see
journalists streaming live
everybody a little bit of something, bro.
Schwab Network,
Now,
streaming
on the top,
24/7.
everybody can teach somebody a
anywhere,
little something.
free. SchwabNetwork.com.
You can have more money than me.
Return track, skin, Hayley, cosplay, Tristana, and Matt. Okay, this is
Well, that's still gonna be nice. Yeah, you talking about the wrong stuff again, bro. You gotta stay on topic. You either gotta be productive in here, or you know what I'm saying? Like, we're here to try to solve problems, not create them. Yeah, but I still mess with Joe. You know what? I supported Joe all last not yesterday. He streamed, and I said his stream the whole time. While he won't sit in my stream, I said in his. While he won't talk to me, I still support him. I get inspiration from Joe. Huh? No, I'm dead serious. I swear to God, bro. I'm watching. Bro, listen, bro. I'm really about to kick you out and lock the party up, bro. I swear to God, I'm not dealing with this today, bro. All right, bro. All right, bro. All right, bro. You right, bro. You have a nice day, though, bro. You have a nice day, bro. We running a business, bro. I'm literally live talking to you on my live stream, bro. Get the fuck out of my party, please. All right, bye, bye. I don't care where you at. I'm still live. Get the heck out of here. My party's got to become private. It's weird. I don't even know how you people keep getting in there. No freeze.
Good morning. We're 90 minutes into the trading day, and welcome to Trading 360. I'm Marley Caden, coming to you live from our Chicago headquarters. Here's what we have in store for you on today's show. In our 360 Spotlight, we'll take a look at the state of the economy and the consumer as we head into the all-important holiday shopping season and see how the lack of economic data could impact the Fed's rate decision next month. Then for our disruptor today, we'll talk about Apple after sales for the iPhone rose 20% in China. George Tillis will join us to break down more and also give us an example trade. And then in our 360 round, we're going to talk Applied Materials shares under pressure following their earnings in what seemed to be a strong report and upbeat guidance. We'll get the details later in the show. But first, let's check in with the markets. We are seeing a bit of a reversal this morning. The S&P now trading above the unchanged line at 67.40. The Nasdaq trading about 0.25% higher at 25,053. The Dow still under pressure this morning, down 0.6% at 47,157, and the Russell 2000 trading up 0.1% right now at 2385.67. Checking in with the 10-year and some of the moves that we're seeing in cryptocurrency and gold here. Let's see how they're shaping up today. The 10-year higher up 0.25% at 412 right now. The dollar trading higher as well, 99.22. Gold is down almost 2.5% at 4,094. Crude oil up more than 2.5% above the $60 a barrel mark, 60.23 right now. And Bitcoin under some major pressure, still down 1.25%, trading at 96,895. Those are levels as low as we haven't seen since the summertime for Bitcoin, below that 100,000 threshold. I do want to bring in our first guest, though, of course, Alex Coffey, co-host of Next Gen Investing and our senior equities contributor here on Schwab Network, to talk about some big news coming across this morning, that Walmart CEO Doug McMillon is unexpectedly retiring.
Yes, and this marks the end of an era, a well-beloved CEO by investors. As you mentioned, Walmart Chief Executive Doug McMillon set to retire in February. He'll be replaced by U.S. head John Furner, who's long been seen as the heir apparent. More the timing, I think, was the surprise here. It did send Walmart shares lower, but they since rallied about 2% off those lows alongside the overall market, down about 1.5% here in real time. John Furner takes over Walmart in a really, really critical time. Questions about the trajectory of the economy for one, but really this transition into a world augmented by artificial intelligence, and Walmart's in many ways been on the forefront of some of those innovations and uses. And so fascinating stuff. If you look at the last several years, going back to January 31st of 2014, when Doug McMillon took over, Walmart's up about 13% a year. S&P's up about 12% a year during that time frame. So outperformed the S&P pretty well. Stocks quadrupled under the tenure of McMillon. So most analysts, again, not surprised by who's replacing, and it's not even necessarily a knock on him. It's just more of a maybe surprise in timing, and many are pretty comfortable with it. Telsey Advisors, Joseph Feldman said Walmart lifer, logical choice, and you look at Mizuho, signaling that they're closing the chapter on building out a digital foundation and moving towards accelerating AI innovation. So turning the page, new chapter, exciting times for Walmart.
Yeah, I think the age is sort of the thing that everybody's sort of stuck on, is that he's only 59, John Furner's 51, so sort of an unexpected pivot there in terms of you expect him to be a little bit older when you get these retirement announcements. But as you said, we are recovering now, stock only down about 1%. But interesting you bring up the transformation of Walmart from retail giant to, this tech-heavy, AI, multi-channel heavyweight now. Are the analyst community, are they saying anything about how they see that progressing? Because you mentioned it is sort of a pivotal point for them right now, as we are seeing this AI adoption. They have now this deal with ChatGPT and OpenAI to do their shopping through Walmart. That's going to roll out. Any commentary about that at all?
Well, that's been part of the commentary, I would say. So I don't think this changes that, but I do think the Mizuho, David Bellinger's comments about how this signals that they're now closing the door on that e-commerce build out, trying to be an Amazon competitor, and really going full bore into this AI transition. So we'll see if more echo that, but you see it in their own commentary from Walmart. I mean, they've been talking about since last July how AI helps with cataloging and it brings efficiencies. This has long been the area where we thought AI would make an impact, which is automation and efficiency gains, perhaps even downsizing workforces when possible. But Walmart's talked about how it's helped them keep their headcount steady at about 2 million. It's one of the world's biggest employers. It's the biggest merchant or place for commerce in the world. So fascinating times. And to your point, Doug McMillon, a little bit young maybe, but he's been there since he's been in his teens. Walmart lifer himself, so maybe just ready to sail off to the sunset.
Certainly, you've quadrupled the stock price. I think it was $25 when he took over in 2014. It's almost 102 right now. So job well done. Congratulations to him on his retirement. Alex, thanks for breaking that down for us. That's Alex Coffey, our senior equities contributor here on Schwab Network. I do want to welcome in our next guest this morning. Joining us, Ted Thatcher, president of Bright Lake Wealth Management. Ted, thanks for joining us on this Friday morning. I'd love to get your thought. We are seeing a bit of a reversal in the markets after what has been a very choppy week, despite getting this government shutdown that everybody has been waiting for.
Yeah, Marley, it's great to be with you. It is choppy. I mean, the truth is, I think that volatility has almost been the name of the game, seems like, all year. And so, obviously, the government shutdown kind of coming to a close, I think is a good thing for Wall Street. Of course, Wall Street hates uncertainty. And it does, give the consumer hopefully some confidence, if for nothing else, the travel season going into the holidays here. But we are seeing the markets, bob around. Yesterday, the markets were down. Today, this morning, looks like they are recovering. But when we look at the macro picture, I think that we have to look at it through two lenses. I think we have to look at the consumer. It used to be the case that when we talked about the economy, that's all we talked about. We talked about just the consumer. But there has been this huge discrepancy the last several years between really what's happening on Wall Street and what's happening on Main Street for the average American consumer.
You mentioned that. So
I'm doing that right
take
now
a look
with
at the
kids.
consumer, and we're in this absence of data that we now know we may never get. We've got sentiment. We know it's at some of the lowest levels, close to the lowest levels recorded, and yet we're still getting results showing from Disney that people are still going to the parks, people are still spending, people are still buying, the airlines saying they're still selling tickets. What is that signaling to you about the consumer and also more broadly about the economy?
It really is a great question, and of course it comes with a whole lot of nuance here. Really, where I see the strength in the consumer really is at the high end of the consumer. If you dive into the retail sales numbers and different things like that, it shows us that the consumer is strong if they have that high income, and it kind of shows this almost class disparity between lower and even middle income households that are struggling, that are getting pinched by inflation and all the cost increases that we've seen. Of course, again, we do see on the high end that the consumer is more durable.
I'm just like, bro.
But my concern also,
I literally came back yesterday.
With what data we're going to get on the labor numbers.
Bro, you keep
we've been missing the data, of course, because of the government shutdown. And so I'm hopeful that we'll get some of it the next several weeks.
But
there's been a trend too on that. It being revised again in many cases.
He said he was going to the gym, bro. Why you keep worrying about what he's at? And what are you doing?
It is expected to come
I said,
on the
bro,
day
I
of
put
the
on
rate
everything,
cut
bro.
decision.
I want to disappear. I
How
gotta stay.
impactful is that? How are decisions even supposed to be made when
sir,
the only data that isn't going to have been disrupted potentially, despite the fact that you mentioned we do get these revisions constantly, where we would have had a month of data collection, will arrive on the day that the decision itself is supposed to be announced?
It's a great question. I mean, I think it puts the Fed in a really hard place, and we've talked about before. The Fed isn't just Jerome Powell, leading the pack anymore because of all the different data points and the different different stories they're telling, the Fed members are each interpreting them differently. And so I would expect, actually, no matter what happens, to probably get a little bit more infighting from the different Fed members. That said, though, at the last Fed meeting, the press released the official statement that they put out. Jerome Powell did underline and highlight one thing specifically that stands out to me. He specifically did say that they are more concerned about the potential downside risks of, the labor market, essentially, the unemployment rate slipping further and further over the inflation data. So unless there are some, I'll say, non-governmental reporting signs that the inflation rate is just getting way out of control all of a sudden, I would expect that Powell would bend more toward that same underwriting that he had mentioned at the last Fed meeting, more focused specifically on the labor side.
So on the labor side, we have gotten some private data. We got ADP coming out saying that, we shed more than 11,000 jobs in October. We will, in theory, if they come out when they're supposed to, calendar still questionable, it should come out December 5th. So we should have at least a jobs report ahead of that Fed meeting. If that remains the focus, and we know that December is a live meeting, what do you anticipate happening there? What do you anticipate that data showing?
They actually fell through this.
It's a great question. I think at the end of the day, because of the trends that we've seen, I expect them to be a little bit more of the gloomy numbers. I don't think we're going to get anything that is, extreme, but we've seen the, jobs markets kind of erode a little bit. And I don't know. I don't know what we would expect other than to see that continue to tick down. Maybe there's a little bit of stabilization that can be sort of, propping things up because, overstaffed typically going into the holiday season to anticipate all the extra sales volume and things. But honestly, I think that trend will continue to deteriorate. And until we see, significant changes or significant data points to the contrary, I think that's what we have to expect. And so if the Fed, is seeing that, that kind of data, I don't know how they're going to make a decision other than to continue to, continue with their lowering strategy here. Before the last Fed meeting, I believe the chance of a 25 basis point cut was sitting at about 90%. Today, it sits at about 75%. And so we do track that probability. And given the large probability that it will occur, that's really what I do expect still at this point.
And so with this uncertainty and the unknown of the data and the unknown of the action in December, where are you looking for opportunities? Where do you see potential opportunities in the market right now?
It's a great question. Ultimately, to kind of look at the Wall Street side of this, regardless of what's going on with the consumer, the Fed policy and their decisions have huge effects on Wall Street. And it's really continued to push the AI trade, I think, the tailwind, if you will, of the lowering discussion from the Fed. And now, of course, investors, I think really highlighted, of course, by all the choppy markets we've seen, are concerned about the AI bubble. We've heard that phrase cited I don't know how many times. And, fair enough, you've seen really historic investors, Michael Burry very notably this week, announcing these, large put positions on Palantir and NVIDIA. And it's hard to look at, a Palantir and see it trading at the multiples that it's trading at and be like, okay, well, it seems pretty reasonable that we might be out over our skis a little bit there. That said, though, I do still think that, there are huge tailwinds, especially if the Fed does continue its trend here, for some large mega cap companies, very notably Alphabet. I'll also include Microsoft in this. If you looked at Q3 earnings, Google was up 16% year over year with huge gains in their cloud business. I want to say it was a 34% increase year over year. Their TPU business, they had a huge announcement of Anthropic buying that hardware from Google. And, you've seen also their Blue Link search business even continue to grow in revenue. And so if we are going to look for these tailwinds for opportunity in AI, I'd rather couple that with a legacy name like a Google that isn't just reliant on the future probability of AI revenue coming, but has so many other pieces of value within it that are already producing and still, despite, all the commentary, continuing to grow, again, highlighted by that Blue Link search business growth.
Ted, we appreciate you being with us to talk about opportunities and the state of the economy this morning. That's Ted Thatcher. Thanks again. And we've got plenty more to come here on Trading 360 as well. Next, we've got the big three stocks, three charts, three trades. Rick Ducat will walk us through the technicals, and Tim Bowen will take us through the trades for Tesla, NVIDIA, and Palantir. That's next on Trading 360 on Schwab Network.
Opening Bell with Nicole Petalides, live on the floor of the New York Stock Exchange. The countdown, the setups, the stories that make markets move. Minute-by-minute breakdown of the biggest headlines, earnings, and global movers. Just the trades that matter. As the bell hits and the markets react in real time, Opening Bell, live at the NYSE, right when it counts.
Believe me, when it comes to investing, you'll love Carl's Way. Take a left here, please.
But there's a...
Carl's Way is the best way.
Is it? At Schwab, how I choose to invest is up to me.
Exactly. I can invest and trade on my own.
Yes, and I let them manage some investments for me, too.
Let's move on, shall we?
No can do.
I'll get out here.
Where are you going?
Schwab. Schwab, a modern approach to wealth management.
Welcome back to Trading 360. I'm Marley Caden. It's time for the big three. We've got 3 stocks and 3 charts for you today. Rick Ducat will take us through the charts, and here to take us through his picks today is Tim Bowen, Chief Technical Trainer at StocksToTrade.com. Great to have you both with us as always. Tim, happy Friday to you. Would love to start, as we always do, with some thoughts on the action that we're seeing this morning. I'm going to check before I say it. We are still seeing a bit of a reversal here, but a very rough, wild week in the markets.
Yeah, I'd like to start out with, I want to, come with an apology. I went a little hard in the paint on Michael Burry last week's episode. Threw a few elbows. A couple days later, he rage quit his fund. Pulled the cartman, took his ball, and went home. But one thing I would like to suggest to you, Michael, is you could always just go back to posting 50 pictures a day of Christian Bale as you. Keep shorting these stocks. You can relive those glory days from 15 years ago. Kind of reminds me of Al Bundy celebrating 3 touchdowns from homecoming 30 years later. But that's where these shorts are, and they keep falling for these traps, much like yesterday. And because of that, I don't think anything has changed in the AI field. All 3 of my ideas today, AI related, all visionary CEOs. Actually bought Alex Karp's book this week, CEO of Palantir. They just all, whether it be Elon or CEOs of NVIDIA, Palantir, just reminds me of when I grew up, got my first Apple II. I mean, visionary CEOs just like Steve Jobs. AI is a game changer. I've said it's the biggest technology since fire, since the internal combustion, since electricity. And I just look at this morning, all 3 of these stocks I sent over, big red to green moves, and love all 3 of these as long as they don't take out today's lows. That's where that trade plan has to come into play. If they take out today's lows, probably some short-term shakiness, but I think all 3 of these incredible dip buys.
Shots fired to start the big 3. I like it, Tim. Keeping me on my toes this Friday. But you do have some big names in your big 3 today. Let's talk about the first one, Tesla. They are moving higher today, but have had a bit of a rough week, down almost 6% on the heels of that recall that we saw yesterday for their batteries. Walk us through this pick on Tesla.
So what at the end of the day, the thesis is completely unchanged. I'm, absolutely, I've been an admirer of Elon. I mean, you can go back on my Twitter feed 12 years ago. I told people they were crazy to short this stock. So anytime you see a dip, I mean, to me, take advantage of bad news. I think that, this is one of those stocks. I mean, you look at a 10-year chart, I think the next 10 years is going to be the same. So anytime you get some bad news, you get a pullback, those are buying opportunities. So that's where I wait for bad news to add into dips.
All right, Rick, so as we look at this, we are talking by the dips pretty much across tech this whole week. But as we look specifically at Tesla, what are the technicals showing us?
So this is actually a pretty interesting chart here for several reasons. If we were to backtrack a little bit, 463, this red line that we see here, was an old high close. We only had one close that was better than that. And then after a pullback, that was where we found resistance once more. That's about where we've hit a stumbling block 2 more times as well recently. So now we had this kind of M-shaped price pattern here where we had a supportive point around 400. Once again, if you backtrack here, that was the site of an old old gap level. So we bounced off that gap level once, we broke above it, then we tested it and bounced. Now, yesterday, that was about where we bottomed out. Today, we moved lower, and we can see here that we had our blue trend line going across these lows that we established here and here, and that was about where we had our low point today. Now we've recovered above that 400 level. So staying above 400 would be noteworthy today as we conclude this trading week here. So when we look at our moving averages, we have fallen below the two shorter-term moving averages that we follow, our yellow 21-day and orange 63-day exponential moving averages. The 63 in orange comes in just above 412, so that could be a resistance point to watch as well. Price is traveling in a very narrow downward sloping channel still. We can also see that RSI has accelerated somewhat to the downside here. We are below the 50 midline and trending lower still so far, despite our green day that's being developing here. So volume node, we can see here right around 430 to 440 is where the heaviest node is to the upside. We also have one to the downside here where we bounce right around the 390 level. So those would be some potential congestion areas to the upside and the downside.
All right, and right now we're looking at 405.61 is where they're trading above that 400 threshold that you're keeping an eye on there. Now, Tim, I want to move to your next pick, but I'm gonna have to mention Michael Burry when we do it because he's got a really strong put position on it. Although the analyst coverage that I read this morning would strongly disagree with his sentiments there. NVIDIA, ahead of their earnings, they got a bunch of price target increases this morning. The street extremely bullish as we come into their report next week. How about you?
Yeah, normally I kind of reject agreeing with the analyst. This is one of those situations where I agree. I mean, you look at again, just everyone's talking like whatever NVIDIA can produce, we want to buy it. I mean, Microsoft is talking about the fact that they got, I don't even know, thousands or millions of things. They just need to hook them up and get power to them, which is a different story. But again, really an unchanged thesis here from previous appearances on the big three. And I'm really, the biggest reason I brought this stock is, again, a lot of people have watched this go up for literally years, maybe decades. And I think the shakiness of this week can provide some buying opportunities that people that maybe didn't join that trend and are looking to join the next leg high.
All right, Ray, so as we look at the technicals, does it look like it's time for someone to jump in late to the party if they miss the NVIDIA train right now?
That's the hard part is bull markets won't let you in, bear markets won't let you out. Like if we did have this pullback here, I thought it was interesting that we did not test our relative lows. You can see 177, we hit a double bottom here, but we gradually made slightly higher lows every time here. So I thought that was noteworthy that even though we did break below this trend line here in blue, we did not make any kind of significant new low points here so far based on these relative extremes near 177. Our highs came in here just above 212 here. That gives us this downward sloping white short-term trend line to keep in mind here. So on the verge of potentially breaking through that area of possible resistance if we were to move higher, around 195, 196 is noteworthy to me because that's where we hit an old high point here, a bit of a chop and consolidation around that area once again. When we look at our other studies, RSI, our measure of momentum, is recovering somewhat, but if we were to see a price breakout, RSI would likely also push above the trend line and above the 50 midline, which would be more of once again, a confirmatory signal for the bulls there that would add extra credence to the possibility of a stronger breakout taking hold. We are between our two moving averages that we mentioned earlier, 63 and 21-day EMAs coming in around 184 and 192 respectively. So those are some short-term areas to consider as well. Finally, when we look at volume profile, the heavy trading area is right about where we bounced. It lines up with our low points that I was mentioning. Around 175 to 185 is really a key area to hold based on this idea of this being an important trading range based on the volume. So if we were to dip below that, I mean, 165, these lows here would be the next possible point that stands out. If we move higher, we can see that our +1 standard deviation channel almost exactly in line with those old highs. That comes in just shy of 213 to the upside.
And as we look at NVIDIA, and some of this recent pullback we're seeing and how it's affected their market cap, we had this $5 trillion conversation. They're now down below $4.6 trillion. That's how much this pullback has cost them, and some of that chatter around this Michael Burry put in some other headlines. But let's move on to another put position we've got here from Michael Burry and Palantir, who arguably had a really good earnings quarter, but maybe just not a great time to report their earnings.
Yeah, and I know the theme of all three stocks today kind of similar, but Palantir is one. I've been bullish since $20, $30 a share. And two quotes come to mind with this one. I had a lot of people hit me up this week again, back to the man of the hour, Michael Burry, and they were like, "Hey, what do you think?" And I kept saying the same thing. It just reminds me of two trading related quotes, and it's the first one is, pessimists sound smart, optimists make money in the stock market. Okay, and the second is market's going to remain irrational longer than you can stay solvent. And I go back to when I first shared Palantir on the big three. It was back in August. Andrew left. Citron shorted it. It ground up to 200 plus from there. It's pulled back right here to those levels of that pre-short, which created a squeeze. And I just think a lot of these retail investors, I want them to do well, but a lot of them fell for that first quote of pessimists sound smart, optimists make money. I think a lot of retail got trapped shorting into this. And when this thing starts pushing higher, it's going to create margin calls, force covers, and I think yet another, hard to believe, another parabolic move in Palantir, but I think it's
the next resistance.
All right, and in the last month, we are down almost 3% on Palantir, but still in the last 12 months, up 195%, despite this pullback we've seen for Palantir. When we look at the technicals in the chart, Rick, what are they indicating for Palantir?
There's some strong similarities between all three charts. In this case, the point I would be trying to make is that even though we had an intraday dip beyond a significant supportive level, we've recovered back above it with some vigor, it seems like here. So if we were to look at why we're looking at this 169 area, this dark green line, that was
they can break out here. We got a little bit more room to the upside.
That was also a subsequent breakdown point here. Sometimes when you look for these key areas and you see this huge fall to the downside, in this case here, this is exactly the kind of thing we'd be looking for, is when the
that's how you find the
price
direction.
point is breached, it triggers the cascade of orders and results in a more energetic reaction.
Take advantage of that.
From that point, we stabilized around 145, which was our old highs, and then the lows that followed after that. Then we had our range-bound period here between about 187 to 169 or so, 170. We pushed to the upside. Now we have held on to that 169 area once again. So a key point for the bulls to recapture here, our 63-day EMA lines up very closely with that same level. So a bit of extra emphasis on that as a point that we would want to see overcome if we have a bullish outlook on this name here. RSI still a bit lower, not really too terribly much to say about that when we did make marginally lower lows.
Look at the power right
now. We'll have to see what happens as we head into the close. There's still quite a bit of time left in this trading day. Finally, when we look here, we can see that we have our volume node here that lines up about with our current prices near 183. So once again, this is really this whole area, 175 to 185. That's where the bulls need to recapture and push above for hope of continuing this uptrend.
Yeah, and right now we're trading at 176.21 for Palantir right now. I want to thank you both for being with us for the Big Three today. Of course, Tim Bowen and Rick Duquette, our lead market technician here on Schwab Network. Tim, we hope you have a great weekend. And coming up next, we're going to spotlight the state of the economy and the consumer as we head into the holiday shopping season. That's next on Trading 360.
Sometimes, you could have done better.
All right, y'all.
Same goes for where you invest.
I was kind of looking for some profit taking, but this looks bullish.
With Schwab.
Morning movers, be the first to find out what's shaping early market action. Tech check, options corner, futures focus, technical analysis. Morning movers covers it all. Grab your coffee and tune in every trading day at 8 a.m. Eastern, only on Schwab Network.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. Platforms and Tools webcasts are designed to help you broaden your knowledge of platform features and resources available from Schwab. You'll learn tips and tricks to help navigate Schwab.com, Thinkorswim, and mobile-based platforms. Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or watch on demand. Head over to schwab.com/coaching and start learning today.
Kick off the morning with the data and the decisions moving markets. Morning Trade
Be
Live
careful
breaks
right here.
down
It might
the
be a
macro
rejection right
moves
here.
driving the
This is
price action, from Fed policy to global growth to inflation prints and geopolitical risk.
Like, if you have
Smart,
time on this,
fast, and always live from Wall
and enough
Street to your
liquidity,
screen. Morning Trade Live, where
but
the
look,
markets
this
meet
is
the
bullish,
macro,
so it
weekdays
ain't no
at
more.
10 a.m. Eastern on Schwab
see what they did in pre-market.
Stay connected to what moves the
And
markets. Download the
if
Schwab
anything,
Network app and stream
I'm looking for a
anytime,
pullback and
wherever
then a
you are.
bounce higher. Bounce and a retest. But just gotta see.
Welcome back to Trading 360. I'm Marley Caden, live in our Chicago headquarters. It's time to spotlight consumer trends ahead of the holiday shopping season. Joining us now is Shelly Antonevich, the Chief Economist at Investment Company Institute. Shelly, thank you so much for being with us. You know, I'd love to get your thoughts on some of this action that we're seeing now that we have this government shutdown, this choppiness that we've had this week, while we still remain in a data blackout, and it's seemingly unknown when or if at all we're going to get any of that data.
Yeah, it is. I mean, right now, BLS is looking at, when they can start putting out
This diagonal right here was
data.
the support.
They're
range
reassessing. I was just looking on their website. They're reassessing the schedule, and they're going to publish, dates going forward. I would think that they could get the September employment data out fairly quickly. I mean, that was almost done and ready to be published just days before the government actually shut down. And while there are aspects of the October employment report they can't go back and collect, which would be the household survey data, they
the way
certainly
the
could
overall
go back
trend
and
is, though,
retroactively collect the data
is
from
bearish,
the
'cause look at all
establishment
this.
survey. Now, if they had the bandwidth to
trying to
do that,
reverse it,
that's another question. Because not only that, you're going to be coming up on trying to get the November data out.
Fridays are
And this is
like
data,
weird days.
employment picture data is going to be critically
You usually get a lot
important to
of,
the Fed's
price action
decision
from Tesla
whether or
or
not to cut rates in
some of these little
December.
stocks.
Right now, there's very little expectation. I think it's even odds that the Fed would cut rates in December because, as Chairman Powell said, they're driving in a fog, and when you drive in the fog, you slow down.
Yes, and it is data fog, but you bring up a great point about September. Everybody's talking about October because we got commentary from the White House saying they feel the October data may never come because of its collection status. But September was finished before the government shut down. How important and also how useful do you think that data will be now that we're going to be months removed by the time we get to December? And you mentioned the November collection. That data not expected to come out, some of it, the inflation data at least, until the same day as the Fed meeting. The jobs data, I think, coming out 5 days ahead, but assuming that timeline stays in place as it stands.
Yeah, any information is critical to the Fed, and they will take it into consideration if it's 5 days ahead. I think September will help give them comfort about the rate cut they did in October, and I think that all information is better than no information, which is really what they've been living with right now, just cobbling together bits and pieces of third-party data to get a very murky picture of where the economy stands right now.
I do crypto.
And
I do
certainly the
investing.
Fed is going to take into
I do
consideration
day trading
the fact
on
that
the
the
1
government
minute.
was shut down, and we're
I do
expecting
everything.
about a 1 to 2 percentage point hit to fourth quarter GDP
I'm doing it
because of
all.
that shutdown. Now, in most
I started out
cases,
doing
much
zero
of that
DCs,
sort of hit
but
will be made up because because people,
Everything
who were
with time is
furloughed
better.
and are
Time
now
is just
getting
right.
their paychecks will turn around and they will buy that durable goods item. They'll
This
buy
is
that,
gonna be so much
the
bullish.
car, the washing machine, whatever they needed to purchase.
If they can
Those
keep this
purchases
trend.
have just been delayed. It's more some of the discretionary service spending that you can't make
Going
up.
to the Christmas ride
I
with
want
it.
to jump to GDP in 1 second, but I have one follow-up about the data. With this sort of cobbled together effect that we've been using,
This
with
is almost like that
private
20,
data,
like
the
when you
only
get a
thing we've
20%
had access to
pullback
in
in
the
market,
data fog.
that's where you want to
mentioned
buy
the
the dip.
murky picture. What is the
I think
murky
they did like a
picture
20%
for you from the data that we have been able to see over the last 44 odd days?
All that
Well,
had to be
certainly
20%.
Q3 for me. I mean, I completely agree with the current Atlanta Fed GDP estimate, which is
What, these
roughly
tools,
4% GDP growth. And if we take that momentum and we move into the fourth
As far
quarter,
as that,
you would expect
somebody's buying the
something
dip.
between 2 to 3%
Today and tomorrow.
growth there.
Not tomorrow, but
However,
Monday.
there were signs
I'm looking for a
already
rally.
that consumer was potentially slowing down. We're looking at consumer spending. We're tracking the wealth, the health, the financial well-being of consumers right now, and we're seeing some households struggling. So credit card
1, 2, 3,
delinquencies,
4.
mortgage
They're trying
delinquencies, and
to create
auto
some
loan
bullish divergence
delinquencies
in the
are
woman.
rising, and they're actually reaching highs we haven't seen in the past, 8 to 15 years, and so that can be concerning. Now, on the flip side of that, we have another group of consumers that are extremely positive.
If this candle in
about
green,
their financial outlook.
if this candle look in
These
green,
are
this is
people
bullish.
with very high, with larger
It's still
stock
bullish.
holdings, and with the equity market having, really had a few years here of incredible gains, that's feeding some of their consumer spending and propping up some of the consumer spending where other households may be pulling back.
And I know you mentioned, that GDP is going to take a 1 to 2 percentage point hit because of this shutdown. That's the expectation here. But we also know that consumer spending drives about 2/3 of GDP. Now, you mentioned you think it will catch up. It may take time. How much time is it going to take, and how significantly do you think it will impact the holiday spending season?
The holiday spending season, we may not see the rebound right away, but holiday spending season is, in a sense, optimistic, I would say. I know recently they've been paring back some of the growth estimates, but the growth estimates for holiday spending were in the 4+% range year over year. Now they're in the 3 to 3.5% growth range. That's certainly solid holiday spending. What might happen, though, is people may decide, yes, I'm going to splurge on the holidays. Yes, I am going to spend either at the same rate I did last year or a little more. But they could cut back on some other things in order to feel comfortable doing that.
Yeah, certainly something that we've heard echoed here as well. And I'm just refreshing the FedWatch tool right now. It is a coin flip, 49.6% chance of an ease, 50.4% chance of no change at that December meeting. Shelly, we want to thank you for taking the time on this Friday to be with us today on Trading 360. That's Shelly Antonevich. We appreciate you joining us today. And coming up, we will check in with Nicole Petalides on the floor of the NYSE, and we'll also have our disruptors with George Tillis. We'll be looking at
come on, you see
Apple
that bounce?
after promising
Boom,
iPhone
boom,
sales
boom.
coming out of China. He'll break down that news and give us an example trade next on Trading 360.
Yeah, they going right there to 675. Yeah, that's why I said bullish divergence on the 1 minute. All this is bullish action.
connected to the markets, the Schwab Network.
Tune in 24 hours a day, 7 days a week on SchwabNetwork.com
and on all your favorite streaming services. Schwab Network.
Available anytime, anywhere, on any device for free.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. Do you like using charts when analyzing your stocks? Our technical analysis webcast series breaks down different charting techniques like trend analysis, price patterns, moving averages, oscillators, and much more. Best of all, you can ask questions directly to an education coach. It's interactive learning at its finest. Tune in live or on demand. Head over to schwab.com/coaching and start learning today.
Welcome back to Trading 360. I'm Marley Caden here in our Chicago headquarters. Let's head out to the New York Stock Exchange for a check on the markets and welcome in Nicole Petalides, host of Opening Bell and the Watch List here on Schwab Network. Nicole, good morning to you. Happy Friday. What's caught your eye so far this morning?
The complete turnaround that we saw from the selling that we saw yesterday, which was pretty dramatic as the day went on, only to see that really echoed this morning with the minute that bell rang, down arrows. However, you've seen now that the S&P 500 is into the green here, and you have energy, tech, utilities, industrials leading the way here on Wall Street. The two things that have been weighing on the minds of investors are AI, the valuation and debt that's been accruing, and also whether or not the Fed will cut rates in December. So those are the two big underlying stories that have been weighing on stocks. You've seen the NASDAQ have several sell-offs over the past month or so. It's been down about 2% this week, though everything is clawing its way back. I mean, as far as specific movers here, I think the Warner Brothers story is exciting. This stock in 6 months is up over 140%. So keep an eye on the Warner Brothers story because their bidders are stepping in. As far as earnings, you had Applied Materials with a down arrow, StubHub, which had a wider loss and actually didn't give the guidance that people were expecting. So that's down over 20%. And then positive comments on Disney and NVIDIA, several price target hikes on NVIDIA. And Apple has some great sales in China for the Apple 17 phone. In fact, it was in this particular period, 80% of phones sold were actually the 17. So that was up 22% year over year. So those were some pieces and bits of good news. Bitcoin has been under pressure, has been under 100,000.
Yeah, staying below that mark, too. I know the last I looked, I think around 97,000. But I want to talk about Gap this morning. We're seeing another big retail name getting an upgrade to buy from another big firm here. This time Jefferies. Walk us through Jefferies' optimism with Gap.
And there's so much that goes through this, and I'm pulling up an article that I was reading in September, which I'm going to quote in a moment. But the big picture is you're going to have a lot of these retailers report next week.
Oh, not yet, y'all.
The report for the Gap next week is being really optimistic. They put a buy instead of a hold, up from a hold, with a price target of $30, up from $22. The Gap is trading at $24 today. Morgan Stanley's at 30, UBS is at 25, Telsey's at 24. The idea here is that there's great momentum for this company, that the marketing has been good news. They really seem to be doing well and have meaningful upside, and that the beauty segment and beauty and accessories, personal care, is an area that could be underestimated as well. In fact, they've been naming some industry executives, one from Estee Lauder, also another who helped to transform Coach and Tiffany, and another from Nordstrom. And so
breaking down
we did see now that J. Crew, Kate Spade, these are former executives who are really helping to push this group forward for personal products, beauty, and such. So it's going to be an array. Of course, there's Gap, Old Navy, Athleta, and Banana. So the Gap may in fact see, the Gap, the namesake store, may in fact see its 8th consecutive same-store sales growth. And Jefferies comes on and just talks about the momentum overall that's happening there. So overall, and the last thing I'll note is the partnership with Google Cloud AI, and that is to enhance customer experience, the business, getting the products out farther, faster, and that's something that has has also been talked about for this company as well. So a lot of things happening under new leadership, don't forget. And so it's been a strong turnaround plan, and the analysts are noting that.
Yes,
Marley.
certainly. And this price target, about 25% higher than where they're trading right now. Nicole, we appreciate you breaking that down for us. That's Nicole Petalides. And now it's time for the disruptors. George Tillis, our senior markets correspondent, is here with today's company. We're talking about Apple. Apple got these China sales numbers that came out here, George. Some really impressive figures here for the iPhone 17. We are seeing a move to the upside for Apple on the heels of this, about 0.5%. Not a considerable move, but we did just see a turnaround in the markets. Can you walk us through some of the information we're getting about the China sales?
Sure. Yeah. I mean, I think if you look at Apple, interesting enough, it's performed, I would say, exceptionally well, considering what's going on with the other larger cap names, NVIDIA, Broadcom, Meta Platforms, for instance, so not performing very well. And I think that speaks to Apple in terms of their spendthrift aspects of capital expenditures. And we talked about this when the company reported earnings back in late October, where as a percent of total sales, CapEx, including R&D expenses, were still less than 15%. And so with that said, I think that the market has been rewarding Apple from a balance sheet conservative standpoint versus a lot of the criticisms Apple took over the last year that they hadn't invested perhaps enough in artificial intelligence. And now we're seeing the aspects of their core business, which is consumer products. In particular, we know that the iPhone is their largest hardware sales business. Their China sales, as Nicole alluded to,
this can be
if you look since the release of the iPhone 17, up 22% year over year. Importantly enough, that was better than last year when they released the iPhone 16 line of products, and they actually showed sales which were down the last year about 3.6% year over year. So I think this is important enough that it seems to be more popular right now, considering, again, total sales for smartphones in Q3, as reported in China, were actually down, but iPhone sales were higher in China. So for what it's worth, it seems to be gaining a lot of popularity this year in China. And importantly enough, again, if you look at last quarter for Apple, sales in China were actually down for the quarter year over year. So this actually gives them a nice catalyst to the upside, considering the iPhone 17 seems to be very popular across the Chinese mainstay markets.
I thought that was very interesting, too, to see that the sales were down almost 3% in that third quarter year over year in the China overall smartphone market. Fascinating, especially with the rise we're seeing in the iPhone. So with Apple's performance of late, we had all these conversations pre-earnings about it being one of the laggards in the Mag 7, and now, they're really holding strong, up more than 10% just in the last month. How would you structure an example trade here, George?
Yeah, so I think the narrative right now is still the case where the companies, at least in the larger cap space, that are more conservative on CapEx spending are being rewarded. And if you look at the trend for Apple, it doesn't look like there's anything interrupted, irrespective of some of the other names I mentioned, which are down considerably. So with that said, if you look at the stock trending still above the 20 and 50-day moving average, I'm going to participate continuation in the trend. And I'm going to go out to January, because I don't necessarily think the stock is going to move aggressively to the upside, but nonetheless may end up moving slowly. So with 63 days to expiration, I'm going to basically buy a call vertical, purchasing the 275 call. These are the monthly contracts in January, then selling the 280 against it. And so altogether, it costs you about $2.50 a share, or $250 a contract. So the whole premise is bullish continuation, slow and steady. 277.50 is your break even, and you're outlaying 250 to make 250. So you basically have a 1-to-1 return on risk, and that'll occur max profit of 250 if the stock gets 280 or higher by expiration.
George, we appreciate you being with us to talk Apple and for that example trade today. That's George Tillis. And coming up next, it's time for our 360 round. We're diving into the earnings from Applied Materials, which is falling despite earnings that topped estimates. We'll break down the numbers and why next on Trading 360.
Trading at Schwab is powered by Ameritrade, unlocking the power of Thinkorswim, the award-winning trading platforms. Bring your trades into focus on Thinkorswim Desktop with robust charting and analysis tools, including over 400 technical studies. Tailor the platforms to your unique needs with nearly endless customization, and track market trends with up-to-the-minute news and insights. Trade brilliantly with Schwab.
I'm Jenny Horn. This is Next Gen Investing, where we track the trends shaping tomorrow's markets.
From tech to energy, crypto to consumer, we focus on what's driving investor sentiment right now.
Clear analysis and forward-looking market coverage every trading day.
This is a make or break level for this stock.
And that could certainly be a short to near-term catalyst.
Next Gen Investing, 1 p.m. Eastern.
Only on Schwab Network.
Welcome back to Trading 360. I'm Marley Caden. It's time now for our 360 round. For that, let's bring in our panel to discuss Applied Materials earnings. Joining us now, Stephen Sopko, semiconductor and deep tech industry analyst at Hyperframe Research, and William Kerwin, the equity analyst at Morningstar. Thank you both for being with us. Stephen, let's start with you. I'd love to have some of your key takeaways from this report. You know, top and bottom line beat, but under pressure this morning.
It's under pressure, I think, because those export controls have been really weighing on the company for a couple of years now.
Came all the way down to fill up the
China's
gas.
contribution to their their revenue, it's dropped from 45%
Or the bottom
a couple of
balance.
years ago down to 25% in the current report. And I think the
This might be a
challenge there
crazy
has
bullish
been,
day.
where do you
They
go
start recovering
in one of your key markets is
that
under that kind
big
of pressure?
20%
Well,
drop
the company's
they
done
had
an
today.
amazing job of pivoting
Or
in
last
Taiwan and Korea and had a record-setting
yesterday in
year
pre-market today.
despite those pressures. That said, when we look into 2026, the question is, can they continue that sort of growth outside of those export control restricted countries?
All right, Stephen, we're going to come back to those export controls in just a second, but I want to get William's thoughts.
like
You actually
this.
raised
I
your
love
fair
this,
value estimate to 225 for Applied Materials. What in the report made you even more confident on the stock?
I'm about to put 10 contracts on
This is
top.
really a case of a
At least I
contrasting
called.
dynamic between a softer short-term environment that has the market feeling some pressure on AMAT shares this morning and more bullish expectation into the long term. So we're really focused on the bullish commentary that management gave about the second half of calendar
I'm gonna get some
2026
calls with some time
into
on it.
2027 with some stronger AI orders, better visibility there. That really matched our existing bullish expectations on AI to drive a really strong growth cycle in WFE and chip equipment in general over the next 3 to 5 years. So with that focus on the longer term bullishness, that led our valuation up.
All right, great. And then, Stephen, coming back to this export controls conversation, you mentioned China revenue already fell to 28%
what's on you guys'
of the
playlist?
business. How much are
What's-
these
what's
trade
green in your investment
restrictions
portfolio?
reshaping forward demand for Applied Materials? And also, do you think that this is part of why we saw some of those layoffs to get ahead of this?
I think the company is restructuring to get ahead of it. They're coming out of a record-setting year, and it only makes sense to restructure when you've got these kind of headwinds from export controls. And management indicates they don't see those moderating anytime soon. One of the things a lot of people overlook is the margin pressure that can come whenever you've got export controls. If I'm buying these machines in a country not affected by export controls, the temptation is to say to the company, hey, you're not going to be able to sell this in the market that's been roaring for the last decade. Give me price decreases. And I think one of the things the company's done is with their Epic Center launch that they started in 23, it's going live in 26. That's a co-development center in this space that's really unique. And so I think they're going to be able to do co-development with their customers and hopefully avoid some of those margin pressures from increased buyer leverage against them.
And so, Stephen, we did see, that pullback in the China business, but where we did see some big momentum is in DRAM and advanced packaging. I think leading edge revenue up more than 50% this year. Do you view that as sustainable, or is this partly cyclical?
I think there's just a roaring demand for it. And all the indications that we're seeing is that the demand is continuing. The key, though, is whether or not the overall AI market continues. And so far, we don't see any reason to believe that's pulling back. The company is also going in that direction as well. And I think the product launches they've got in the space and the increased technology they've got to bring to bear has been a big part of the story.
And William, we saw this record revenue. They put up this $28.4 billion for the year. Their free cash flow at $5.7 billion. They returned more than $6 billion to shareholders in dividends and buybacks. How important is that level of cash generation, given the capital intensity of semiconductor equipment and that being their space?
Living life in a different way.
Yeah, they
I
have
realized
a
I
phenomenal
just have to
balance
really
sheet,
step it up
excellent
and really
cash
do
flow,
all
great
the stuff I
shareholder
need to do,
returns.
like,
These are all things we
so I
really
can't
like
be
about
like,
the company
you know
as
what
an
I mean?
investment.
We all
And
two
this is
different
a high
paths, that's all
quality
it is.
company. We have a wide economic moat rating on it.
all it is.
We We think it is one of
Third
the
parties on
leaders in
2K.
semiconductor equipment
They want to just play
globally,
2K all
and that's
day.
why we have such
I need
bullishness on its
to be
ability to
rich.
capture this AI demand
Not for
longer
me,
term, because we see it as a
but for
technology
my
leader
family. You get me?
alongside peers
And I
like
want
a
my
Lam
girl to be
Research,
right.
like a
I'm
KLA.
working on a bunch of
And when you
different things
compare
at
it to the
once.
rest
You
of
know
that
what I'm
group,
saying?
actually, you've seen the
They
stock
just don't.
not perform as
They ain't
well
trying to
this
get
year.
to
And
it.
we think that's an actionable disconnect where
Let's
it shares in
talk
the
about
great
playing 2K.
opportunity
You
of
know
these
what I'm talking
peers
about?
that have nearly doubled this year. AMAT stock is up maybe 20% year to date, if I'm correct. And so we think that represents a much better entry point.
Yeah, it's up 36.5% as of right now. You know, and staying with you here, William, you know, they've made this big bet on this AI chip production. At this level that it stands at right now, trading at 221.86, do you think that like this is a buying opportunity here, or is patience a better move right now?
We think it's fairly valued today, but a much better opportunity than some of the frothy valuations that we're seeing in the market. It's hard to find an undervalued name in the AI trade. And so when you're looking at an AI exposed stock and it's fairly valued or just slightly under our fair value estimate at $225 a share, we think it could be an opportunity.
And coming back to you, Stephen, for the last question, you know, the reaction from the market, you know, William mentioned it might have just been a bit of an interesting time to put out these numbers with a lot of the questions about valuations and the AI trade. You know, does the reaction make sense to you, or are they mispricing or misinterpreting AMAT right now?
Rejection. They came back for a retest.
I think AMAT is a long-term play. This is one of those companies where unless something external happens to it, like export controls or like other changes in the broader market, it is a company that's steady, it's stable, it's working with customers on a 1 to 2 year forecast on their demands. So this is one of those things where the company has been around for 55 years and it is a stable part of one of the most complex supply chains in the world. So I think that a little bit of reaction to it is normal, but I think the company fundamentals are strong. They've got an amazing customer base and I think a good plan for the future.
We appreciate you both being with us this morning for our 360 panel to break down Applied Materials. They're recovering now, only down about 0.2% following their better than expected earnings report. That's Stephen Stopko from Hyperframe Research and William Kerwin from Morningstar. Also want to thank all of you for joining us today on Trading 360. I'm Marley Caden. You can download the free Schwab Network app available in the Apple App Store. You can also tune in 24/7 on schwabnetwork.com. I'll be back with Market on Close at 3 p.m. Eastern, 2 Central today with Sam Vadas. But stay with us. Fast Market with Diane King Hall is coming up next. Have a great weekend.
Market is about to blow up right now. It really gonna go higher. Watch it.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. The Platforms and Tools webcasts are designed to help you broaden your knowledge of platform features and resources available from Schwab. You'll learn tips and tricks to help navigate schwab.com, thinkorswim, and mobile-based platforms.
Super bullish on the market.
Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or watch on demand. Head over to schwab.com/coaching and start learning today.
Welcome to Schwab Network, where real-time market coverage meets expert strategy.
From the opening bell to the closing bell, we've got you covered.
Get inside the minds of pro traders.
My point is that they're getting a higher rate of change in sales based on their guidance, but not the same rate of change on EPS.
Follow the biggest headlines, live analysis, breaking news, and sharp trade ideas minute by minute.
With shows built for action, we break it all down in real time with speed, accuracy, and precision.
I think one of the most important things is you're making a play in a risk-defined way here going into earnings.
So that would be a further downside area to watch.
Smart insights, actionable data, veteran traders, and trusted financial journalists streaming live and on demand.
Schwab Network, streaming 24/7, any screen, anywhere, free. schwabnetwork.com.
Yeah. I think it's good to have diverse and different portfolios and areas in the market. small town where I'm do options. Just
I'm
buy.
Sam Vardis, live from the New York Stock Exchange. When the market moves, we're on it. Getting the reaction, the strategy, and sentiment in real time.
Take like my cash
Stream
account,
Schwab
do like
Network
a
at
leap in there and don't touch it.
schwabnetwork.com.
That's what I need to do too, because I had some problems where, I don't get the full gain of my move. All this, though, I think is bullish divergence in the 1 minute. Like this is I'm not just trying to go crazy. It's gonna go higher today too. All of these is going higher. It's on the gas.
Welcome to Fast Market here on Schwab Network. I'm Diane King Hall. Coming up on noon Eastern here at the New York Stock Exchange. And the bulls are attempting to fight off the mat as they get a little lunchtime fuel. Let's get right into it with a check on the major indexes. We started out the day under pressure, but right now we're flipping positive on a few of the benchmarks. The S&P 500 now better by more than 1/3 of a percent. You got information technology pacing the gains. That's followed by energy. On the weaker side, you've got communication services. We'll see how things hold up as we progress throughout the hour and the session today. The Dow right now is still under some pressure. It's off by less than 1/3 of a percent. But again, we are well off the lows of the session. NASDAQ 100 has a gain. It is better by more than 1/2%. Russell 2000 higher by more than 1/2%. Here's the roadmap for today's show.
Look,
we'll look at example option strategies for Microsoft
after
Baird initiated coverage of the tech heavyweight. Plus, the team from Lightfolio will be along with new sentiment data on strategy, the artist formerly known as MicroStrategy, and Circle is also on our radar today. Our investors circling back. We'll get to that one later in the show. Now that we've got the roadmap for today's trading action, it's time to bring in my co-hosts and trading veterans, Tom White in our Chicago studio and Kevin Hings joining us live from the CBO. As you know, we've got you covered from exchange to exchange and beyond. All right, guys, we got a couple different things happening here. You got fears about what the Fed does next. That has been kind of part of at the forefront of the market today. The path on rates unclear. Now it's like a coin toss when you look at the Fed Watch CME tool. And then there's some new trade deals bubbling up. Tom, what's your take when you look across the broad landscape?
Well, I think you take a look at those expectations for a Fed rate cut in December. Those were 95% like 2-3 weeks ago. Now down to 45% today, according to the CME Fed Watch tool. And that's causing a little bit of consternation in what we've seen. Now, we did have some auctions this week, 3, 10, and 30-year, that were kind of mixed. So we got some additional volatility in the Treasury market and yields, which is causing some volatility in the overall equity market. Now, I think the consensus is still for a rate cut in December, but inflation's remaining sticky at that 3% level. From the data that we have, we're still waiting on a bunch of that inflation data. Jobs market's continuing to weaken from what we've gathered out of ADP and some of the other metrics that they can read that as non-farm payrolls hasn't been released. But we've seen that volatility come back into the market, the rotation trade, where, hey, they're getting out of the leaders in the overall market, which had been technology, communication services, and going into maybe blue chips, industrials. You're seeing energy spiking higher today on crude oil popping. But those aren't leaders that you want in this market, especially when the S&P 500, the top 10 names in there make up 40% of that index. And if you don't have those names providing some type of support, you're going to see moves like this. Now, the more that we went up through September and October to those all-time highs just a week ago, you have to start thinking the air's getting a little bit thin up there. So maybe these consolidation phases, these pullbacks, are going to be a little bit more volatile because we're at such elevated levels. I think you got to take that into context too. Expectations of the rate cut coming down. They signed that deal with Switzerland, 15% tariffs across the board, down from 39%. That's a positive. And they're working on other trade deals also. But I don't know. Just get comfy, because I think the implied volatility levels are going to remain elevated, at least in the near term.
Okay, a great take there, and great points about the positivity in terms of the trade deals. At the start of this week, you, Kevin, and Kevin Green were talking about be ready for some trade deals to start coming down the pike, and so it looks like that is happening. At the same time, yes, you do. It feels like there's this push-pull between the positive things and then, maybe the Fed won't do what we thought was going to happen. What's your take?
It's a breakout right here. Look at that.
Diane and Tom, I
Bullish
think
divergence.
there's
Looking right
uncertainty
at
in the markets reflecting the uncertainty in the Fed. And that's that move from a lock to lower interest rates to not what you mentioned, a coin flip. The markets pay attention to that. But Diane, remember when you and I spoke this morning, and and you and I were talking about the 50-day moving averages in the SPX and in the NASDAQ, and both have held. They opened up and traded below there, and they rallied back through the 50-day moving averages. So technically, if that's something you watch, that's a big deal. I think the trade deals with Switzerland, with Ecuador, Argentina, Guatemala, El Salvador, those are just flooding the zone with more good news from the administration, as well as I just think the overall market looked at the overall landscape, a lot of good news out there, but we were selling off because of uncertainty about Fed speakers. I referred to it, remember this morning, Diane, as the FOMC speaker correction. And so that looks like it hit the 50-day moving average, traded around there, and it's come back off. I think that's pretty significant for the short term.
You mentioned to watch for that, so great point there. Let's talk about one mover, shares of Applied Material. They're coming off the mat because that was under more pressure at the start of today's session. So they had better than expected results. And so at first I was like, why is this just a takedown with the broader market takedown? But now it feels like investors are kind of regrouping. What's your take, Tom?
Yeah, stock's up, 20 bucks from session lows post that earnings event. And you mentioned, it was a pretty decent report, but like we said, the stock was up about 37% this year going into that report. So maybe a little bit of profit taking, and it's not immune from moves in the overall market. Remember, the S&P 500 and NASDAQ were down over 1% in the pre-market before they started buying the dip up. But if you take a look at some of the, maybe the comparables from year-ago levels, you saw decreases, just slight ones on that one. If you take a look at what they reported last year in the same quarter versus this year, saw a little bit of a pullback there. And then they gave expectations moving forward where, they kind of basically in line, maybe a little bit better than expected.
They should be having
I think
a
if you
pullback.
listen to the commentary from the CEO, he said they basically are preparing for a ramp up in continued business and sales over the next couple of quarters, because that's probably going to be a positive. But yeah, this is a nice recovery in this stock, but it kind of goes into that notion, and we talked about this when Lam Research, KLAC, reported ASML. They weren't like spectacular results. They beat expectations, but the stocks did, basically consolidate and then start moving higher. Maybe we'll see that out of AMAT today.
On a big time frame.
Yeah, that's a good point.
Shares,
where things land by the end of today's session, and you have analysts after analysts who are shifting their price target, who are still constructive on this one, like Cantor Fitzgerald. They're maintaining their price target, still reiterating overweight. JP Morgan Chase is raising their price target on AMAT to 260. Kev, what's your take when you look across this one for Applied Materials?
Yeah, here's a problem with Applied Materials that is going to start seeping into the verbiage of a lot of these earnings reports. I look, fourth quarter revenue, $6.8 billion, down 3% year over year. So remember, because they've put up such video game numbers in the past, the comps are going to start getting difficult on some of these companies. And so when you're thinking about growth and you're thinking about, valuations, you can't see down 3% year over year. Despite it being a record, that's cautionary. And I think that'll cause people to hesitate. Remember, all these companies are going to have to come out with revenue and earnings per share count to a year ago. And that's going to start getting tricky for some of these companies.
Okay, all right, that's a great point. It does get tricky. It makes me think of StubHub earlier today, which was not good, and they didn't give guidance.
Like, honestly,
but part of the issue, too, was comps, because they had, the Taylor Swift Eras Tour. I know that's a sidebar. Let's circle back to the tech sector. NVIDIA, this is another one shaking off that malaise that it had earlier in the session. Now it's higher. It got some fresh votes of confidence. You got analysts at Wells Fargo, Morgan Stanley raising their price targets on this one ahead of earnings next week. Tom, what's your take?
This is bullish.
Yeah, we talked about this a little bit yesterday. The fact that, going into that earnings event next Wednesday, you're probably going to see a lot of analysts come out, and we've seen that over the last few days where analysts are upping their price target going into this report. And that's a positive. And we typically see that, or we historically have seen that, where, you see the stock down over 10% from those recent all-time highs, that you start seeing some resurgence and re-ratings from some of these agencies. Now, there was some of that news story today, Amazon and Microsoft supporting the GAIN AI Act. Well, Jensen Huang
and
NVIDIA are completely opposed to that. They want to be able to sell their chips, and especially the high-end chips, to anyone, anywhere, right? Supporting their company. That means more sales, more competition, probably higher prices, higher margins. But now Microsoft and Amazon coming out and saying, hey, we don't want you to be able to sell to China before we get our allotment. And that would actually probably help pricing if they couldn't sell over in China. But yeah, Diane and Kevin, I think you look at this stock, the move that it's had year to date, it's up 41%. We're expecting this to kind of control the market. It's the biggest component within the S&P 500, the NASDAQ. It's going to move markets, and optimism's probably supportive of that. If you looked at a lot of the earnings that have come out this quarter, especially from the tech sector, most of these companies have been beating, right? FactSet's got, 83% beat rate on EPS, a little bit lower for revenue. But all signs are pointing that they are going to beat, because you just look at what that CapEx spend numbers out of hyperscalers and some of the other big tech companies are, and they're actually, at least firming up, if not a little bit higher than the street anticipated. That's a bonus for NVIDIA going into their earnings.
Okay, great point. That's right. You did say going into this, we're going to start seeing analyst after analyst moving on the price targets. Kev, what's your take when you look across NVIDIA and the heavyweight that it is?
Yeah, I think part of the entire sector's recovery today is because NVIDIA. Remember, we're 5 days away from their earnings, Diane. When you get into work on Monday, get ready for NVIDIA Palooza, because everything, every movement, every stock, every discussion, it's all going to be tied back to NVIDIA. And so the center of the universe, despite Walmart and Target and Home Depot and Lowe's next week, those all take second tier to NVIDIA's earnings that are coming out Wednesday after the bell. So this is going to be big. The speculation is going to be all over the place. And it's always going to be, do they beat and raise? Not do they beat and raise, do they beat and raise by enough, Diane, to keep the stock here? Remember, it was just $212. It traded 180 today. But now, again, Diane, through the 50-day moving average, back over it late morning. So very similar price action in a lot of these names.
So very much paying attention to the 50-day moving average, not just on the S&P 500, but there for NVIDIA. Let's talk retail, you guys. Retail detail. We got a big week for retail in front of us. You got earnings, too, from Walmart, from Lowe's, from Home Depot. This is also coming at a time where we find out today, Walmart CEO Doug McMillon, he is going to be retiring. He's retiring come January. Still dinging the stock right now, off by 1%. Tom, what's your take when you think about Walmart and just the broader retail landscape?
Well, I don't think it's a sign of weakness. I think it's actually coming at a time of strength. B of A came out with a note, just this morning after this announcement and saying, hey, if they're comfortable, if he's comfortable retiring right now, Doug McMillon, that's a positive for the company. Now, they're going to promote somebody within that knows the ins and outs of the business. I don't think it's that big of a negative. Doug McMillon had navigated Walmart to, fresh all-time highs. expanding margins, growing sales, above expectations. So he's done a great job. They need to keep that momentum going. Remember, they're on the brink of, AI also. They're implementing AI throughout their company. They're taking advantage of the ad market. They're starting to ramp up that side of their business. Groceries, they pivoted early, so they beat Target and some other competitors in this space. So they've done a good job. But then, you look into earnings next week, Home Depot and Lowe's. I mean, Home Depot, if you look at it, the stock kind of got a pass. Remember last November, they hit all-time highs. And we've been trending lower, down about 17% from those levels over the last 12 months. They've gotten a pass because they're so shareholder friendly as far as buybacks, as far as the dividend and hiking the dividend, that sales have been flat to negative like 3 out of the last 4 quarters. That's not a positive by any stretch of the imagination. The stock was downgraded today. Lowe's took a price target cut out from Stifel also today. So these are going to be big. It's going to, these retailers are going to give you a reflection on how strong the consumer is, because remember, prior to the government shutdown, which they said might impact GDP by negative 1.5%, that GDP estimates were starting to climb for this quarter up into the 4% range. We'll have to see if the consumer is still out there spending.
Bullish trend can hold.
That's a good point. Yeah, I thought that too, that it would give us a good read on the consumer, especially because, yes, we're going to be coming out of the economic blackout, but this, before we get a full picture, the retailers will give us a broader picture. And great point about coming from within. John Furner, he'll take over the top reins as CEO of Walmart, coming from the U.S. side of the business. He was the president of Walmart U.S. Kev, what's your take when you think about the retail sector in front of us next week delivering results?
A whole different trend.
What a great story about John Furner. He's 51 years old. Diane's been
just
with
right when they try to make people bad.
He started out as an hourly associate. Pretty sure his hourly wage is about to go up a little bit, Diane. But in terms of the other names that are coming out, remember, we would have loved to have got some retail sales data today, but we didn't. But we did get Bank of America. Their retail data was really strong for the month of October. So hopefully that'll show up in some of these the retail earnings. Target has its own problems, but Home Depot and Lowe's, and especially Walmart, does SNAP benefits, does that affect Walmart's earnings? They get a lot of their income from SNAP benefits. So I think there's a lot going on here going into retail's earnings, but retail always focuses on the U.S. consumer. Bank of America's data said the U.S. consumer is very strong, Diane.
Yeah, it will be interesting to see if there's impact, because at the same time, when we talk about this K-shaped economy, Walmart has pulled in a lot of the 6-figure income households. So, maybe it will hold up. Maybe there will be some damage. We'll certainly see. All right, guys, let's put a pin in it. We've got bull versus bear coming up. Guys, get their example trades put together for Microsoft after a bullish view from Baird. We'll have more fast market after this break.
Look at that bounce right here. See, what's this? Why would there be a bounce right here? Right? What's going on? Might try to break out. What's going on?
What's most exciting for me isn't just the technical breakthroughs. It's the human element. The idea that a dedicated group of engineers is driven by a shared vision. It's incredibly inspiring. If you want to truly understand where technology is headed, join the conversation. Listen to Technically Speaking, available wherever you get your podcasts.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. Are you an active trader? Our active trading webcasts are designed to help you develop a deeper understanding of technical analysis, options, futures, and more. Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or watch on demand. Head over to schwab.com/coaching and start learning today.
Sometimes you could have done better. Same goes for where you invest. Level up and invest smarter with Schwab.
Welcome back to Fast Market here on Schwab Network. Microsoft getting a new bullish call. Baird is kicking off coverage of the tech titan with an outperform rating, essentially the equivalent of a buy. It is assigning a $600 price target, which is one of the most optimistic views on Wall Street. Baird says Microsoft is, quote, leading the AI revolution, thanks in part to its deepening ties with OpenAI. The firm sees Microsoft delivering double-digit revenue growth at significant scale as AI adoption continues to ramp up. All right, let's throw on the trading glasses now. Welcome back in our co-hosts, Tom White and Kevin Hinks. It is bull versus bear time. So before we get to your example trades, we got to talk about Microsoft in the context of this take. Kev, I'll start with you. What's your view on this? Investor reaction seems to be positive at this hour.
Well, remember, if you ask why has Microsoft been selling off lately, because the whole market has, right? And that's why things like this happen. No stock, no matter how good the company is, can hide from a global sell-off. Now, that being said, Microsoft's fiscal first quarter results, outstanding. Azure surging, right? All their parts of their business are doing extremely well. So they did give some mixed second quarter guidance. They did talk about some margin pressure that caused some hesitation in the trading of the stock. Give that with a sell-off in stocks in general, and that's why you had Microsoft down by the 500 level. But long term, all it does is improve the overall valuation of the company and makes it more attractive. Smart investors wait for pullbacks like this, and you see them step in like they did today in Microsoft. I mean, think about it, Diane. Microsoft traded $4.97. It's $13 off its lows from this morning. So again, buying dips in this name. When the market recovers, Microsoft will be a leader.
Okay, Tom, what's your take?
Well, you take a look at it, the stock had been consolidating, then popped in the last couple of earnings events, and then has come back down. And this is all based on, the AI infrastructure build out, how much it's costing these companies. Is it going to be monetizable? Well, the OpenAI deal that they have, they've invested $13 billion in OpenAI, and OpenAI came out with, if they're a $500 billion company, Microsoft share is going to be worth about $135 billion. So that gave the market some clarity now. Kevin mentioned we've pulled back since that was kind of announced since last earnings. And if you take a look at it, it was on an 8-session losing streak before righting the ship earlier this week. That was the longest losing streak since 2011. But at the same time, if you looked at their earnings, Kevin mentioned that their earnings have been good. Growth in cloud in Azure is up near the 30% level. It's taking some market share away from the leader, AWS. But there's still concerns about the spend into their AI investment. Operating margins, operating growth was above 30% across all their segments of their company last quarter. So that's a positive also. But we're seeing some consolidation after that slip from, above the 550 level just about a week and a half ago.
Okay, all right, let's get into these trade examples. Kev, why don't we start out with yours? What's your approach today?
Mine is basically the options equivalent of doing a covered call strategy. So I went out to the December 5th, gave myself 3 weeks out to the December 5th expiration, bought the 510, basically the at-the-money call in Microsoft. And then I went to, not this week, but next week, the November 21st, and sold the 525. Lined that up with the expected move of about $14.50, buying the at-the-money, selling 14.5 traders round, so selling the $15 higher strike. This is just your, a a long call diagonal spread. It's in the calendar spread family, but that embedded vertical spread, that 10-25 vertical spread, gives it a delta of about 30, Diane. So buying and giving myself one opportunity to extend duration into the middle week. So spending about $8.70. It's trading about $9.45 now. And by the way, I've already moved the strikes higher. So this is a stock that jumped off its lows and is higher now. This diagonal now trading about $9.35, Diane. Tom?
Yep. Let's go ahead. December 5th weekly option. So 3 weeks to expiration on this one. You're going to buy that at the money 510 strike call. It's got the higher delta. You're buying Vega, right? Because you're buying an option that's further out. And then in the near term, November 21st, monthly cycle that expires in 7 days, sell the 525 strike call. So a bullish $15 wide call diagonal. It's 2 weeks wide between the two option series. The debit you pay is going to be your risk. We've got 870 here. That's where it was trading earlier. Now trading about 940. But the debit you pay is going to be a risk. And even if you pay 940 for this spread, it's still less than still less than the width of this bullish call diagonal. Now, where's your break even? Where do you start making money on this? Well, you can see here from the risk profile, at or near that 525 level is going to be the most potential profitability on this one. But anything maybe above the 514, 515 level is going to be profitability. As Kevin mentioned, you have that one opportunity to roll into the November 28th weekly cycle. You collect credits on that. That increases potential profitability. That reduces risk. And then you'll have another opportunity to roll into the December 5th weekly, which would create a bullish call vertical on that. The idea here is the market's open. You can roll those options. You collect credits. You increase potential profitability. But this is definitely a bullish trade. You definitely need the stock to move above maybe 514, 515 to start getting some profitability on this trade. So there's the bullish side of this. I looked at something a little bit more passive than Kevin, and my price is probably going to be wrong because the stock's up about $3 from when we looked at this earlier. But I went out to the November 28th weekly cycle, Kev. So 14 days to expiration. I'm just going to sell an out-of-the-money passive neutral to bearish call vertical. If you think the stock's going to continue to consolidate, maybe even pull back, but hey, maybe I can be wrong. It can go higher and I can still be profitable. Selling the November 28th weekly 520 call, buying the 530 call short $10 wide neutral to bearish call vertical collecting. I've got 210 credit on here. You probably collect 230 on it right now, which would raise your break even. If you collect 210, takes your break even up to 522.10. That's about $12 out of the money to the upside on this one. And Kevin, this is one of those strategies where, hey, you're not like uber bearish on this stock, but maybe you own the shares, or maybe you're speculating that the stock's going to at least consolidate. Maybe it can go a little bit higher, but as long as it remains below that 520 level, you're going to be profitable on this one, Kev.
68.8% chance of finishing out of the money, despite only being about $10 above the market and with an expected move of about almost $19. So still one that is, like I said, gives you plenty of room on this name. Now, you want to be careful, right? It's already trading higher than when we looked at it, just like the diagonal is trading higher. That's what happens when the stock goes up. So this one, you're hoping for kind of a stall or going up a little slower. Next week's going to be a big week for the market and for stocks in general. It wouldn't surprise me, Tom, if next week in Microsoft, they'll be right now for the Nov 21st expiration, there's an expected market maker move. That's how important NVIDIA's earnings are going to be for the rest of this sector. Next week's going to be a big week, and they'll all travel. The global trade will travel off of NVIDIA, but I think next week's going to be a high volatility week again, Tom.
You make a great point there because, a lot of these tech companies are probably going to move in unison or in correlation somehow to what happens with NVIDIA and what happens to the overall market due to NVIDIA earnings. But Diane, as Kevin mentioned, might be a volatile week next week due to that earnings. event. But at the same time, both of these trades are risk defined. I think that's really key.
All right, as you mentioned, risk defined. That's the approach there. Thanks, guys. Coming up, we've got cash tags. The team from Likefolio will be along with new sentiment data on strategy. It's under pressure today amid some pressure we've been watching in Bitcoin. Keep it right here on Schwab Network Fast Market. We'll be right back.
I'm Jane. And I'm his mom.
Sometimes, you could have done better. Same goes for where you invest. Level up and invest smarter with Schwab.
I'm Sam Vardis, live from the New York Stock Exchange. When the market moves, we're on it. Getting the reaction, the strategy, and sentiment in real time. Stream Schwab Network at schwabnetwork.com.
Trading at Schwab is powered by Ameritrade, giving you even more specialized trading support. Connect with the Schwab Trade Desk, our team of passionate traders ready to tackle your trading questions, no matter how complex. Plus, get 24/7 live help and access support by phone, email, and in-platform chat. Trade brilliantly with Schwab.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. Are you an active trader? Our active trading webcasts are designed to help you develop a deeper understanding of technical analysis, options, futures, and more. Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or watch on demand. Head over to schwab.com/coaching and start learning today.
No politics, no spin, just the market from open to close and beyond. Streaming 24/7, any screen, anywhere at schwabnetwork.com.
Welcome back to Fast Market here on Schwab Network. I'm Diane King Hall alongside Tom White in our Chicago studio. Time now for our cash tag segment, taking a look at strategy. For that, we want to bring in our next guest, and that is Andy Swan, co-founder of Likefolio. So, Andy, thank you so much for joining us. Happy Friday. We've been watching strategy alongside Bitcoin today because we've been watching the Bitcoin weakness, and we know often strategies, formerly known as MicroStrategy, can be a proxy. So shares are under some pressure. There was a rumor that Michael Saylor was offloading Bitcoin. He tweeted today, or posted on X, however you say it now, quote, "We are buying." I'm interested to know when you look across your data, recent data, how strategy stacks up.
Well, it's interesting. Bitcoin, it feels like panic time. It's down from 126,000 to 96,000. But if you zoom out just a little bit, Bitcoin is still up approximately 50% since before the election a year ago. Still a very strong asset, but MicroStrategy or strategy, MSTR, is under pressure because Bitcoin is down, but it's also under pressure because there's just simply a lot more competition for what they do. There were years and years from 2020 essentially till 2023, 2024, where strategy or MicroStrategy was the only proxy that an individual investor could use in the stock market to get exposure to Bitcoin. But that has changed dramatically. Now we have all the Bitcoin ETFs. We have other Bitcoin treasury companies that are competing for those same dollars. And while the pool of dollars is expanding, a lot less attention is being paid to strategy as a percentage of that whole. So I think that's the biggest thing, that the biggest takeaway here is Bitcoin's under pressure, strategy's under pressure, but now we've got strategy to the point where its Bitcoin holdings are essentially the same value as its market cap. It was before you were paying a very significant premium to have that single exposure to Bitcoin in the stock market. That's gone away. Now we've got strategy at around $200. It's right in line with its Bitcoin holdings value. And so it's become finally a little bit of a value play here.
Andy, that was kind of the topic that I was going to bring up, because it's actually the market cap of MicroStrategy right now, or strategy, is actually lower than it, or just above its Bitcoin holdings, right in line. That's a concern, right? Because there's ETFs out there now that you can get into Bitcoin. More firms are allowing more cryptocurrency trading. That's a positive here. But when you look at Bitcoin as a whole, and there's a big high correlation, it's finally the price of strategy versus Bitcoin is at the widest level that it's been over the last couple of years here. Is that reflective that, hey, even though there's competition for maybe money going into crypto, at the same time, maybe this is a good opportunity for strategy, especially if we see some consolidation or maybe a turnaround here in Bitcoin itself?
Yeah, I think a turnaround in Bitcoin itself would obviously be very positive for strategy. But beyond that, I want to kind of take you back. In August of 2020, when MicroStrategy announced it was buying Bitcoin and putting it on the balance sheet and transforming their entire business, the stock was $14. 2 years later, December of 2022, the stock was $14. Michael Saylor has a history of his vision being too early for Wall Street. And I think that's exactly what's going on here. I don't think that strategy is purely a proxy on Bitcoin. I think strategy is essentially becoming, a central bank for the digitization of money. They own 4, maybe 5% is where they're going to end up of all the Bitcoin that will ever be printed. And when a organization owns 4 or 5% of all of the hard money, we call that a central bank. And you can start to see that strategy forming out as they put these preferred products onto the market. STRC is out there paying a 10.5% tax deferred dividend. It's essentially acting like a money market account for people. If you believe Bitcoin is going to be a central part of a new digital monetary global system, then strategy once again is very far ahead of the game. If you don't believe that, then strategy is a proxy for Bitcoin, and it's a binary bet. So you just have to figure out which side you're on. And if you believe that Michael Saylor once again is ahead of Wall Street by years, then probably decent opportunity here to start picking up some exposure.
But there's concentration risk, right? And then especially when you see the drawdown in Bitcoin, especially if it gets, further, it could potentially impact MicroStrategy or strategies, ability to service debt, because that's the other thing, they've issued debt as well. So how do you think about that?
Yeah, the way I think about it is very similar to if you were investing in someone in an organization that was buying, property, real estate buildings in Manhattan. You have, and they're offering to pay you dividends if you loan them the money to do that. The way that you get there is that you believe the underlying asset is ultimately undervalued, in this case Bitcoin, and is going to go higher. If you believe that, then the debt obligations, the dividend obligations that they have into the future become very, very small as Bitcoin moves higher. If Bitcoin doesn't move higher, if it doesn't pan out, if that real estate development project doesn't work, then you're in trouble because the entire organization has levered itself to future obligations. So you really have to believe, in order to invest in strategy, you have to be able to understand and accept high volatility, and you have to be a believer in the core principle that Bitcoin becomes a transformative part of a new digital money era.
Okay, Andy, I think I know the answer to this, but I'm going to ask you, point blank, because of that correlation we talk about, right? If you look at Bitcoin and then MicroStrategy, if you like Bitcoin, right, and you guys are probably pretty positive on Bitcoin, according to your data, that just means that maybe MicroStrategy is a little bit oversold here?
Yeah, I think that it's finally gotten, like we talked about before, it's finally gotten to the point where the multiple to net asset value is low enough that you're not paying an extraordinary premium over Bitcoin. And so, again, if you're ready for the volatility that strategy offers, you have to be able to accept that. But as an exposure to Bitcoin, as a levered exposure to Bitcoin, I think that it's finally at a price here that starts to make sense, and at a ratio to Bitcoin that starts to make sense at this point. So, after about a year of very, very troublesome, returns and strategy, I'm starting to see light at the end of the tunnel, especially, as we compare it to Bitcoin. So, and yes, we are very much bullish on Bitcoin and have been for a long time.
All right. Thank you, Andy. That's Andy Swan, co-founder of Likefolio. Appreciate the deep dive there. Now, for the trading perspective on all things strategy, I'll yield the floor to you, Tom. We'll bring Kevin back in here. Tom, final thought before you guys get to the example trade.
Yeah, you look at strategy and you've got to look at Bitcoin. I mean, the correlation's there. And as I mentioned, it's broken off from that correlation a little bit where strategy is underperforming. Andy mentioned, the ability for investors and traders to look maybe elsewhere when this was the proxy for Bitcoin for years. But Kevin, some volatility today. Stock got down to under 195 bucks today, high of about 108.80 to the upside. But look at that chart right there. I mean, the pullback's been pretty significant. How do you want to look at this one from an example trade?
If people do two things, if they, one, notice that strategy's beta is 3.2 beta, that tells you it's going to move. Also, if you lay the chart of Bitcoin over strategy, it shows you that strategy moves in line with Bitcoin. In line. So, therefore, based on that, tell me where Bitcoin's going, Tom. I'll tell you where strategy's going. So, if I don't know, which I don't, my goal is to not be a bug on the windshield of this stock moving in one direction or the other, frankly. And that calls for a strategy where you make money if the stock moves in either direction, and you lose money if the stock stays right here. There's two ways to do it. You could do a long iron condor, or you could do the 1/2 back ratio. And so I chose, in this case, the back ratio spread. I went to the November 28th, so I gave myself a little time. I sold the 175 call, Tom. Now think about that. That's $30 in the money. The expected move out to then, about $27.50. What did I buy against that? I bought 2 of the 200 calls. And so I've got short one, 175, long 2 of the 200 calls, which are already a couple dollars in the money. What did I do for that? I took in about a 315 credit on that spread. It's already out to about 350 credit. So I'm taking in a credit. I've got, if the stock were to break down towards 175, I don't lose money. But on the upside, Tom, if it were to rally significantly, I've got an extra call unit that gives me positive gamma and unlimited profits on the upside.
Yeah, let's break this one down. We talk about back ratios, just not that often, but this is that strategy where it's a need a move type of strategy. You can see here from the risk profile. Let's break it down. November 28th, weekly options, 14 days to expiration. Going to sell 1 deep in the money, 175 strike call, buy 2 of the slightly in the money 200 strike calls, collecting. We've got 315 credit, might be a little bit higher than that right now. But if you collect that 315 credit, what does that mean? Well, below the downside break even, which is 178.15, that's how much you can make. $315 per 1/2 spread that you put on. Now, Kevin mentioned the upside exposure is where you start to really profit on this one. And that's above the break even of 221.85 to the upside, where you can have infinite gains if the stock turns around and continues to move higher. That's about $15 above the current share price. Kevin mentioned that big beta in this name. The beta, the S&P 500, which is the pinnacle, is 1, right? So 3.2. So it moves triple what the S&P 500 does on a percentage basis. So keep that in mind. That's a dynamic number. The beta is also. Keep that in mind. Now, where do you lose on this strategy? Well, you lose if the stock sticks around the 200 level. Per spread that you have on, about $2,185 in risk on that, but that's right at or near that 200 strike. So you don't want it to stay there. You want it to go either below 178.15 for profitability, you get to keep the credit you collected, or go above 221.85 to the upside. That's where you start getting some real gains because you have that extra unit. Now that if you didn't have the extra unit, right, it would just be a short 175 200 call vertical. So that $2,500 in risk, you have to add the $315 that you make on the credit that you collect. That's why the risk on this trade is $21.85 if the stock sticks around 200. But Diane, this kind of takes advantage of with any expectations that you might have that either strategy falls out of bed and continues to move to the downside, or rallies to the upside pretty handily on that. But you need at least about a $16 move to the upside to get those gains on that side.
I started keeping a tally, you guys, on how many times we said strategy, whether it's the company or the approach. I lost count. All right, good stuff there, guys. Coming up, the breakdown, we are taking a look at Circle after one analyst becomes more bullish on the stock. Are investors circling back? We'll see. We'll be right back.
Stay connected to the markets with Schwab Network.
Tune in 24 hours a day, 7 days a week on SchwabNetwork.com
and on all your favorite streaming services. Schwab Network.
Available anytime, anywhere, on any device for free.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. The Platforms and Tools webcasts are designed to help you broaden your knowledge of platform features and resources available from Schwab. You'll learn tips and tricks to help navigate Schwab.com, Thinkorswim, and mobile-based platforms. Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or watch on demand. Head over to schwab.com/coaching and start learning today.
Welcome back to Fast Market here on Schwab Network. I'm Diane King Hall, live on the floor of the big board. Before we get to the breakdown, let me give you a check on where markets stand as we get closer to the bottom of the hour. The S&P 500 has gained right now, better by 0.4%. Energy and information technology, the leaders there. At the top of the leaderboard, Micron, DoorDash, and Supermicro for the S&P 500. The Dow lower by just about 0.25%. So once again, we are off the lows of the session. NASDAQ 100 has a gain of more than 0.5%. So too do small caps. Russell 2000 higher by 0.5%. Investors are circling back to Circle today after received an upgrade from the team at Baird. The firm is boosting its view on the company, upgrading Circle to outperform with a $110 price target. The stock has been stuck in the penalty box in part because of that lockup expiration this week that allowed early investors, they could offload shares. Baird says the coast is clear now. It sees a few factors as drivers, including growth in USDC stablecoin circulation. Time now for the breakdown. For that, we want to welcome in George Sillis, senior markets correspondent, to take a closer look at Circle. All right, so how do we look at this one in the context of this note that we see from an analyst today?
Well, I think this is an interesting call. I mean, I was just looking at the price action since the company went public back in June, and it's barely higher from the opening price. So we've seen this huge run up in
how
Circle.
far they pulled this back.
That was essentially part and parcel of what we saw with Bitcoin and the crypto markets, which had done extremely well. All of them are drifting to the downside as of late, with Bitcoin actually breaching below 100,000 again. But nonetheless, Circle is essentially, one of the leaders, if not the largest player in the stablecoin markets. They essentially have about $62 billion in treasury and cash, which are used, of course, to back the issuances of the payment processing coins and stable coins that they have about 25% market share in. They're also applying for a bank charter. For what it's worth, they seem to be moving more towards regulatory legitimacy in the stablecoin framework. But nonetheless, if you look at the Baird analysts, Diane, they've actually got an outperform rating on the stock. They did maintain their price target on the name to $110. And they talk about the underperformance since essentially June. That is primarily due to the lockup, which the company denoted expired when they reported earnings earlier this week on the 13th. That has created some pressure on the underlying shares. But the Baird analyst is still kind of constructive, considering they say that the valuation looks reasonable. The lockup overhang may be now abating, considering, again, some of the insiders and early adopters are selling some of their stakes in the underlying security. But nonetheless, I think the valuation argument by Baird makes some sense. If you look at the aspects of the analyst consensus, the average target on the name is about 161, which effectively is nearly double where we're at right now. A high end up target is $280, low around 75. So we're actually near the low of the target range for the analysts. And one of the things I did notice is if you look at the market capitalization of Circle, around $19 billion, as well as trailing sales around 2.4. It's running around 9 times trailing sales, but the estimates for 2026 are $3.3 billion. So from a price to sales standpoint, one would make the case, or could make the case, that this name is considerably cheap, as well as the fact that going into 2026, they're expected to earn around $1.81 per share, which places the earnings multiple around 63 times earnings.
We're going to see, though.
Okay, so it's interesting, this view from Baird, because at the same time, you have Mizuho out with a different perspective today, and they say, quote, in our view, Circle is likely to see downward revisions to consensus estimates over the coming years amid declining rates, less stellar proliferation than many are hoping for of its USDC stablecoin. So it's a very different perspective, and they've got an underperform rating on this, and they've lowered their price target to 70 from 84. So you've got different, very conflicting viewpoints out there on this one. George, final thought?
Yes, and that's the thing. If you look at the range, the variance from low to high, in terms of the rankings, they are quite wide. As you mentioned, 70 on the low, but 280 on the high side. So that gives me an idea, or you could make the case that there's contextually some challenges in visibility in the adoption of stable coins, more ubiquitous natures, especially with the major commercial banks, depository institutions, would still use, from a payment processing standpoint, the traditional SWIFT system. So that's something to keep in mind. But irrespective of that, there are some balanced valuations around that 160 at the midpoint, but you're also going to see the variance quite wide because of the uncertainty around the crypto markets right now.
All right, thank you, George. That's George Sillis, senior markets correspondent. Excuse me, tongue twister there, George. Have a good weekend. Let's get Tom and Kevin back in here. So, Tom, you've got the example trade in Circle. What's the approach that you're taking?
Yeah, stablecoins becoming more mainstream, right, in the financial industry. And you mentioned, the upgrade today from Baird. Just yesterday, J.P. Morgan double upgraded the stock from sell to buy. So
look at the overweight. Right
so
here, y'all.
Look at this. The technicals are reflective of oversold. The RSI about 27, so that relative strength index. Below the 30 level, so considered oversold. I mean, this stock hit $298 about a few weeks after its IPO. IPO price was 31. It opened up at 69. So it's been a falling knife at this point. But like George said, the we're getting past that where early investors were able to sell some of their shares. So maybe that's going to right the ship on this one. So I looked at a strategy that takes advantage of maybe some upside here if you think that circle is going to rebound here, and being directional about it, where I've given myself some flexibility as far as when I can or when I have to get out of this particular trade. So going out to the December 19th, the monthly options, 35 days to expiration, so I've given myself plenty of time, 5 weeks in this position. Buy the slightly in the money 80 strike call. It's got the higher delta. It's going to react more like the stock. Then against it to offset some costs on this bullish call purchase, sell the 100 strike call. So a bullish $20 wide call vertical to the upside. You're going to pay roughly about a $6.70 debit on that. It's trading closer to $6.10, so you can get a little bit cheaper because the stock has pulled back from when I was looking at it earlier. If you pay $6.70 debit or $6.10 debit on that, that's going to be your risk. So about $650 roughly thereabouts. And if you pay that $6.10 for this or $6.70, it takes your break even up to $86.70. On a percentage basis, it's not that big of a move. But Kevin, on something like this, I think it's key when a stock looks oversold. It doesn't mean it's going to rebound right away. That you give yourself maybe some duration on this type of trade.
Yeah, you've given yourself duration. Your break even is the long strike, the 80 strike, plus whatever debit you paid for this spread. So if you paid $6.50, it's $86.50. The highest it can go, $20. So you're looking for some type of a move. You got to have a move on a vertical spread like this, and you're looking for something that could be as much as a triple if you're right, Tom.
Yep, that break even just about $3 above the current share price. So on a percentage basis, not that big of a move. But Diane, on this type of trade, say I get that move to $90 or $95 ahead of expiration. As long as the market's open, you can maybe start parsing this or closing a portion or all of it ahead of expiration.
All right. Well, the good stuff there. That's going to do it for us today on Fast Market. I'm Diane King Hall alongside Kevin Hinks and Tom White. Download the Schwab Network app. It is in the App Store, and tune in 24/7 on SchwabNetwork.com. Stick around. You've got Next Gen Investing with Alex Coffey and Jenny Horn coming up.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. The Platforms and Tools webcasts are designed to help you broaden your knowledge of platform features and resources available from Schwab. You'll learn tips and tricks to help navigate Schwab.com, Thinkorswim, and mobile-based platforms. Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or watch on demand. Head over to schwab.com/coaching and start learning today.
Welcome to Schwab Network, where real-time market coverage meets expert strategy.
From the opening bell to the closing bell, we've got you covered.
Get inside the minds of pro traders.
My point is that they're getting a higher rate of change in sales based on their guidance, but not the same rate of change on EPS.
Follow the biggest headlines, live analysis, breaking news, and sharp trade ideas minute by minute.
With shows built for action, we break it all down in real time with speed, accuracy, and precision.
I think one of the most important things is you're making a play in a risk-defined way here going into earnings.
So that would be a further downside area to watch.
Smart insights, actionable data, veteran traders, and trusted financial journalists streaming live and on demand.
Schwab Network, streaming 24/7, any screen, anywhere, free. SchwabNetwork.com. I'm Nicole Petalides at the New York Stock Exchange. Live interviews, market movers, and real-time coverage right from the floor. Subscribe now at schwabnetwork.com.
Welcome to Next Gen Investing. I'm Jenny Horn alongside Alex Coffey. And Alex, to make sense of these markets today, we have seen actually a pretty choppy session, but right now we are at least higher in 3 of our 4 major averages. The only laggard is the Dow, which feels honestly very random, but we've seen some mixed earnings this week. It's been a quieter week on the earnings front, as well as economic data, which is expected to, of course, ramp back up as we now have an open government finally after 43 days. But tech weakness has, I think, really been the biggest theme we've seen this week, as names like NVIDIA, I mean, all the Mag 7 with the exception of Apple, I believe, and Microsoft are set to close this week now lower.
Okay. There's a lot of ways that we could go with this, right? First off, let's just take a second and acknowledge how impressive this intraday turnaround's been, led by some of the most important parts of the market within technology. But you could look at the fact that, earlier when we were on the panel this morning, Jenny, only 10% of the NASDAQ names were higher. It's now 52% of the NASDAQ names in the NASDAQ 100. But this chart that we got up, this 1 day, 1 minute of NVIDIA, yeah, the stock's come down quite a bit in just the last day, but intraday, going back to this morning, we're looking at a stock that was trading around 180. It's now basically 90. That's $250 billion intraday swing. That's the story. I don't want to oversimplify it, but we talk about the importance of NVIDIA, and the reason so much of our analysis begins here is just the sheer size of this company. And if it's moving that much in just a few hours, it can explain why the market went from being on the ropes to carving out a pretty nice end of the week.
Yeah, actually, as we do check in on week-to-date performances now, we do see the S&P is expecting to close out with a modest, but still 0.3%, 0.4% nearly gain. The Dow also expecting about a 0.6% gain. The Russell 2000 is actually our laggard of the week, down about 1.6%. And the NASDAQ also about 0.1% gain now on a week-to-date basis. So 3 of our 4 major averages are, at least as it stands right now, pacing to close out higher, which feels honestly kind of crazy considering the road it took to get here, of course.
Yeah. Look, there's still time left in the day. I guess that's the thing, is I don't want to be the mush here that sends the market back lower. We still got 3 hours left in the session. The market is still on balance, going to be lower on the week. It's still going to be off its highs for a lot of these stocks. But you look at it and you say, it looked like it was going to be a pretty dicey open. It looked like we might be, reeling into the weekend here, and that could have set up a very, very different marketplace, next week. But you look at volatility, still up a little bit on the session, but it's come down to 20.3 for the VIX. It was closer to 22.23 this morning. There's still a lot. There's still fear. Let's not discount that there's still fear. There's still a chance that this market could turn back around. We're not out of the woods. But at least we slowed down the pace of the drop. And sometimes that's the best thing you can have happen if you're a market bull, is just to see it disrupt a little bit. Because the biggest risk when a market has gotten as extended as this one is you take the elevator down.
You do take the elevator down, and you're right. That would definitely, I think, be a great way to summarize what we've seen this week, because it, has not felt like a winning week by any means. But also Also, following last week's weakness, a bit more steadiness in this market, I think, is definitely welcome. And again, it hasn't felt steady, but we're closing things out on a more perhaps steady note. But to Alex's point, a lot of time left in this session today and, of course, in this week. But we'll get to our top movers of the day at the top of our show today. We will also be discussing Lowe's and Home Depot for our Chartmaster today, as they both have earnings next week. Home Depot first, followed by then Lowe's. We will also dive into, of course, the week that was for all things NVIDIA, as we're pacing to close out with some losses here on a week-to-date basis for now the second straight week for NVIDIA, which is unprecedented for the real barometer of our overall market health. But then we'll discuss holiday shopping expectations, as well as closing things out with under 30 today, as Under Armour and Steph Curry are breaking up. So we'll talk more about that fun story later on in our show.
Yeah, we'll ultimately see what that looks like. There is market impact for Under Armour, but it just seems like Under Armour, and we'll talk more about this with George, has slowly but surely kind of lost some of that brand relevance. It like peaked out in like the mid 2010s. You had Tom Brady, you had Jordan Spieth, you had Steph Curry. I don't know what they have now. So looking forward to that. But let's talk some I guess entertainment stocks. Is that how you could different experiences within here too? But starting with Warner Brothers Discovery, so much infighting kind of right now within streaming. But I don't know if it seems like Warner Brothers Discovery has stayed out of that.
You know, it has, and actually, we'll be very curious to know what this company looks like, as it does right now prepare for several bids, as we're seeing per reports we got from the Wall Street Journal. So right now, seeing them bidding more that could upend the overall media conglomerate that could start as soon as the next week. Paramount, Skydance, Comcast, and Netflix are all readying their bids for the company. Again, according to these reports we got from the Wall Street Journal late Thursday. Now, the deadline for submitting non-binding first-round bids is November 20th, and Warner Brothers hopes to have this process completed by the end of the year, per these reports. So Paramount is an interested buyer in, of course, the entirety of Warner Brothers Discovery that has a market cap of roughly $55 billion as it stands, while Comcast and Netflix would be bidding for the studios and the streaming rights, which covers the rights to movies like Harry Potter, Batman, as well as the HBO Max streaming platform. So some of my very favorite viewing is really under that umbrella. But Warner Brothers, Paramount, and Netflix have not responded to these allegations. So again, it's just somewhat of one speculative report at this point. But we do know that media companies have been eyeing deals this year pretty substantially in a bid to beef up their streaming portfolios, as legacy TV viewership continues to really hemorrhage. So continuing to see the shift in evolving media landscape. I do know there's like antitrust concerns I've heard from analysts regarding Paramount buying the entirety of Warner Brothers Discovery. So I'll be curious to know what this looks like, because right now it does feel like trying to guess where the direction of some of these bids go is as good as anyone's guess.
Yeah, so it's like while they're not getting along, there's also consolidation happening too. And I think some of that's going to need to happen. There's been so much disruption that's changed the economics of traditional TV. And outside of Netflix, every other company is trying to figure out how to really effectively monetize their streaming assets, at least enough to offset some of the drags of their legacy TV deceleration over the years. But I saw, potentially a $75 billion price tag for the Warner bid from Netflix. So this could be a massive, massive deal if it goes down that path. But clearly the market thinks that there's something to this when you look at the performance of WBD really going back over the last full quarter, 3 months.
Yes, ma'am.
Yeah, and I will be very curious. I know that we're diving into Netflix now next, but Netflix has said previously that they're not really interested in the strategy of like acquiring. They're more interested in the strategy of boosting what they already, of course, offer from a content perspective. So this would be.
Does that change if HBO's studio is suddenly something you can take in-house? I think that there's always situations where it changes, but go ahead.
No. That's a really good point, because especially because a lot of their like flagship programming, like I tend to think of like Friends moved from Netflix to HBO. We've seen a lot of like shift, obviously, as like the rights have changed. So I mean, this would not be a bad move for Netflix. It's just something that they've previously said they were against. So I'd be curious to see now Netflix with hopefully a more mature, more cash-rich position if they're interested in the M&A game.
Yeah, totally. I think
yes. Did you hear me earlier? I said hello.
Yes, ma'am. My mic was muted. I don't know why.
Week as well, so
you
10 for 1,
okay?
be on the lookout for that. When you wake
How
up
you
one
doing?
day Right.
Well, better now. Like, cause so this morning I had like had to get my vehicle serviced. I needed like an oil change and a tire rotation. So my appointment was scheduled at 9:30. I got there at 9:15 because I know you have to stand in line to get checked in and all that. So 12:30 rolls around, 12:36, and then I see my vehicle like literally right there in the front where I'm at, like they had already finished it. So there were some people who came in behind me, and they got a chance to leave, and I'm like, So I started packing up my stuff, and then so I went and waited patiently in the line, and then I got a different guy that I had from this morning. And I told him, I was like, look, I've been waiting here for a while. My vehicle has been sitting there for quite some time. I was like, can I go ahead and just get it so I can leave? So then the guy was like, you know what, you have been waiting for a while, and he gave me like a big discount. I was like, okay, I'll take it. I ain't gonna argue. So yeah, that actually made me feel better. Yeah, but then I realized, oh shoot, got to drive home because I didn't want to have to do a session, while I was away from the house and I was like out there. I would have to definitely make it where people don't hear your name. I would have my earbuds and stuff in. I didn't want to do that. So then I'm driving home and stuff, and then I was like, oh shoot, got to use the restroom, got to nibble on something real fast. And I was like, you know what? Let me tell him I need like another 5 minutes or so. So that's why I texted you.
A couple things that I think really, one, it highlights who Netflix feels.
But I'm good now. Anyways, enough about me, Sheldron. How are you feeling today?
And so they feel they're competing with video games.
I almost forgot about
this. So how do you eliminate?
You almost forgot.
Yeah, I was making some lunch, and I was like, dang.
So fascinating stuff. I do think if this Warner Brothers.
You know what it was? We talked yesterday.
That some of these headlines suggest.
That might have got you.
I don't know.
No,
streaming giant.
You don't think so?
Dominance suddenly buys another
major. I'm in the business now, just moving fast. I got up early at like 6, 7.
That's always, I think,
been working out. Went for a walk.
We're well away from that, but
talking to a bunch of people, doing a whole lot of stuff.
Here's and talk Disney.
Okay.
Disney, of course, had its earnings yesterday morning, and we're seeing
went to bed early, got up early.
Disney shares.
Okay.
As JP Morgan did say,
right after I talked to you, I didn't stay up too much longer. I had to get sleep.
You did?
They said
okay, I don't blame you. And I will say this. Yeah, it would have been a super early day for me, which it was technically because my boys had sport. But yeah, it must have been a day to go to bed early because I did the same thing yesterday. So I think you're right. That was a good day to do it.
And they increased actually their earnings estimates, maintaining an overweight rating.
All right, you said you took a walk, and then what else did you say you did? You went to bed early too.
Yeah, I went to bed early and got up real early and started working out.
That's what it was. Okay.
Raised my stream.
Softer first quarter guidance is cascading into now these earnings revision fears, and they think that while the recent guidance track record
they're talking to everybody about kids' mom.
They did say that right now they believe that
I know, and I couldn't believe it. Like when you sent that little message yesterday and showed the picture, and how she still refunded it. Maybe you might be able to talk to her one-on-one when you get a chance, like on the phone, or like whenever you're trying to pick them up. Maybe you can have like a few minutes, just you two, and you can maybe like try to process, like, hey, that was just a little bit that I had, but I still wanted to give them that little bit. Like next time, can you go ahead and try to keep it, whatever. I don't know. However you all communicate.
But how much pressure is Disney
after
this big drawdown post the earnings report?
But how did that make you feel?
Anybody give me a dog, I'm taking it.
But nice
and
looking
investing in it.
Still a massive company and a drop in the
See, here's the thing. There's this guy, I don't know if you are you familiar with Facebook?
Yeah.
There's this guy named Damon Darling. Have you ever seen him or heard his name?
No.
Well, he's like a famous little comedian guy and stuff. He travels all over the world. Well, evidently he has a lot of money too, and so he's this black guy. So what he does is he'll go to like Walmart and all kinds of little places. And he'll be like, "Hey, you got $1?" And then people will say if they do or if they don't. He's like, "Oh, okay, well then you're poor." And just not being where he's calling them poor, but he's joking and stuff, and he's getting recorded. So then he's like, "Here, take this." He'll give him $1, and he's like, "You know what? Take this," and he'll give him a stack of money. So she need to be careful on that where she's trying to reject from people because you never know who you're rejecting from.
Man, I said a bunch of stuff like that too.
But that's just, I don't know. But how did it feel though when she kind of like rejected the money that you sent?
It wasn't for her to reject. It was just for her to give to the kids and stuff.
I know. So how did that make you feel?
And at some point,
like,
a consumer's
if the judge or anybody important has to look at this,
alphabet.
She just fucking stupid.
Hey, you can't figure this out. I'm gonna go to
Nice
Fubo
bite.
or whatever it is.
Yeah.
And so something to think about. Let's talk StubHub. I don't know if we talked StubHub before.
You know, StubHub is a relatively new name.
Did it
to
make you
public
mad or
markets.
anything?
It did IPO.
No,
I mean,
just like
that's I'm sure why we haven't discussed this.
it was just trying to apologize and tell them tell my kids what I'm trying to do. We over here doing this.
And not giving any
Trying to get closer to fulfilling all our goals and dreams and this life here while we got it.
That figure actually did beat
And
consensus. Adjusted EBITDA also marked a 21%
you just negative.
improvement. Net losses though stood at around 1.3 billion versus just 30.
I told her, I said, why you do that? I wasn't even for you.
By the 1.4 billion
I tried to call around 6. They didn't even answer the phone.
That can at least speak to like the massive earnings miss.
But she did all that with it.
But you know what?
Than that, no fourth quarter guidance was given. Management
One thing led to another. That's why this business has started, is growing. So it's just like, it's all right. Everything gonna work out. We I talked to my lawyer. We got what we trying to do. And we just gonna present it to her, and maybe she'll
Many said this was due to the tough comparison.
help us come to an agreement and understanding on what we're gonna do moving forward past this little small point. But it's really all about the big time frame. She's just like, on the 1 minute, she's just tripping.
So that's, I think, interesting. A real impact
Well,
on the
it's longer down the line,
But you
and
look
as
at
life goes on,
We've talked so much about the successful.
we gotta have a system to where we gonna both be able to coexist in our kids' life.
Percent of its value from where
And,
it began. So
get some
something
ROI, right?
is perhaps
Yeah.
more risky side of things. IPO.
I'm just playing, but
You're funny.
yeah, for real, it was a joke.
Stocks are starting to underperform
Yeah.
here.
They are, and in the same, we're not seeing that same appetite for some of these new
Okay, you're
entries
good.
into the public markets, which I was so excited about. All things, I mean, finally IPOs, but haven't really seen some of these names at least fare as well in this current market environment. Now we will leave it there for the top of our show today, but coming up next, it's time to dive into the charts as we'll be joined by our chart master to break down some example trades
I've been
and
running
key
around
technical
this thing.
levels in both home
Running
groups
around my
and
place like an
Lowe's
offset.
into their earnings events next
Oh
week.
no.
But it feels good though,
Mhm.
Just trying to get everything together and make it to where I can see them consistently. Because the way things is looking, if we don't do something, it's gonna be rough. They already trying to shut the market down on us, and I ain't gonna let them just shut me down. I'm gonna try to be making some.
What do you mean trying to shut the market down? What are they doing? How do
Actually,
you know that they're doing that?
No, actually, they actually reopened it, but I'm just,
Oh, okay. I was
saying
about
in
to say.
general,
Oh, yeah.
it was closed down, but
Yeah.
I'm about to just do better because I know too much. So
You do.
It's just like, man, we gotta use all that I gotta use all that to get to my kids.
Mhm. Yeah, that's good. I'm glad you're thinking that. What do you think might have changed? Because like at one point in time, you all seemed like you all were great, and then it's just like you kind of like went downhill.
The school, I guess, was having some problems with my nonverbal, my middle daughter. And
Okay.
Stay connected to what
it just kind of, made her kind of scared because she didn't know what to do, and they were talking about,
wherever you are.
trying to, give her medicine or whatever. To,
It's your number one broker with the best full service
It's hard to
wealth
explain.
management skills in the biz.
And we said made her scared. Was it made mom scared about the medicine that she would have to
I
get?
mean,
or?
overall, because like it's a tough subject to where they don't know how to help her in school.
Right.
And the mom thinking that she needs to just take out of school altogether.
Oh, okay.
And just do homeschooling.
A modern approach to
And that's why I said, like, I was just trying to tell her, like,
Whether you're
the reason why she's like that at school in a way is because at home it's different.
Yes.
It's not like you're sitting there trying to help her and spend quality time with her and show her, what to do for the world. It's just that she has, it's our special needs daughter, so we just kind of like, I mean, she's very functional in a way too, so she just kind of gets her way. So that's why I'm saying, like, you can't just let her get her way and just still kind of baby herself around and do what she wants to do. You know, you still have to teach her how to be a kid, and even though she has these developmental delays, you still gotta try to push through it. That's what I'm trying to say.
But don't they have any resources in Shelbyville where they can actually help? Because like they have different programs that can help with. Now, does she have autism or anything like that?
Yeah, she has
Or
autism.
okay, is it autism? Because they actually have programs where people can come into schools and stuff like that, and or they can actually take them to another facility and they can learn how to work with them. So there's different resources out there, but mom's got to look for them.
There are none in Shelbyville.
Oh, okay, that's what I was wondering.
Yeah, that's what's going on. And
okay.
She, you know, she's kind of nervous, and she was, I guess that's what started.
Okay.
And I was trying to hear about it and see how I could get her, her speaking tablet, because she was saying she broke it because she don't want to use the speaking tablet for speaking. She wants to just play on it. And I'm just like, okay, so what? Let her cry it out. You still gotta make her do it. Because when I had my girls, I seen her. We did the same thing and made her do it, and she was communicating like that too. She was able to say her name, where she lived, everything.
Yeah. Okay.
What she wanted to do, like me and the doctor worked with her to where, you know, she was telling us exactly what the heck she wanted to do. I want to play toys. Then we talked back and tell her, no, you can't play toys until you eat some of your breakfast. You haven't had breakfast yet. You haven't had lunch yet. I want you to try this and that and have something to drink. She'll cry and pout. You know, these is my toys. I don't give a F. These are my toys, all that. My tablets, my TV, and you my daughter, you gonna listen to me. But at mom's house, it's like, well, let's just give her a tablet because, oh no, she's crying way too loud. Hurry up and give her a device and get her out the way. And then when she's at school, she's, you know, kind of confused because she's not in that, what she's supposed to be doing. You know what I'm saying? She's just, you know what I mean? So that's confusion on it. You know, I can't talk. I can't tell mom anything. She feels like she knows it all, and I know too little. And she uses everything against me. Real. That's the truth about all of it.
Now, have you ever thought about this? That since there's not as many resources in Shelbyville, like, you know, when you do get the joint custody, have you thought about trying to get her some of the services that we have here in Louisville?
Yeah.
That can help with autism?
Oh, yeah.
Okay.
As soon as I get them, I can get them the same stuff they withdrew from. I can get them right back in and get all that stuff turned back on. I didn't mean to sound so dark, y'all, but baby mama is on some other stuff, and dad is only on the positive, I feel like, in my opinion. Yeah, heck yeah. And it takes a couple of dollars to do it, you know. It don't be a whole lot of money, you know. It's just an Uber away. You know, she can go to doctors with me and with mom, right?
Yeah, that's true.
Yeah, you know, I ain't trying to like take nothing away from. I told baby mama like, well, I feel about it, keep the money and keep everything. Just make it kind of fair to where it might help me need to get them if I need to get them, or get clothes, or have something for them to do. Like I want to take them and go to like the science center, and to parks, to carnivals, to events, go swimming. They love going swimming, but it's sometimes that, you know, I do a lot of stuff with my money. Like I have to buy equipment, I have to buy food, I have to buy clothes. Before you know it, I have to invest, I have to trade, and sometimes the money ain't coming as fast as I need it to be because I'm paying for everything constantly. So that's why I tell her, like, just meet me in the middle a little bit. You can get an agreement in court.
Perhaps you need to go out a little bit further in time to get a credit.
Don't have to worry about it. Like, we can just stay away from each other and have a system going. For real.
Quarter the width of the strikes, 3-to-1.
Until basically you all can somehow coexist and be able to be, you know, where you can have that contact. Yeah, I can see that working too.
Asking this stock just
but you definitely want your kids to be able to see you all having positive interaction.
Right.
Even when the other person's not around, have saying positive comments or no comments about that person at all, because kids pick up on the negativity. So yeah, I think that's great that you are willing to try to go to that extent, even though the other person's not fully there just yet. But hopefully she'll come around.
Yeah, she'll come around eventually, you know. I guess she just want me to step up too, though, you know. let things kind of develop to where
Some definite similarities.
she wants to see that I've grown bigger than what I've shown her. So where I can pick up the kids consistently, I am being, a former good man she liked. And, I could do, maybe I can give gifts. I can always do little things to make her smile, even though it's gonna always make her mad or whatever. She's gonna feel off my kindness, you know what I'm saying? And just, the whole situation with kindness and, being there for them, kids. And, I reached out to her mom's, I talked. Her mom reached out to me. I've been talking to her mom.
Oh,
My
really?
kid's mom. Yeah. I had no problem with them. She said, if my daughter said get him, I'm gonna get him. I said, girl, I want no problems. I love you too. I love your daughter. It just didn't work out. That was just it was a relationship. Every relationship don't work out.
So she wanted you all to work out?
No, she was just talking to me, and I was just telling her about. She just hit me up, and I told her about me and my business and what's going on, and she was just like, "What?" I said, "Yeah, you invest. What's up? I can get you these bread. Come here. We live. What you doing?"
And what'd she say? I'm curious on that.
Man, she got to the chat. Well, first she wanted to make sure it was me. She asked me my kids and their birthdays and stuff.
Okay.
And I was just like, and I started showing her pictures and stuff. And we was talking about the kids and,
which is pretty common, a pretty common situation here.
Yeah,
Our
she's
volume
cool.
profile study is
I reached out to
significant,
my baby
the
moms,
different picture
my
in
kids'
this
moms,
case. Our point of control is
girlfriend's
just
mom. I just told her sorry over that way because I know she's probably going through it.
That is
I
a
think,
key
what
area.
I'm saying, they
Back it up
relationship
again. You said you reached out to who?
Below that green line we mentioned earlier.
My kids' mom's
Your
girl.
children's mom, her
My
girlfriend,
kids,
her
my kids,
Gotcha.
Volume node comes in
girlfriend's mom.
233 or so. That would
Also,
be,
you really the moms are okay with you, but it sounds
No,
like
they're not okay with me. Everybody, they hate me. But I'm saying,
it didn't sound like
I know my kid's mom don't like me.
Okay.
Her girlfriend don't like me. I reached out to the girlfriend's mom.
Oh, the girlfriend's mom. I had to think of
Yeah,
that.
she don't
Okay,
like me
duh.
either.
I had
So
to think about that.
I just was telling her I heard about the relationship and I'm sorry,
Yeah.
that she had, you know what I'm saying?
The same enough looking charts, the
I
same
know what's
enough
going on,
looking
even though they don't know I know
Taking a look
what's
at the
going
same
on.
type of example trade. So Rick talked about 225, 222
Nah,
is kind of
I just
critical
been talking to
line
everybody.
support
Got a lot of friends
zone.
everywhere.
Looking just below that at the 220,
Got community, got that stuff that we building.
in the following week's expiration.
You'll mess
again
around,
for
have another
November
big building.
28th cycle. Very similar behavior. Spread, $1.25 credit, risk 375. Jenny the chance to make 125.
So yeah,
Well, at least you are at least trying to communicate with people. I mean,
oh yeah,
that's a good thing.
They happy sometimes. They got to put being on miserable.
218.75 would be the break even.
I'll do my best to put
together. There have been differences to your
make
point.
a difference.
Okay.
Even if I have to just take a loss, I do take a loss to make somebody smile.
Have both of these examples work out as they are enough alike that they tend to move in
You're gonna get it back for. I'm gonna get it back for my babies. They're gonna be all right. So I'm gonna do everything I can for them. You're gonna live life to the fullest and get everything. And one day,
you
tomorrow.
Go ahead, I'm listening. Go ahead. Go ahead. I want to hear what you was about to say. I was gonna add to it.
We gotta live life to the fullest, get everything in one day, and then do it all again tomorrow.
Right. I like that positivity train that you got going on there. Now, did you know that they're talking about, and it seems like it may be true, they're talking about giving out like little tariff rebate checks?
Yeah,
Stuff
Trump,
like that.
Trump
Yeah.
proposed to, Congress or whatever about the 2000 dividend.
Yeah, so that
The
might
House.
be able to help you. It might be able to help you with your situation that you might have going on, however you use it.
If it comes through, they're probably gonna pass it.
Yeah.
Unlocking the power of think or swim.
Okay.
It might turn on Trump
Award-winning
in a
trading
minute.
platforms. Bring
Oh.
your trades
You
into
think they're gonna
focus
turn on him?
on Thinkorswim.
I'm just playing. I'm
Starting
just
in
playing.
Oh, goodness. Here you go.
including over 400 technical
Now, did
studies.
your
Tailor
food
the
stamps,
platforms
your
to your
your
unique
SNAP
needs
benefits,
with
did they
nearly
ever
endless
stop
customization
at any point? Did
and
yours
track
stop like
market
everybody
trends
else?
up to the
I
minute.
only get 20
Temporarily.
stamps.
Okay, but so you used yours up in
Trade
October?
brilliantly.
I only get 20 stamps for real. I don't even. I told you, as soon as I look, Try to give me some cereal. All my stem cells gone.
Okay, so you at least got to use it. That's what I was trying to make sure you used it up because at one point in time they were saying that if you didn't use them up, then you lost them. And then I know, of course, now it's November, so I was hoping that maybe you got a chance to use yours up, and then now you get a new set. But they don't know when they're gonna
No,
fully
they didn't mess it up. But
fund it.
this is what they was doing. It was stupid.
Okay.
Like I get 25 stems, and during
Okay.
the government shutdown, I looked up, got a message from them. They was talking about, well, we're gonna give you 16 this month, and then whatever. I was just like, what? It went from 25 to 16, and then next thing you know, the government shutdown ended. Now I'm to 25 again.
Okay, now 25.
That's all what happened. I'm just like, okay.
Yeah.
I'll
So
be
how
in.
did that make you feel?
I'll be
When
in.
you had to go through that? You said you eating. Is that what you just said?
No, I'm going to the food pantry.
Oh, okay.
Nobody worrying about the food in there. I'm about to let my food stamps stack up for a whole year. A whole
Oh,
year.
really? Can you do that? They don't have like an expiration date or anything on them?
No, you can keep them forever.
Okay, I didn't know that.
Higher on the week modestly, but with today's move, we are erasing some of the
So that means, yeah, and you think about it, you let it stack up, and you can really have like a good one day. I wouldn't say use them all in one day, but I'm saying like maybe a day or so, being able to like get your kids like the foods and stuff that they like a whole bunch where they're staying a weekend or something like that, get them some cool stuff. That would be awesome.
Yeah.
Making the pizzas and whatever with the pineapples and whatever it is they
That's
like
what
on
I'm
them.
saying. Like, that's what I want. Like, I have three babies. Like, I want it to be where they all gonna have their own different personalities and what they want.
Yeah.
I want everybody to get right.
Yeah.
We are now more than a percent higher, which has taken them now on the week about a half a percent
All
higher.
right, so with the streaming though, let's talk a little bit because it's kind of going back and forth with it. How's streaming going for you online with everybody? Are people like showing like an interest? Is it the same people? Are they coming and going? How's that?
We're still like growing and building every single day. Like, the grind don't stop. I'm telling you, like, don't nobody stop working. Constantly. Trading every single day of the week, investing every single day of the week. We're looking at cryptos over the weekend. All over the place. I'm trying to get back into this chess, puzzles, eating and chess. Call of Duty, 2K, I'm on 2K team. I gotta do all this work, content, put all this work in, generate this income for these babies. You know what I'm saying? It's a lot. Communicating in our discords to the community. Sounds like it's all over the place, but it's a lot going on.
All right, so have you already started playing the chess though?
I had to get back to YouTube. I just came back. I just came. Yeah, I played the other day. And, it's just light. I gotta start light until I get to where I want to start sparring again. And then, I'll get back in my rhythm, and the next thing you know, I'll be ready.
Because don't they have one where you can you make money off of playing online too? Like you have tournaments and stuff like that?
Oh, absolutely. I just became chess affiliate and through the program, and then they have a streamers program over there. So basically, anybody who streams can join the streaming community, join the streaming tournaments, and they have like special like, runner-ups.
What stands
like,
out to me is I was just
prize
looking
money
at
just
back
for
at
the
the last several quarters over the last
My
couple of years in
issue
terms of the
with why I
actual
stopped
reaction
playing
in
is because
price.
I was getting
Because
this
it's
forbidden
still in our minds,
FO3
guys,
message
those
thread.
monster
What
moves
does that
of
mean?
Every other game or
20+%
something. I was
of a
getting
couple of
kicked
years
off.
ago. But the reality is, over the
Somebody
last
messed
5
up like a
quarters,
tournament.
the
Like,
biggest upside reaction was 2 quarters ago with 3.25%.
And it just happens like literally in the middle of it, and then you just can't do anything.
well, yeah, for real. Like either that or I might lose or win a game. That very next game, like the next window won't come up.
But that might change
So you know, like I have to go and delete my cookies, log everything back in the stream. Like I get kicked out of Streamlabs, OBS, like all of my stuff is logged out.
So big, guys,
All my everything,
essentially macro.
all the
It's a
streams,
macro
all at once.
market event.
I delete my cookies.
Yeah, absolutely, and I think they are.
That's like the only way to get back into it. But I
again
trying to find
because of these
another way.
Blackwell chips. That seems to be what's driving this Blackwell architecture. And then
I don't know
obviously
if I have to get a
large-scale AI
computer or what,
are major growth drivers for them. So it will be very interesting to see that is
sorting
the
it out.
expectation, despite
Trying to figure that
the
whole thing
historical
out.
standard, while they've still
Get it
performed well and
together.
still moved to the upside on earnings on decelerating
Yeah.
growth.
They ain't gonna
It will
stop
be
And plus,
interesting
I know
to see
that you
what
do,
happens if it doesn't
you,
accelerate
and I
at
know
the
plus
rate
you're
that
doing it.
expected.
I know you
Because
can
even if the
win
numbers are
money and
good,
stuff like
we
that,
have
but
seen
it
many,
sounds
many
like you
times
had
this
some
earnings season,
enjoyment,
good is not
you
good
know,
enough.
besides even if
And
it didn't
that's
really
I
have
think my
money,
question
just
that
being able to
I guess is the
interact, just being able to
million-dollar
do
question.
You
those
know, I love my
activities.
chess
Start to see some
community,
of
and
these
that's
companies
what I'm trying to
moderate,
say.
and
Like,
Okay.
maybe a
I
good
am not
thing.
getting
Like
chess
I
up.
don't see a problem with
I
the
don't
company
care
Okay.
like
always
what's going
posting.
on. Like,
Right now we're
it's
expecting top line
embedded
to
in
grow
me, my
50+%
family,
from last year. I
and
mean,
trying to
we
force
can't
it
maintain these
embedded
levels
in
of
my
growth
kids.
at that
But
point.
they
Do
like
you
it or
wonder
That's
not,
what I was
they
gonna
gonna
ask you.
they're gonna read some
levels of
chess
growth
and then
will
somehow
still be
gonna
enough
apply
for
to
us?
their
Okay.
life.
I guess that's the question everyone's asking because all these names have become
So
And
you
so
everything
basically want to
else.
have your kids have a connection.
Yeah, this
Okay.
is an interesting one, right? Because how many companies, period,
I hate it.
have
I didn't like
revenue
when
per quarter
one of my
around
favorite
$50
grandmasters
million?
passed, but
Yeah.
you know that
I
just
can
makes me
rhetorically
want to come
answer
back
how many
and
of them
just
are
compete.
growing at
'Cause
50%.
that's what made me
plus.
like
The
him
answer
so
is
much.
this is the
'Cause
only one.
he just
So
competed.
you start looking at
Just,
it, and it's
you know,
truly unicorn-esque in
just
the
to
sense that
compete
it's
and
doing
want to
things
learn
and
and
it's growing at a
study
pace that no
and
company's
just
really ever done. But to
be
your point,
very good at
is
one
this
thing.
a
Like
build-out
I like
boom,
that.
guys, or is this a
And
sustainable,
So
long-term,
I'm with it.
at least 3 to 5 years long-term?
I was gonna ask you. So
depending on
with
the
him, your
analyst that
grandmaster,
you
did
talk
he
to,
teach you how to
it's
play chess
expected to decelerate.
or
No, like
something?
he was on. He was just a. I found. I already knew how to play chess.
Really
man.
impressive.
The guy,
Oh, okay.
That's
the
exactly
guy
my
passed,
point.
but,
I guess now these earnings events.
I had learned chess like a long time ago.
We have this
Years ago.
insatiable appetite
Okay.
for
So
NVIDIA
like,
posting like
so how did you
60,
how did you
70%
see the
growth. It's
grandmaster,
just
the
not
one who had
going to
all
be
this
feasible,
wisdom in that
I
area?
think,
How did you
for the
meet up or
foreseeable
link up
future.
with
But
him
all that to be said, the difficult task
Just
is
playing on
thinking
chess.com.
or
through
watch him or
all
whatever?
of course, just for
Playing
example
on
purposes, but
chess.com.
there will be, I'm sure, a lot of
Okay.
extra
You
eyeballs on
see
NVIDIA next week.
There's always
all
eyeballs on
everybody,
NVIDIA, as we
everybody
know,
who plays
but when
Okay.
you look at this stock,
all the
I mean, what
games
is
in
one
the,
thing you can
in the
do
big old
around your
database.
earnings to
And
limit
when
some
I
of that
was
risk
playing
is
my
use a
games,
list
I
to
used to
find
go
options
and
trade
look
when you're
who's
looking to
playing,
trade
like
around
who's
these
on,
events.
who's
And so that's what we looked at here.
and
Same
then
with
you,
the
you
lot
get to
we
know
looked at
people
in
if
Home
you
Depot,
already know the
a lot we
grandmasters.
looked at in Lowe's,
You click on their
selling a put
games, they
vertical.
have streams
But in this case,
or whatever,
just going to next
and
week's
there you go.
expiration.
You get to see the
What I
real
talked
person.
about at the top of the show was this stock,
Okay.
tested around 180 today.
I was
It also
curious. Okay.
tested around that level
Well,
last
just like it
Friday.
is
Was
for me.
able to hold on both
All
times.
right.
So
And eventually,
if
are
that
you thinking
180
about
level
that you may
continues to
turn
be
into a
support, even if
grandmaster?
the
Like
stock
if you
does
really
move
like keep
lower,
playing
perhaps
and get
the
your skills
180,
up and
175 short put
Oh,
vertical
some
could
people
be
said
a
I'm
game
really
changer.
good
It
to
works
where I
out
could go that
regardless
high or
of
close,
whatever
but
the earnings
okay.
response
we just gotta see
is.
how
And
life
so
takes me. Like,
125 max
you know,
gain,
I really don't have
375
time
max
to
loss,
do all of, like, to
178,
really
75 to
study
break
it, because,
even.
you
Looking
know,
Okay.
for,
this
again,
business thing
same
is real.
word,
I mean, I can play a little
stability
bit and
post earnings,
just
guys.
Stability
study
would
and
be
do my
nice,
puzzles
and
a
I've
little
always said
bit,
that
but
neutral
not
is
like
also
how
still like a
you
great
really
stance to
supposed
take
to,
because
like
we've
maybe
actually seen
12 or
fairly
16 hour
muted
days,
reactions for Nvidia's
crazy
earnings
stuff like
as
that.
of late.
Yeah,
Muted to me would feel like a win in this market environment. So we will be watching,
That's
of
a
course,
lot.
those numbers as they report. That's
it's a lot of
They definitely
study.
gotta
Like,
the closing bell.
it's
Yeah.
a lot of books to know and a lot of counters to know
Some
and
of the activity we've seen over the course
a lot
of
of
this
lines
week
to
into
know.
that earnings event next
Yeah,
week
but I
for
really like how
NVIDIA.
you
And that'll
could
do it for
apply
promo
chess
today.
to
Now,
like just
coming up
regular
next,
life
we will
because it is
discuss
true though.
some
You have to
broader
think about
trends
how
we're
you have to
seeing in
outsmart
political
situation. Have A, B, C, D, and however other letters you need to have to be able to have different plans for life, or being able to counter things that's going to happen. So yeah, I think that's really cool. So hopefully one day you might become a master, or even then you just think about it, the stuff you're doing, especially your online streaming stuff. In a way, that's kind of like the way you're going. You're building yourself up to that point where you might be considered a master when it comes to being able to invest and and educate people in the different things that you're talking about, the different topics in that area.
Well, I'm definitely gonna be teaching people a lot in both areas. That's another thing I've been working on. I haven't announced I told anybody, but yeah, we're about to get that started. Like I'm about to just have a playlist for courses on both trading, investing, chess, openings, new game, in games. I just I know too much. I know a lot, so we might as well just organize a lot of this information and just get it out there. So that's all I've been trying to do is help people.
That's awesome. Now, with Terica, your you're working with case management with her. I know she helped you with the attorney stuff, like getting you there for your appointment. Is she gonna help you like with anything else, like with? I'm trying to think. I really wish they did more case management stuff, but like being able to get you resources like holiday stuff, things that are available for you. Because I know there's a list out there too that actually helps you, like children, like Salvation Army, but it's called something else, or the Angel Tree thing. But they got that stuff where I think they're starting it up again. You know that, or the coat stuff. Has she mentioned anything about the coat stuff where you can get assistance with coats?
Let's move on, shall we?
No can do.
No.
I'll get out here.
Okay, so she's mainly focusing on the
going?
skill sets, I guess.
Schwab.
Basically, just getting you in the community and socializing.
Schwab,
Then,
a modern approach to wealth
I haven't
management.
talked to her about it.
Stay connected to what moves markets.
Okay.
Download
All
the
right.
Schwab
Well, I know,
Network
but I
app
know
and
like
stream live
she's
coverage
more
wherever you
skill
are.
set, I think, focused too. But I think if you had a TCM, which is a targeted case manager, that's where they can give you those additional resources. But if I can get my hands on it, where if they give me the list, I'll still forward it to you so you can have it. But nobody has given me that yet. I'm waiting for it. If they do, then I'm like, hey, definitely want you to do that because there might be some things that you need. And then thinking about your kids, you know, they could benefit from having some extra coats and stuff or jackets when they come up to visit. And then definitely with the Christmas stuff. Now, you said, though, where you're at, they help you with the Christmas stuff, right? Maybe
Well, they
like
used to,
something at that
but
community center.
it's something I have to get back established.
This morning on Morning Movers, Diane, and curious your thoughts because I know the company
That would be
plan. This is not like a dramatic
awesome.
exit by any means, but definitely causes some uncertainty ahead of their earnings next week.
Yeah.
There were
Okay.
more questions. There have been questions
That's a
swirling
great
at
idea.
times over the past few years about Doug
Yeah,
McMillan
I think that
and when
would
he
be
would
good.
retire. And now it's official.
Have you ever thought
He
about
put out
trying
a
to get
statement
your
this
own
morning that Doug
transportation, though? I know
McMillan
you don't
will be
really
retiring
drive
effective
or
January
anything
I have
like
mine.
that.
So essentially, that's the end of their
You,
fiscal
you do?
year. Hence the
Yeah.
timing of the change. John
You talking about like
Murray,
doing the Uber
Turner,
stuff
rather,
or the?
will take over the
I
top
got
spot.
that.
He'll begin his
A lot of
tenure
friends.
beginning February 1st. And
Okay,
he
well,
is
never
an
mind. You ain't
insider,
gotta worry
so
about
he's
it.
worked his way up the ranks from this
Well,
That's
company,
good then.
starting in the 90s as an hourly associate back
Well,
then.
that's
So
good.
it shows that they are
I mean,
trying
I
to
had
All right.
create a
got
seamless
another haircut
transition.
yesterday.
He's currently at the
I
head
mean,
of the
Oh.
U.S.
I do a lot of work in the
operations
house.
of the
When I need to
company,
go,
so
I
he will
just
succeed
I
upon
get
the
to
fiscal
it.
year shift.
Nothing
You got
stops me.
The
resources.
Like
stock sold off more on the
Okay.
news right now. It's coming
driving
back
a
as
car
we've seen a lot of
actually
the
would
market
be
come
slowing
back
me
today,
down
so it's
because
down only
you know I also
over
use
half
my
of a
phone for
percent. So
networking. I'm talking to a lot
investors
of people
seem to be a little
constantly,
skeptical or
a lot of
worried, but
projects
keep in
done,
mind at
working
the
on
time that Doug
projects.
McMillan
Like,
took
oh,
over, there
well,
was
I
some
should be driving the car.
skepticism then. A couple years
Like I was
into
telling
his tenure,
Mr. Rico, I
only
was
less
like,
than 20%
yeah,
of
like, this
analysts
is awesome.
covering
Like that way I
Walmart had
can
a buy
concentrate on
rating.
this.
You compare that to today, where the vast majority of analysts have a buy rating on Walmart, and that stock has, performed about
Good.
the
You know what I'm
same
saying?
Well,
Money
as
long,
the
you
S&P
can never
500
go
this
wrong.
year, but on a
That's
year-over-year basis, it has
You and your little
performed
slogans and stuff you
over the
got.
past 10 years under McMillan's leadership. You have seen this company
Yeah, I want my money
transform
long
from
so I
not
can
just
never
a
go wrong.
footprint, but
I was not expecting that at all.
to Amazon, where
Oh
they have
man, you
leaned
and
into
those things.
e-commerce and created a
Yeah.
strong
Okay.
competitor
Well,
to
that's good to know.
Amazon with their subscription
Um,
program as well. So they
Have
think
you been
Turner will be
socializing
the
with
right
people in
person to
person,
transition, especially when you
like
think
your
about
friends? I
how
know that you say you have friends. I know we got the
digital world we're
online
in,
ones, but
and
what about your
not just
friends
the
that are in
e-commerce
person?
component,
Have you been
but
able to
where
do
AI
that?
plays
No,
in
I
all
can't
this
stand
as well.
nobody.
Yeah, and I
Don't
Oh
nobody
my
want-
goodness,
don't
come
nobody
on
want to
now.
do nothing.
especially for names like Walmart,
Yeah,
Amazon,
okay, I
it's
don't
really
believe you.
interesting to follow. So
No,
we'll
I'm
have
just
to
playing,
see
but it's
if
like,
these numbers can hopefully reignite some
um,
enthusiasm here as Walmart a bit lower today.
oh my God, I got
not
some tea
necessarily
right here.
seeing
I forgot all about my
a
tea.
huge sell-off by any means, but
Go
going
drink
to
your
be a
tea.
different company as we know that they've only seen a select number of CEOs really at the helm of the behemoth that Walmart has become
Yeah.
over the last
My throat is
several
like,
decades. But appreciate it,
like,
Dan.
I know you
Call
tell.
for
Can you
all
tell
of
my
your
voice
commentary
sounds more
regarding
different?
Walmart's C-suite
Yeah,
shakeup.
it has like a little bit of a
broader
I
shopping
wouldn't say
and
like a
consumer
raspiness to it, but yeah, I
and
can hear it a
Anne-Marie
little bit.
Johnson,
I had to yell at
Vice
some
President
people.
of
That's
Global
why I don't like
Industry
talking to
Yell at you
people.
big people.
Yeah, I had to yell at some
Thank you so
people
much for
because
joining us on
Oh
this
my
you
God.
know
morning.
they don't know that I'm
so
always
excited
at
to dive
work.
into some of the results that you've
And they
seen
be
from
trying to play
consumer
with me
behaviors. Let's
and
just start start there. I mean,
talk
what
to
really
me about
stood
the
out to
wrong
you after this
things. And,
holiday shipping
no,
and
I ain't
holiday
trying to be
shopping
too many people.
period?
Not the wrong to me people's in public because people out here is crazy. I gotta do all, I gotta be over here to do my work and have my fingerprints everywhere from here. not out there
Okay.
just messing around with one person. He don't even know what he talking about for real, and they might get mad at me.
Okay. I gotcha. All right. Now I'm looking at your picture that you sent me on your medication. I see
Man, that
that.
had
So
me
it looks like
knocked
you
out.
just take one a day. It looks like you just take
Yeah, it
one
had
a
me
day.
knocked out, bro.
It makes you sleepy?
Yeah, I was gone. I was talking to my
Okay.
mom. I was like, man, I'll holler at y'all. Y'all ain't even talking about nothing for real. Y'all want no money or
Mm-hmm.
nothing.
I don't know
Yeah.
necessarily if it's fear, but we can look at
Go
it through
sleep
two
on
lenses.
y'all.
Expedite fees
Now that's prescribed
with
by your primary
inflationary
care physician,
pressure,
right?
as well
Yeah,
as
my
just
actually,
shopping
yeah. That's
early
why I
and
tell
shopping
people you gotta go to
deals.
the doctor.
What they're looking for is
Yeah.
flexible options
There's
from
nothing wrong with
retailers
getting
and
looked at
logistics companies.
every
So
year.
whether
You know
that's
what up with
in-store
dentist?
pickup, can I
Your
bundle
ears,
shipments for,
everything get looked at.
sustainability? Am I able
Did they
to
tell you like
consolidate
on your
shipments and still get
paperwork?
them on
Did it
time
tell
to
you
my
like
loved
what it
ones?
helps you
But they're
with?
definitely
Do
shopping
you
with
still got
their
the paper
wallet
that
and
comes
they
with
don't
it?
want to pay expedites fees.
I'm sorry, what
Okay,
did you
so
say?
with these
Or
sustainability
like, do you
concerns,
know like what
tariffs,
this medication's
inflation,
helping
all
you
of this
with?
shaping consumer
What
shipping
symptoms?
choices,
Yeah, but
everyone
I don't want to
Or
talk
that?
about it here, but I do
play
know.
a
You have to
Oh,
talk
are you
about it.
around other? Oh, you're online. Okay, never mind then. We'll do that later. I didn't
I
know
mean,
you were
it's
still
nothing
online.
important.
Sure.
It's just that I
Okay.
have a background in a lot of areas. I mean,
Within
like I
those
said,
2 to 4
when I
days
help
is what
people,
half
I really can
expedited
Yeah.
understand what's
With
going
AX
on.
technology, what's
You know what I
really
mean?
cool at the fingertips of
But
retailers
that's just,
and
you know,
logistics
a
companies,
prescription from
they
like
can now
way
effectively
back in the day, I
predict
guess.
and respond to delays and shortages
That
and
makes sense.
increase customer satisfaction.
And you said, and
So
you do
how
believe
you
that
look
it
at
is
that,
helping
all
you?
the
Because
way
I haven't.
from
I mean, it
order
might be because
to
you
the
haven't
full
had any
return,
I
kind of
mean,
they
like
can improve
I
consumer
go to
pressing.
sleep.
confidence and
Like,
provide
I,
options.
Okay.
And they're voting with their
I
wallets.
sit here like,
Whether that's
I'm
sustainability
constantly
matters,
busy
they're
to
looking at
where,
orders. Can
and
I
then I'm always
consolidate that and
positive
plan
too, to where
early
like,
for
man,
sustainability and emissions?
yesterday was an
Can I
awesome
look
day
at
too. Like,
overall
All
picking
right.
up in store
when I
because
was
I was
talking
going
to
to be there
her,
in
I
a week
said,
from now?
"You don't
So
mind about you my
flexibility is
assistant,
really
right?"
coming through and
And
matters.
she said, "She
But
said,
what's neat about this
she's like, let's take over the
technology
world.
is
Like,
you're able to
you got a
Mm-hmm.
plan to the vision.
you're
I
able
see
to
it. I'm
look at
with it."
delays. You're
And I
able
said,
to
"That's
provide
right.
flexibility
I ain't never had
to the
nobody to see what I'm
execution
seeing."
as well as the inventory and all of those
So
notes.
you and Sarika having a
So
good
I was
time
looking
and
at some of
making
the
the
takeaways,
connection.
and we're
That's what
spending
it
a lot
is.
on
You got to have
shipping,
that
but this is really
rapport,
the game
or y'all
with so
stuck, or
much
you're never
of
going to be
our
able to get the
commerce
help you
being
need. That
online
connection.
now.
So it's good
About
that you all
half
were
of
able to have
your
that
survey
right off the bat.
respondents said they
Yeah,
That's
so
awesome.
the
we have,
delivery within 2 to
it's
4
just so much
days,
to work
but then
on.
only
Like,
like a third think that that's
Yeah.
actually going to
ain't no
happen.
way.
And then you also said or found that like baby boomers in particular aren't
Now,
Ain't
is
no
she
willing to
doing
way.
something?
rush
I'm
shipping.
sorry.
Oh,
How
go
do you
ahead.
make this all
I was gonna say,
work
is she doing something
together
similar
if
to
you're
the
one of
one
these
guy that you
retailers
had
where
before,
the
or was
expectations are
that
sky
other guy
high, but the
different and he was
confidence
a
is
case manager?
waning?
That's what I was trying to see. Did you know any
Yeah, so when we
similarities in
talk
some of
about
the stuff that she
technology,
does
it's
No,
really
all this
versus the
stuff
guy
is
that's had?
providing
me, and
flexibility.
it feels like
Whether you're
something
trying
that
to
I
drive
thought of
more
in my
foot
mind,
traffic in store,
Okay.
you're
something I
offering online
manifested.
pickup in store,
Uh,
are you
yeah,
offering
we all
early
manifested.
retail
Excuse me, I can't
promotions
take
and
credit for
sales
it.
where you're
Okay.
getting free
But
shipping? So what AI
something
technology
good. No,
allows
he
you to
wasn't
do
doing
is
like
consolidate
this.
those shipments
Nobody
and
does
provide
like
It was
this.
shipment
This
different.
is
on
brand
the
new.
screen.
This is
You can tie that to a
innovative.
Okay.
Like this
promotional
is like
forecast and say,
something
hey, do you
from
want to
the
ship
future.
sustainable?
Everything, all of
Do
it.
you want to be able to
So
consolidate shipments and pick them up in store and
it's
drive,
brand new.
foot adoption?
He said it's
We
brand
want to
new.
give you an ease
Yeah,
of
brand
I was
new.
return.
waiting for
So
another
really
slogan,
what
but
this
yeah,
comes
okay.
down to is intelligent
Let me ask you, what's your
orchestration. It
anxiety
is
like
now at
for
your
you? If you had
fingertips with
a scale
AI.
of 0
So
to
you can
10, where
drive your
0 is
online
none, and of
consumer
course 10 is
behavior, but you
high,
can also drive
how would you rate
behavior
your
in store.
anxiety
Because in the
right now?
end, if
Ain't
it's
no
a
anxiety.
seamless
None?
experience, the
Okay.
consumers
Wow.
are
Because
going
once
to vote
before
with
you
their
had about a a 2 last
Okay,
time
and
we
so
met, so
speaking on
now
that,
it's
that
none.
consumer
I don't
Okay,
even
no
remember
anxiety.
what was happening then.
really speaking with their wallets.
Oh, I think it was something to do with your children's mother. She was starting to become a little difficult, and you just rated it just a 2. But
Oh well,
typically,
yeah. That
you were
even though
0.
that's the same, it's still a zero
Mhm.
because
influencing just like
you
overall
know,
supply chain planning.
like I say, it's on the
Yeah,
small
so
time frame.
overall, from the
It
survey
don't
Okay.
matter
data that
on
you
the
folks
grand
were
picture.
talking about, what's
Okay.
interesting with
Whenever
tariffs
she get that
is we saw
paperwork, then
the
maybe there
theme to
might be a
shop
point where she's
local,
trading up,
right?
and
Tariffs,
you know what I mean.
international
Like
shipments,
she ain't
shipping
gonna just
expedite fees
completely
are
look stupid to
influencing their
all the way
choices
up
and what
until
they
you know what I
choose
mean.
to
So
buy online.
me
Prestige
complaining,
cosmetics,
crying,
retail
worrying
clothes,
about it is
clothing as
just
a
worrying
whole,
about the wrong
those
thing.
choices will
So that's why
continue
I
and
tell
people
people
will look
like,
for the sales.
if they
But
ain't
what's
making dollars,
interesting in
they
this
ain't making no
survey, if
sense,
you look
right?
through the data, people
All
are
right, like that
refusing
one.
to
They making
pay
no dollar,
the
ain't make no
expedite
sense. All
fees,
right.
but what they are doing is leaning into
You
sustainability
know what I'm saying? I
and
used to have to
saying, you
tell
know
people
what,
if it don't
I'm
apply,
going to
let it fly.
plan.
Like,
If I'm a retailer, I'm going to provide
you know, people
choices
didn't
for
like me
those
when
who
I was in
checked out.
school. I tell you.
Sustainability matters,
Why?
and vote with my wallet and
I
consolidate
was
those
just getting
shipments
to it.
for the benefit of the
You know
planet.
what I'm saying?
And that was
And I hadn't
really
listened to no
surprising in the
crap.
data.
Yeah, and I do appreciate
Oh,
that.
did you
that
say
there
how
is
you
some
feel?
of
Were you
this,
like
I
pretty
think,
blunt when you
psychological
said
level of
stuff? Like
caring
I
about
you
just
just
walk
people
came
away if I
out?
hear
for
if I hear
Oh,
something
okay.
I don't like or
the day of
they
consumerism
ain't
where it feels
serving
like
me
it's
on my
pretty much
journey,
peaking.
I
I
just
do
walk away.
appreciate to hear that there's still at least somewhat
You know what I'm
concern
saying?
for
Get
our
to it
Earth.
elsewhere.
But so appreciate it for all that great insight and of course your time on this Friday. And
That
we're
makes
gonna
sense.
jump
No
in. Vice
disrespect to
President of
nobody and what
Global
they doing
Industry Strategy,
and what they could be
Yeah.
talking about in that moment in
Yonder.
time.
Now coming up
It's just,
next,
you
another
know,
retailer we'll be
you gotta stay
discussing is
focused. You
Under
gotta stay.
Armour.
You can't
As
let
the
them
State shares
distract
down
you
about
off your goal.
2.7% today after
That's
a
true.
breakup with Steph Curry
That's very
after
true.
nearly a decade
Okay, that's
together.
good. Now I know you said you are eating though, but like, are you back to eating? Like I know you at one point in time you were eating some vegetables. Are you having your fruits and any salads and stuff like that with your food or?
Over 1,100 of the most popular stocks and ETFs, plus a wide variety
Yeah,
of futures
I'll be.
markets.
Oh my goodness, I mean every day.
All with 24-hour
Man,
support
I'm working
from
out
trading
with too.
specialists who understand the
Okay,
ins
so
and
you
outs of
definitely you can try to
24-hour
put on
trading.
some muscles with it too. I guess.
No
Yeah,
matter
I
the
increase
hour,
the reps.
you can
I
Okay.
trade
decided to just, I have to get up and be active. All while I'm doing this stuff, I gotta work out while I'm doing it.
Real-time market insights. Live
Do a
from
rep
NYSE,
while I'm talking to
NASDAQ,
somebody.
SIBO,
They heard
That's
me.
what I'm asking. Have you done
From
that?
earnings to economic
I
data, we cover
start
what
showing
matters
people what's
as it
going on.
happens.
Like I
Streaming
just
24/7,
can't stop. I'm telling
anytime,
you.
anywhere, free on SchwabNetwork.com.
Morning
Well, that's
movers,
good.
be the first to find out what's shaping early market
Thank
action.
you.
Check.
You know,
Options.
just out of the blue the other day, I was just like, man, get out here, do 10 push-ups right now, and just start doing them. Hit my 10 push-ups. I was like, yeah.
Mm-hmm.
I did some more bicep curls. Yeah, I'm do some more. Yeah. And before you know it, be like 120.
The Schwab Network.
Tune in 24
You know, you
hours
just
a
kept
day,
going. You just
7
keep
days
going.
a week on
Keep pushing yourself. Keep pushing
SchwabNetwork.com.
yourself. You tired? You keep pushing yourself. Keep pushing yourself.
Available anytime, anywhere.
And only thing I'm thinking about is my baby.
Stay connected to what
Okay, your
moves
babies. I
markets.
get it.
Download the Schwab Network app.
That's what's
and get
fueling me.
live
Somebody gotta find
coverage
what's fueling
wherever
them.
you are.
And like I say, like, just get to it. I like this entry right here, y'all.
Live at the New York Stock Exchange, and
You know what I'm
this
saying?
is the
So,
watch list. Your
like I
midday
say,
view
that's all I'm
into
trying to do.
trends driving
Get to the
market
baby. I know the
from
babies is
sharp
all right.
focus on technology
Mom's the
driven
pay. You know what I'm saying? They good. They got a playground in their yard. They smart
Good.
kids. They nice. Without me, everything is all right. They ain't got nobody to yell, nothing to yell about without me. So as long as I just, stay cool, everything's cool.
Welcome back to Next Gen Investing. It's now
And
time
you have
for
good
Under
interactions
Earnings.
with
Today
them
we are
whenever
checking
they're
in
around,
on Under Armour
typically,
after
right?
some news we
Oh
saw
yeah,
breaking up
we
with
known
Steph
each other for
Curry
years.
after more than
Just
a decade together.
we just
So
we.
pretty big
I don't want to say
deal
we
for
black,
Brand.
but we just talk
I would
loud
believe one of the
sometimes.
most
Be what we
famous,
say,
if
and
not the most, I
if
would say,
if somebody say
Okay.
get back, they mean get back.
really documented
And
social
it-
media
Okay.
person
They don't
for
want
Graham.
to
So
be
joining us
friends
now
with
is
me
sports
as
journalist,
much as I
senior
try to be
rights
nice
correspondent for the network to
and
discuss
try to
more
kill with
on
kindness.
how
So
much this matters to
it
the
is what
stock
it is,
board. I'm upset about
I just
this.
be telling them to get out the way so I can love
Curry,
on my
but, I mean,
kids.
what does this mean now for the momentum of this brand?
But I do say hi to them, acknowledge them, tell them that we all still family.
Okay.
I'm thinking about getting them a Christmas gift anyway.
Retiring in the next year,
Let them throw it away or whatever. Who cares? But I get so much. I mean, they probably will, but if they do anyway, like I get a lot of stuff anyway. So it's like, why not like put them in there? Like it won't hurt to try to love anybody. Like anybody in your family or a friend or something. Like just keep trying if you try and break through, and then you eventually can break through and fix a damaged relationship, friendship, anything. I think.
the stock is serially.
Maybe they might not apply to every situation, but
we talk about Nike quite a bit. That has been a serial.
my mom don't rob me, but we still talk.
Adidas, seems to be
whatever else.
struggling. And I think Under Armour,
list goes on.
if you go back just, maybe almost a decade or so,
good.
2017, 2018.
Because you did think about it. You're going right into Thanksgiving around the corner. Just thinking about the things you're grateful for, being able to have friends, families, interaction, that kind of thing. That all is a part of it. It would be really cool though if you were able to have a gathering where you all could be together. Now, wouldn't that be cool one day?
You're going to have to see me be big, a lot bigger than where I am now, and I'm already big.
Oh,
Just ain't seen it yet.
Okay.
That's what I was thinking. Like, maybe things start turning around and she just see how things could be a little bit more better, even if I ain't in her face, that might brighten her mood
And I
and
think
just
if you
start
look at Nike
changing
as well,
things.
with that brand
If she's
pulling out
truly
of
just gonna
favor
be
because of
like
higher
nasty
prices
the
and
whole way
competition
through her
from
life,
companies like Arm
anyways,
Holdings, Hoka, and the
around them babies, it's not gonna be
shoe
good for them.
markets,
And
but
then
essentially the
it's
athletic
not
wear
safe.
markets have been growing with lots of competition. And I
Makes
think
sense.
Under Armour really missed the boat many years
She's gonna end up
back, and the
taking a
stock has been
loss.
down about 70% over the
You
last
said
5
take a
years.
loss.
Yeah, she gonna
Again,
lose
this
the
is probably
babies. Like
part of a
the
broader
more
shift for
time,
Under
the
Armour.
more rights,
This
the
is
more
what they're talking
all
about
that
in
I
the
see, and
this
the more she
relationship
be
with the
doing like
Curry
that
brand.
forever,
Nonetheless,
she
it's
just
been a
lose
struggle
everything.
brand, which
How could she
really
keep it?
has
Nobody's
gone by
gonna
the
like that.
wayside, moving more towards the mid-tier
So
retailers
she gotta grow
and
up
the
and just
bargain
get with
bins,
it,
and
or
that's
she
really
gonna
been
take a loss.
unfortunate from a standpoint of the brand as
And then
She
you
well
gotta
gotta
as
think about it
she
too.
gotta
its
manage her
brand
account,
history.
chat.
Yeah, I
That's
think
all
there's
it
a
is.
lot
She just
of
gotta
That
manage.
too.
She got to
branding
just
that
manage
has
that
gained
account.
over the years for this company. and
All
maybe
that
some
is an investment.
unsuccessfully,
What she
but
doing?
that's
She
for others
risking
to
right
worry
now.
about.
This is
Jordan,
whatever
big
playing
picture
with like it ain't
question.
nothing.
Tiger
She better
Woods,
pay
Nike,
attention and learn
you
how
know,
to
a year
read
or
the
two ago
payroll,
started his own brand, the Sunday Red brand.
the
Steph
spreadsheets. You know
Curry
what I'm
now
talking about? So,
perhaps sunsetting into his own
you know,
brand.
I don't know. I told her to
In
get
the
another
modern
phone
world of
and put that Princeton
direct-to-consumer
app on
and
all about 4 or
e-commerce
5
and social
devices,
media
so all the kids can have an
influence, do
option
you
to
think
call
this is a trend
dad,
we may
and
see
dad
more
can
of?
call each and one of my kids.
Yeah, I think so.
Yeah.
All
I
the
think
kids
the
should have an
nature
option
of
to say,
digital
no, I don't want to talk to
marketing has
dad.
become
You know,
ubiquitous
and one of them
cheaper.
hit hello. Like,
Sourcing and manufacturing
it's 3 of them.
is becoming cheaper, and so it really
They
comes
get too
down
much
to
money a year
popularity, you know,
to have
crowdsourced
one phone,
marketing
which
that
is the
we've
baby
seen
mama's
explode
phone.
over the last,
Yeah, like what
10
are we
years or
even talking
so.
about?
So traditional
And then
players
who's
like
gonna keep
Nike
liking
Under
that
Armour really
for years as
facing
they
a
get
lot of
older? Like
competition
the judge is
from
gonna
other
be like,
brands which
bro,
are
like
popping
what
up,
y'all even doing?
and gaining traction from
But
a
I'll
social
buy all
media
the phones if I
standpoint.
have to.
Now, you know, Under Armour, it's kind of sad
So
actually because, you know, like I
I
said,
don't
it's
know.
been a brand that I used
So
to
everything's gonna be
purchase
all right. I ain't
anymore.
tripping.
Still have some other products because they
But you
actually
got to
look
think
quite
about
good in
too, the
terms of
kids,
longevity.
they'll eventually
But if you
realize,
look for the stock
because
potential
once they
for
start getting
recovery
older,
play, they've got
they'll start
a
picking up
lot of
on like
leeway,
how they're not having as much interaction
a lot
with
of things
you,
to do
and then
to
they'll be able
improve.
to
And if
tell
you just
like if
consider
mom
some of the facts
unfortunately is
associated with
causing it where you're
sales,
not
sales
being
were
able
down
to
about
have it
6.5%
too. They'll pick
last
up,
year.
and then
They've been
when they
down
get
about
older, then guess what's
15%
gonna
just
happen?
from a few
They
years ago
more
back
than
in
likely will want to
2022.
try to reach out to you
They
and
are
build
expected to
rapport,
earn like 4
hopefully,
cents a
if they're not
share
hearing too much
this year.
negativity
I already
about you.
told my
Amazon's
daughter,
trading
you
at
know,
100
if
times
you get that
earnings
Yeah.
money, you
multiple,
can
so
come
it's
on
not
back,
cheap.
and I ain't gonna be
But
holding
they
your
do
money
have
for
about
you like
400
that.
million in cash
Once
on
you
1.9
turn
billion in
16 or
market
18,
cap.
whenever you can move
So they
out,
have about 25% of their
you
float
know,
in cash. So
you
they have a
can
lot of
leave.
flexibility. They just don't
You know
have
what I'm
a
saying?
direction.
We'll
That's
ask
been
the
an
course and
unfortunate
we
case
leave.
for Under Armour, and they need
Okay,
to
so you do like
revamp
the emancipation
the
thing
brand
with her?
altogether.
You'll
I
be
can't see
mad,
how they're
yeah.
gonna do that, but just keep in mind that it's not cheap, even
All
though its stock
right,
price
but
is
she may
$4
not
or
want
$5.
that. She might like want you to
And
be
I know
her
that some of
dad
these deals they
the
make
whole
with
time.
music
Like, you know
videos
what?
look
I'd
like they
rather
aren't
just be
cheap,
a
but they need
child
to, I mean, Phil,
and
he's
just be
got to
under
fill
dad.
Steph Curry because
But
do you know
I
Would you
ain't
let
like
that
that
happen?
though. Like
spokesperson
I
for
don't know.
I'll
that
tell
so
everybody like
appreciate it,
I just
George,
want
for all of that
his
breakdown
mom just to
on
be
what we're
happy,
seeing Under
everybody
Armour
be happy.
today. Shares
Like,
down about
Yeah.
2.5%. And that
That'd
will
be
also do
good.
it for us for Next Gen Investing.
Any plans for this
today
weekend,
and
sir?
this week. Thank you so much for tuning in
just
all
working,
along. We have the watch list.
working out.
Okay.
The weather's so nice. Do some hoops. I haven't done that. I want to do that for the
Okay.
cold. So I gotta get this cardio up. Come back, make some eat.
Okay.
Work with my system. Yeah, got something what to
Okay,
do.
you know what?
Whether you're an
When I see
experienced
her,
investor or
I'm
just
going to end up
getting
being like,
started,
"Hey, Tarika,
Charles
how's
Schwab
it
offers a
been? You know,
webcast
being an
that's right
assistant."
for you.
She gonna probably just
The
bust
Platforms
out
and
laughing.
Tools webcasts are designed
Yep.
to help you broaden
I
your
want to hear all
knowledge
about it.
of platform features and resources
Yeah, I'll
available
tell you
from
about it,
Schwab.
but I'm so glad y'all are
You'll
having a
learn
good
tips
relationship.
and
I think
tricks
it's so
to help
awesome.
navigate Schwab.com,
Okay, all right. We done talked about the week. I think
and
we done talked
mobile-based
about everything, and I'm not gonna hit you with a
Best of
worksheet
all,
activity or
you can
anything like
ask
that because we just had
questions by chatting
conversation today, and
directly
it
with
seemed
an
like it was pretty
education
good and it
coach.
was meaningful.
It's interactive learning
What you
at
were,
its finest.
dealing with and
Tune
stuff,
in
but you're still
live
trying
or
to keep
watch
your
on
positive
demand.
energy,
Head over
which
to
is awesome.
schwab.com/coaching
Even though you have
start
some
learning
things
today.
that are kind of like challenging for you when it comes to your kids, and you can tell that you really love your kids.
Welcome to Schwab Network, where
Well,
real-time
I'm
market
gonna
coverage
start like if I don't can't get them right away, because at the same time I'll be trying to have free time for dating,
Yeah.
having fun in my own self. You know, if I can't get them, I'll just send some for them.
My point is that
And
they're
I only
getting
heard
a higher rate of change
they
in
know
sales
I
based
throw
on
it
their
away.
guidance, but not the same rate of change.
That's what I don't want.
Follow the biggest headlines.
I got you.
Because I can always.
Breaking news and sharp trade ideas minute by minute.
I can always mail something up there. Be like, I got these toys, these, hair products, whatever. You know what I mean? I could just throw that up there. I done that. I mail stuff before. So
that would be a further downside area to watch.
and then I got them on pizzas and stuff. Like it ain't nothing to just do stuff like that. Just this day, love. He still care about you. I want y'all to have a nice weekend. You working hard in school. Just type thing.
Yeah, that's good that you do that from time to time. I think that's awesome.
Yeah, because I have a special needs baby, and she's the one I think about at all of them, for real.
Okay.
Because it's scary out. It's scary out here in this world.
It is.
Can't talk, and people trying to do you any kind of way already.
And then they be trying to assume what she's saying probably sometimes too, and not like listening to her to give a response, whether it's showing an action or something like that. Yeah.
That's exactly what it is.
New York Stock Exchange live
That's exactly what it is. So it's like a conversation with somebody who can't talk, but we having a whole conversation still, though. You know what I'm saying?
Right.
So seriously, that's how you get her to learn and to do stuff. Like seriously, and I don't know if the mom is doing it because I can't even talk to the mom about it, and I feel like they just have this other outdated system and they just sticking to it. Like, I have to just do my part and get them bored. Just do my part to be bored. It's time to step up before, like, if I have to get more people, hire more people, whatever it is, whatever, we're gonna get there. Real.
I like that mentality.
And whoever, whatever I'm doing, if anybody can do it, I'm helping them with it and everything. Like it doesn't no secret with me.
Okay. And you're gonna come up with a manual with your stuff that you do, right? Because you said eventually you're gonna have a manual or something where it can teach people and people can maybe pay for it.
Getting this book together. I'm writing a book.
Okay.
I got someone I'm working with a ghostwriter as we speak, actually. But I say I have a multi-talented team and all this stuff going. Like this stuff is really going really fast.
I'm glad. Okay. Good. And that's what I want to hear. You never know. You gonna probably have a whole bunch of people going online, whatever website you'll have it on, and just be purchasing the material. Then they'll be like, you know what? I don't want to just see this material. I want to see who's the instructor, who's giving me this information, and then they'll come see you live while you're streaming.
Right. That was the whole plan. That was the whole plan.
Oh,
look, see, listen.
Gotcha.
Listen, you jumping the gun. That's what I'm thinking. I'm like, okay, I ain't gonna keep on chasing people. You know what I'm talking about? Like, so I might do that, and I'm gonna do this. So one idea after another, and just fulfilling the ideas. You know what I'm talking about? So I fulfill Frost on Xbox for a reason. Like I'm fulfilled. I'm not here trying to get to it. I'm not gonna be just willy nilly, just living in limbo. Like no, I get to it all the time, every day. Try to be the best, the coldest, and everything, all the time. I wake up on 2800 all the time. As soon as I hop out of bed, I'm on 10.
Okay.
My mom threw me in there because I'm always on 10. Like, come on, I gotta get right.
All right, well, that's good to hear.
I'm actually good, so everything is good.
Okay. All right. Well, it's 2:01. Same time next week at 1. Is that still good with you?
Yes,
all right. Well,
we can always text too, though, as well. Like,
yeah, you can text, and I apologize that it took me some days to get back to you on that one, because like I had seen it the one day you had sent it when it was on Monday. Something happened where I had a whirlwind of clients that came in back to back, and then I was like, and then I hate to say it, then it's Wednesday. I'm like, oh shoot, let me respond back. Or I'm sorry, it was Thursday. I was like, let me respond back. Yeah, it got crazy this week for me. Like it's like one time you might have dull time, and you can be able to do something, and bam, you get hit with a lot of stuff. But yes, you can always text me and stuff like that. Yeah.
Did you see her pictures?
Mm-hmm. Yes, and I thought they were so cute.
Like what the heck, right?
Like that was some good stuff.
some
Let me go
concerns
back to
about
it. Who was
AMAT,
it?
and it was down
There
at
it
one
is.
point this morning, down
I'm
7
sitting
Yeah,
here
like
just
that
like,
SpongeBob, it was
here
good.
in
I was like, girl,
green. I'm gonna
Yeah,
keep
that's
doing
good.
that. So I
Kevin
got her a
right
canvas
now,
and a
Hanks, who
paper
I've
set.
now taken
You know,
his stories.
Ooh.
But I will say,
yeah,
I'd love to
like
get a big
she's
Now,
picture
good.
which
of
one
father,
did
and
that?
maybe
Which
you'd like
kiddo
to add.
did
I'm
this
sure I
one?
missed
My
someone
oldest.
Who
too.
did the drawing? The oldest one
Well,
draws?
I think
Yeah,
this
they
morning,
actually both draw
Okay.
because
talking to
one
Diane
time
King Hall
Okay.
she,
early this morning,
my
I thought it
nonverbal,
was
she
really
done drew on the
important.
wall
The
Yeah.
one
S&P
time,
and the
Okay.
Nasdaq
and
were both
even her little
right
scribbles
near
look like
their
something.
50-day
You know what I
moving
mean?
Mm-hmm.
Like
averages. And so for
Yes.
she
those
still
indexes
got
that
something
were
going in
right
her head.
there,
And I told
slightly
her
through,
mom
and
that
then
I was just
recovered
like,
back through them, Nicole.
you know,
I think
Mm-hmm.
it's key.
my even
If
my
you look at this
my
from a
mom seen it
technical
one day. I took
perspective,
pictures
then
Mm-hmm.
of
I
my
think when you take that
nonverbal,
Yeah.
but
along with
Millie's.
the, you know,
Man, oh my
Mm-hmm.
god,
news that the Trump
she
administration
drew like
put out
some
about
Yes.
like a
tariffs
face,
and trade deals with
some
Switzerland
shades,
Yeah.
and
like
tariffs and
even the
trade
scribbles
deals
like
with
something. I'm like, what the
Ecuador,
heck?
Argentina,
What
Guatemala,
can
El Salvador.
what can they
And
not
now
do?
we
They
get to
might
the
not
end of the week,
already
and
put
as
it
we look forward to
together
next
like
week,
us in a way,
Nvidia's
but
earnings.
they
You know,
still have these
retail is
gifts,
coming out with
and
a lot
you
of
just be like,
earnings next
wow,
week,
like
but
okay.
Nvidia's gonna
Yeah, that's
overtake
awesome. Like
the
I looked at it
entire
when I
week
saw that
Wednesday after
SpongeBob,
the
I'm
bell.
like,
So
oh my
so
goodness!
many
Like
stocks will
she
move in
actually has
line
the
with
color, she got the
Nvidia.
socks,
It
she
should
got
be something
everything
pretty
going with it.
special,
I'm like the
Nicole.
shoes.
Right.
Like
I
what
Yeah,
in
think
she
the
that
don't
we're
even
world?
looking
trade.
at
She
gonna get
just
better
look at it,
prices for bananas
drawing.
and
That's
coffee.
good.
Next week we'll have a slew of retailers.
Yeah. And how old is your
Covered
oldest?
earlier today
She's
some positive comments
9.
on the Gap, the
Oh
Yeah,
yeah.
she's
momentum,
9 right
the
now.
She's doing
investments they're
good to be
making
9.
not only
Yeah, she's
in
doing pretty good. I like
AI
that.
to bring the customer
Yay.
experience
All
to
right, well
be
tell her to
improved,
keep
the
it up and you
products
keep giving her
faster,
those
but
canvases and
also
stuff because
in
you're gonna have them
personal
artistes
care
growing
and
up.
beauty. But
And
looking
that would
forward
be
to a lot of
awesome.
those
That's a way
earnings
that she
next
can
week
have as a
too.
coping skill and she could possibly make a living off of it.
Yeah, exactly right. I think Walmart will be important with their, you know,
Pretty
as
cool.
they transition
All
to
right.
the new CEO.
Well, I
Obviously,
will go
always an
ahead
interesting
and let
topic,
you
Home
go
Depot
and you know how
and
to reach
Lowe's
me
coming
if you
out.
need me.
Then Target,
And
which has
I'll
had
see you
problems
next
finding
week
their
at 1 o'clock.
niche in
Yes, ma'am.
retail.
Thank you.
All right.
Have a
And
nice
All right, have
weekend
a-
as well.
the discount retailer.
All right,
There'll
thank
be a
you.
lot of good
Bye-bye.
stories. And remember,
Bye.
we were supposed to get retail sales today. We didn't. But we did get during the week some retail data from Bank of America that said the consumer pretty strong. So we'll check out and see if some of that strength in the U.S. consumer shows up in some of these retail earnings.
Sorry about that, y'all.
Yeah,
I
understood.
was screaming
I mean,
on
look,
mic.
we may get
I
more
get
news on
excited
tariffs
easy.
too. The big picture, right? I mean, we got some as you
We
talked
turned
about
up.
Latin America and some. So maybe we'll get some more affordability on some things. But Scott
check
Bessent
1, 2,
noted
check
that
1,
we
2.
may get more tariff news too, right?
I think Scott Bessent is constantly
They about to put this back.
negotiating these trade agreements, and he hinted at the beginning of the week that we were going to see some trade agreements this week, and sure enough, we did, Nicole. So we should always be ready. The market should always be braced for trade deals coming. Remember, we've been waiting. Already released by now, but apparently they take much longer than we originally thought.
Right, understood. Kevin Hanks, great to see you there live at the CBOE. And pretty impressive when the markets turn around and come back off the big sell-off that we saw. I'd like to have a great conversation now. Sam Tabar is with me, CEO of White Fiber, talking about a few things here, but let's talk about the big threat and power scarcity. Tell me a little bit about what's been on your mind.
I mean, power scarcity is the exact word to use. There's no limit to the demand that we've seen from potential clients and clients who are seeking megawatts in order to help build what they're trying to build with their through AI labs and hyperscalers, all involved in the mix, all involved in this huge pool of demand. And you know, I do see the markets having a bit of a volatility and perhaps a question mark on that demand, but that demand is very real, and I think the markets are incorrect in this case.
Understood. I mean, when we think about AI, the AI arms race, the boom, and while people say there may be a bubble, most of the companies that came out with earnings all talked about AI demand and future CapEx spending. Do you feel that we're in the early run here?
Without a doubt, we're in the early run. There's the demand that we're seeing from dozens of people. We just can't keep up with the demand, frankly. So I really think that this demand is real. I know the demand is real. With respect to AI, this is a secular trend that's going to continue for a very long time. We're certainly in the early innings.
When I think about the power part of the story, often we were thinking that people run out of money. Now they're just sort of passing around. I don't know if it's, sort of theoretical money or whatever it is. At the same time, right? Because it's not like venture capitalists used to give the money and expect a return on investment. It's very different the way they're sort of doing this circular funding. But we thought that how much the next level of AI would cost billions and billions and all this. But now it seems that the slowdown may be because of power.
Oh, absolutely. The slowdown is because of power. And I've seen the memes where the circularity of finance and money is there. It is a little bit weird, but at the end of the day, the demand is real. Artificial intelligence is going to pervade our society from head to toe, and so this is a long-term trend. But the slowdown is a result of running out of power, getting data centers up and running, whether it's a retrofit format like what we do or a greenfield format. And then when you throw in the tariffs and getting materials through borders, that makes it even more difficult and more variable. So it's certainly, the slowdown is really about getting it done. And the winners are going to be those who are able to execute.
And so, sorry. So tell me how you think that things should go.
Well, I think in terms of how the megawatts that are developed should be really to companies who have an edge and have experience in building data centers. There are a lot of people who are just jumping on the bandwagon of this, which we strongly disagree with. Our team has been doing this for decades. They've been identifying facilities that are not even marketed as data centers, and they are able to identify them and retrofit them into tier 3 data centers, which is their appropriate classification for AI labs. So I think the winners are going to be those who say what they're going to do, who are able to execute quickly. The retrofit format is much better because you can get things done in 6 months as opposed to 2 years when you're building from scratch. And so that is really where the value is going to be and how things should be done. It should be done with seasoned operators.
I mean, we think about what you're doing at White Fiber and how, you're stepping in to fill the gaps amid this capacity crunch. And I mean, CoreWeave is another name that comes to mind. When you think about now being public, does that help you to grow? How do you apply the funds? And now that you have, obviously, you're now really well known.
Yes, I mean, White Fiber is young. It's newly public. But the team has been developing HPC cloud and data center infrastructures for decades. We've become increasingly well known now for what we do. In fact, just the latest execution project that we did was for a client called Cerebras. We identified what was a mattress factory last February, and we retrofitted that and turned that into a tier 3 data center within 6 months. We did that on time, on budget. Very rare in these days. And so that's the kind of execution, and that's why we're becoming extremely well known. The best kind of marketing is executing on your promises, particularly in the data center space. And that's why we've become extremely well known.
And you talked about now your capital is better used developing your own data centers. Tell me more about that and how much, does it take?
It takes a lot of money to develop data centers. The most expensive thing, however, are mistakes. And that's why I kept on saying earlier, for people who are just jumping on the bandwagon, they're going to be making very expensive mistakes trying to develop these data centers. But since we've done this IPO, now that we have the capital, we are able to execute on a much larger scale than we were doing before. We're focused right now on this North Carolina flagship facility that has 99 megawatts associated with it. We're speaking to various parties. We're in fact about to close on one of 2 of the clients who are looking to develop on that particular flagship facility in North Carolina. So it's been really great stuff. All our problems are our first world, first class problems, but there's still problems nonetheless.
Yeah, and I know you have partnerships with Dell, and so you mentioned Cerebras, Supermicro, HP, and NVIDIA. In fact, all those NVIDIA GPUs deployed. Tell me more about that.
Yeah, we're a preferred partner to NVIDIA. Our relationship with NVIDIA goes back many years. There was a time similar to CoreWeave when CoreWeave used to be an Ethereum miner. So we were actually also doing Ethereum mining, and NVIDIA was involved in the development and manufacturing of Ethereum mining machines. And that goes way back many years ago.
Yes,
So
sir.
we've had that relationship with NVIDIA for a long time.
Oh, look at this bounce right here. Why they get a bounce right here on the
NVIDIA
open?
was in the center of all that. So we were able to have
How
a
did I
really
know
friendly
this?
and warm
How did I know this
conversation
right
with
here?
NVIDIA, given the
I feel like
history
Josh. How
between
did he
both
know?
companies. And then we become their
The market was gonna bounce right here?
partners of their preferred partner
Market starts showing
program.
some bullish
So
action
we've
right
been very
here,
happy. Our relationship with NVIDIA has done very well for us.
I think they finna.
And after your quarterly report that came out yesterday, tell me a little bit about that. I know you posted a loss. Revenue has been on the rise. How did you feel about the latest quarter and the outlook?
Well, our expenses were mostly based on one-off expenses with respect to the IPO, but also we've developed a tech stack in which will help our cloud business. So we're trying to position our cloud business as performant and not just compete on price. And in order to do that, you need to invest a lot of money on software engineers. Software engineers these days are not cheap. But we're trying to build a durable business, because if you only compete on price, that's a race to the bottom, and that will end in tears. So we're performing on performance, and we had to invest a lot of money on technology. And also with respect to revenues, I mean, we really look forward to announcing a big contract that we have with North Carolina, our flagship facility. So stay tuned for that.
All right, Sam, great to see you. Sam Tabar, CEO, White Fiber. Great to see you, Sam. Thank you very much. A great conversation, important conversation as well. Coming up, Options Corner. Tom White is standing by, and he'll highlight unusual options activity from the day. How investors are looking to trade on the recent news of Pfizer, Alibaba, which has some breaking news, and Amazon. We'll be right back.
Bro, if they break out right here, this is gonna be bullish. They're gonna come up with a 64, 674 after, break through this thing. Look at the MACD filling up right now. Try to do a trade.
Whether you're an experienced investor or just getting started, Charles Schwab has a webcast that's right for you. Are you a long-term investor? Our investing webcast series breaks down different investing styles, including growth, value, income, and more. Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or on demand. Head over to schwab.com/coaching and start learning today.
Real-time access, data-driven analysis from U.S. equities to global macro matters. Schwab Network connects the dots. Watch live. Subscribe free at schwabnetwork.com.
Real-time market coverage meets expert strategy.
From the opening bell to the closing bell, we've got you covered.
Get inside the minds of pro traders.
My point is that they're getting a higher rate of change in sales based on their guidance, but not the same rate of change on EPS.
Follow the biggest headlines, live analysis, breaking news, and sharp trade ideas minute by minute.
With shows built for action, we break it all down in real time with speed, accuracy, and precision.
I think one of the most important things is you're making a play in a risk-defined way here going into earnings.
So that would be a further downside area to watch.
Smart insights, actionable data, veteran traders, and trusted financial journalists streaming live and on demand.
Schwab Network, streaming 24/7, any screen, anywhere, free. SchwabNetwork.com.
Welcome back to the watch list. Time for Options Corner, where we analyze unusual trades, options trades, real trades. Tom White, host of Fast Market here on Schwab Network, combs through and finds these trades and explains them to us. Before we get to them, I'd love to just know your market thought here as we're wrapping up an extremely busy week. We've seen the NASDAQ sell off multiple times in the last month or so. But today, as usual, coming back. Tell me a little bit more about the big picture in your opinion.
Yeah, I think if you take a look at it, it's
Nice.
about volatility, right?
Oh, I see you, bro.
It's the equity market. You see the VIX back above the 20 level. You finally started seeing some volatility in the Treasury market. Yields have been bouncing around. The expectations of a rate cut in the December meeting, which just a few weeks ago, Nicole, was 95% chance, according to the CME FedWatch tool. It's down to 45% right now. A lot of the Fed speak that we got this week, basically kind of pounding the table on maybe we don't need to cut in December. So those expectations are coming in that we are going to get that December cut. And what does the market already have priced in? Well, they already had the 25 basis point cut priced in, and that's probably why you're seeing a little bit of consternation here with the equity markets. Now, let's take it all with a grain of salt, Nicole, because of the fact that the S&P 500 is still only down 2.5% from its all-time highs. The NASDAQ, a little rotation out of some of the big tech winners, down about 4% from those all-time highs that we saw just over a week ago. But the NASDAQ trying to break that 3-day losing streak here. The Dow is just a couple percent off of its all-time highs also. So, yeah, I don't think the panic button should be pushed at this point, but there's starting to become some headwinds here for the equity markets. I think we're going to get a lot of clarity on where the consumer is, right? Consumer's 2/3 of our economy at this point. Next week with
Look at the SPY trying to break out, y'all.
We get Home Depot, we get Walmart next week. So we're going to kind of get some more clarity on where the consumer is. Are they still comfortable spending at this point, even though we've seen some weakening jobs data on that side of it? And a lot of the Fed speakers over the past couple of days have kind of highlighted the fact that inflation, while sitting the CPI on the last read that we got was sitting at about 3%, isn't coming down, and they're getting a little bit concerned about that and the impact from tariffs. Now, we did get some positive tariff news also today out of Switzerland, some other EU countries, which is going to probably be a bonus. But it was nice to see a little bit of calm when stocks opened up down over 1%.
All right. Well, thank you for all of that. And, of course, we will get all those retail earnings next week and NVIDIA, as you've noted, throughout this whole week. So we'll have a lot to look forward to next week. Let's get to some of the stories here. Pfizer's had a choppy go of it, made a big bet recently on GLP-1s, but it went from $27, the recent high. Now it's at 25. Tell me a little bit about the bearish trade you found.
Yeah, I think investors frustrated with Pfizer, their performance over the last couple of years. I mean, the stock's down about 5% so far in 2025, getting hit a little bit today. They did announce that they successfully completed their acquisition of Metsera, so maybe that will help them as far as the obesity drugs, the GLP-1 names kind of combating against Eli Lilly, Novo Nordisk. Remember,
I just got done.
Pfizer tried
my
to come out
doctor
with their own
talking about everything.
GLP-1 or obesity
trading
weight
right
loss
now,
drug,
looking at
and
spy
that
calls.
failed. It didn't meet a lot of the
Right here.
criteria, so they abandoned it. So this would
I'm taking this call as
actually help them. They're also
75.
trying to get rid of
Right here, I
their
want
stake
one.
in BioNTech. They're
I want
offering
one. I want one.
about 4.55
Damn it.
million
Can I get one? Damn it.
shares of their ADRs that they have. So a little bit more optimism this week. It's up about 3% so far in November, but it still
Wow, what you doing?
just seems to be kind of stuck at low valuation levels at this point. But
Right.
we did see some unusual option activity in here, and this is on the put side. This could be a trader that's just hedging a long stock position, or it's just somebody speculating that, hey, the trouble's not going to end anytime soon here for Pfizer. Out in the December 19th monthly options, so 35 days to expiration, trader bought over 30,000 of the 24 strike puts, paid an average debit of just 34 cents on those puts. So the break even for this trader when they start to profit is below 23.66 over the next 5 weeks. That's about 6% below the current share price there in Pfizer, with put volume about double the normal daily average volume that we've seen over the last 5 trading sessions here in Pfizer.
Understood. Next up, we have Alibaba, and I actually saw some breaking news on Alibaba in the last hour or so. Tell me some thoughts here, and you've had a neutral to bearish trade.
Yeah, some news just came out about an hour and a half ago, and the stock was having actually a good day, good year, right? Stock's up over 80% so far in 2025, but down 20% now from those 4-year highs that we hit.
Look at this.
Just last
That's an upside down. They're forming an upside down head and shoulders.
Of this
like
month.
So a
little bit of a reversal, and this was based on some statements that came out of the White House National Security Memo. Alleges that Alibaba has provided the Chinese military with technology support targeting U.S. interests, including access to customer data and AI-related services. This comes out of a report from the Financial Times. The memo claims employees shared knowledge of zero-day software vulnerabilities with the People's Liberation Army in China, raising more concerns. Immediately, Alibaba came out and says that this leaked information that U.S. intelligence came out with is false, and they're trying to attempt to manipulate public opinion and malign Alibaba. So back and forth on that, but that's why the stock kind of turned around. They are trying to overhaul their main mobile app, AI app, to resemble OpenAI's ChatGPT. We all know that these Chinese companies sometimes copy a lot of technology, little copying going on there. But we did see some neutral to bearish activity, and this was in the morning before the stock turned around and started falling here, Nicole. This was out in the December 5th weekly options, so you're going to capture that earnings event on the 25th. The trader sold over 8,000 of the 170 strike calls in that option series, collected a credit of about $4.46 on those 8,000 contracts. So the break even where this trader starts to lose money is above 174.46 over the next 3 weeks. That's about 14% above the current share price in there. They also did buy out of a position that they had in the November 28th weekly 170 calls. So they bought those back, went out another week, extended duration on this. But this is a neutral to bearish stance. It could be a shareholder that owns a bunch of shares and they just want to offset some of the risks on it. Or it could be somebody speculating that, hey, Alibaba's got earnings, but the stock's not going to pop that much.
I know it had such good news for a while. It was running hot, and now we really see it turn around. Last but not least, we look at the Mag 7 name, Amazon. Some of your thoughts there. What is the bullish trade you found?
Yeah, the stock's pulled it back about 8% from those all-time highs that we got earlier this month, and that was post-earnings. Really good earnings report on it. AWS sales rose over 20.2% growth year over year. That was above the quarter prior, which was only had 17.5% growth. So they're growing more on that front, advertising and through Amazon Prime Video, reaching about 315 million monthly active users. That's a bonus for them. That's actually over a $50 billion business a year for Amazon right now. So continuing to diversify their revenue streams in here. Stock's down a little bit today, but still up about 7% this year. But as I mentioned, it's pulled back pretty significantly from those recent all-time highs. And we did see some bullish activity in here, and this was out in the Nova 21st monthly cycle that expires in just 7 days. Trader bought over 4,000 of the 242.5 strike calls. Paid an average debit of about $1.91 on those, so the break even where this trader starts to profit is above 244.41 over the next week. That's only about 3% above the current share price. And we might get some movement next week, Nicole, because you mentioned NVIDIA has earnings. A lot of the retailers that Amazon competes with have earnings. So it could be a volatile week, but this trader's taking a bullish stance here over the next 7 days.
All right, and look, this heat map really has changed colors.
Yeah.
I mean, when you talk about Amazon, which still is in the red, but NVIDIA, Microsoft, Broadcom, Apple, Tesla, Salesforce, Oracle, I mean, so much in the green now. This morning, it was just a sea of red. Yeah. All right, Tom White. Thank you. Great to see you always, Tom, and thank you for those 3 names in Options Corner today. All right, coming up, we'll take a look at the big picture. We have some stock picks
right
for
here.
you.
I'm trying to find
We'll
support.
be concerned about earnings,
See.
AI bubbles, maybe potential rebounds and new highs. Conversation, and David Dietz is coming up.
Kick off the morning with the data and the decisions moving markets. Morning Trade Live breaks down the macro moves driving the price action, from Fed policy to global growth to inflation prints and geopolitical risk. Smart, fast, and always live from Wall Street to your screen. Morning Trade Live, where the markets meet the macro, weekdays at 10 a.m. Eastern on Schwab Network.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. Do you like using charts when analyzing your stocks? Our technical analysis webcast series breaks down different charting techniques like trend analysis, price patterns, moving averages, oscillators, and much more. Best of all, you can ask questions directly to an education coach. It's interactive learning at its finest. Tune in live or on demand. Head over to schwab.com/coaching and start learning today.
I'm Kevin Green, and I track options flow daily, identifying who's buying, who's selling, and how it's going to impact the markets. Watch live on Schwab Network at schwabnetwork.com.
Trading at Schwab is powered by Ameritrade, giving traders even more ways to sharpen their skills with tailored education. Get an expanding library filled with new online videos, webcasts, articles, courses, and more. All crafted just for traders. And with guided learning paths, stacked with content curated to fit your unique goals, you can spend less time searching and more time learning. Trade brilliantly with Schwab.
Welcome back to the Watch List. I'm Nicole Petalides. We welcome in David Dietz, Chief Investment Strategist, Dietz Wealth Management Group. Great to see you, David. I haven't seen you in a while. How have you been feeling about the markets? We were just saying, even with all the recent volatility, the S&P is, 2.5% off the highs? Nothing to fret about just yet. What do you say?
Yeah, so great to be with you again, Nicole. So it's been a volatile week here, and I do think that the number one issue is investors reassessing the AI trade. And there's some good reasons why people are really coming to grips with whether there is a bubble, whether we've gone too far. You've got a blue chip name like Oracle, which has lost 1/3 of its value since August. That's not like Oracle. You know, you've got like Meta down nearly 20% in just the last month, and that's, I think, causing investors to say, hey, what's going on? And then, of course, you have Michael Burry at the start of the week saying he's shorting AI. You've got the leader of SoftBank saying he's sold out of NVIDIA completely. CoreWeave disappointed. And so I think a lot of people are starting to rethink, you know, how much capital expenditures are being made here? When will the payoff occur? And how much will that payoff be? And so we've seen a lot of volatility here, but of course these stocks have gotten a bounce this morning and today.
And it's interesting because every dip people buy. They just do. And I will say for a name like NVIDIA, for example, we had multiple price target hikes. I saw Wells Fargo put a 265, Morgan Stanley had a 220. Dan Ives is out talking about opportunities. People are still stepping in and buying tech. I know they may be concerned about the AI bubble or the circular funding that's happening and the debt that's accruing too, particularly for Meta. We heard from Meta, their capital structure has changed a little bit. Is it something to worry about? Are you worried? Are you staying away from tech?
So we're taking a very cautious approach here. I think we're doing what a lot of people have done, which is taking our profits there and rebalancing. One of the problems, of course, is close to 38-40% of all the S&P 500 in terms of the market cap is focused in these top 10 big AI-related stocks. And so if you take money off and underweight, you do that at your peril in case, of course, the AI and tech stocks keep going. But again, to have so much allocated to such a small area of the market is nerve-wracking. I think right now, all eyes are going to be on what does NVIDIA report next week. If the problem is if they just beat expectations, and it may not be enough to carry us through year end, they may have to beat the so-called whisper numbers. We're starting to see, for example, Applied Materials last night had, I thought, decent earnings, but they didn't quite get to where so many investors were secretly hoping for them to be. And when you have everything so fully valued and expectations so high, there's going to be volatility.
I had a guest today say how Jensen Huang recently talked about data center revenue in the future will outpace the estimates. That sounded pretty positive, and I don't know if I didn't actually hear Jensen Huang say that, but that could mean something good for the earnings next week. But so goes NVIDIA, so goes the market next week.
Yeah, I think that's right. And of course, as much as I admire NVIDIA and Jensen Huang, I mean, they sell to the data centers their chips, of course. So they have a vested interest in, keeping the momentum up and making sure that they're not pouring any cold water on their potential customers. What scares me is the epicenter, of course, of AI is OpenAI. And, they have, 20-30 billion in terms of revenues, but the amount of spending is going into the hundreds of billions of dollars. And the question is, how ultimately will that debt, all those expenditures really be repaid and won? And when? Of course, the longer they project out, the hazier it really gets. No one's got a crystal ball. And when everything is priced to perfection, that's when there could be some disappointment.
Let's get to some of your picks here. I know you have Kraft Heinz. Why Kraft Heinz? And how long have you liked this name?
Yes, it's just a cheap stock. I mean, I've been interested in it for a decade when Warren Buffett first got involved. Of course, he's been very disappointed with that stock going down 50% since he's owned it. That does not include some nice, healthy dividends. But now you're heading to a situation where all the consumer staples companies are so out of fare. There's concerns about the strength of the consumer. There's concerns about inflation in raw ingredients and so forth. And of course, when you have AI going gangbusters, why do you need processed food companies? But having said that, at this point, you got to be 11% free cash flow yield. You got a 6.4% dividend. What are the wild cards here? The wild card is one, they're going to split up into two companies. That may unlock value. But I think the biggest wild card is Mr. Buffett still owns 27%. What's he going to do? I don't think he can sell it at this point with the stock down. So maybe he or maybe some other activist comes in and takes over the company. Certainly the cash flows are such that it could be a very profitable investment for someone.
And then we turn our attention over to energy. You're talking about SLB, formerly Schlumberger, as oil's sitting around $60 a barrel. Where do you think oil's headed and why SLB?
Well, certainly we're seeing that the geopolitical risks are still out there. We saw that Ukraine, nailed a installation in Russia. That's pushed prices up. I think Iraq commandeered a boat in the Strait of Hormuz. So your geopolitical risks are still there. Energy has done recently better as tech has slid. So, for example, SLB is up 11% the last month when the S&P 500 is flat. Why do I like SLB? It's a pick and shovel play, but one of the best in terms of oil field services. But what people are not seeing is that they're also a leader in the digital, the use of digital technology to extract more oil. They have a nice acquisition just happened with Champion X, 3.2% dividend, 12 times earnings. It used to be well over 20 times earnings. So I think there's a bargain here, and it's starting to move up here over the last month.
Last but not least, Molina Healthcare, MOH. Like a lot of the healthcare names, or this is a standout?
So it's down 46%. 6% year to date. So you certainly would be buying low, but it's part of the group with United Healthcare. And you've got these health insurance companies. Basically, it's the problem that a lot of insurance companies have from time to time where the claims, the cost goes higher faster than the premiums that they've been charging. And of course, you know what they do there, then eventually the premiums start going back up. No one's going to go without it. Health insurance, Molina is a big player in terms of government insurance, whether that be Medicaid, Medicare, or the state market, the marketplaces run by the states and so forth. And right now, there's a bit of a mismatch. They should only make about $14 this year, but we see them ultimately going to $20 to $25 a share as they boost premiums up and investors come back to the health insurance area.
When we think about the big picture and what the Fed needs to worry about for the next meeting, you did talk about weakness in the labor market. In fact, you talked about it slowing and mentioned some of the layoffs. At the same time, are you worried about inflation rearing its head? What do you think the Fed does? What do you think the Fed should do?
Yeah, so I think the Fed cuts. I think that's a minority opinion right now. Just today, it went from a coin toss to, around 40%, and a month ago it was about 95%. Here's the problem. The Federal Reserve is working with no data, and so we're all speculating as to what, in fact, the true unemployment rate is, what the true inflation rate is. People worry about what the Fed is likely to do, and stocks go up and down. I'm afraid that the Fed's going to look at the stock market to get a clue as to what's going on out there. At the end of the day, those members of the Fed who back in September and earlier in the fall said that there would be another cut in December, they really haven't backed off that. There's been some other naysayers that have put doubt into the marketplace.
While they're sitting there bull crapping, we getting to it. You get me?
Again, there is weakness in
I said, and y'all big rascals when they start working out. That's why I told them.
Like that. And so I think they're going to
they don't like me, boy. And don't nobody like my boys. Mr. Freeze, he either be a villain or your best friend. You get me? I told my brother we need to work together, though.
We've been in somewhat of a range, and I say this, it's not like I watch it every second, but I'd say over the last 2 weeks, the range was just below 4%, 398, and the highest that I saw with my own eyes was 414, and we're back up there. What does that mean? Where do you see rates?
Yeah, so I think the rates have ticked up a little bit because actually well, first of all, the shutdown has ended. So some of the worst case scenarios in terms of a real slowdown in the U.S. economy have been avoided. That's going to be a little bit more, put a little bit more demand for money in the system. You've seen the stock market basically do pretty well. And so therefore, that also is keeping a bid under the 10-year Treasury. So at the end of the day, I think that a 10-year Treasury above 4 actually is a positive for the market. It's showing that the 10-year Treasury is not saying the big R word, the recession ahead of us. And although we do think that the unemployment situation is deteriorating a little bit, it's not falling off a cliff. And so therefore, we're reasonably happy with where the 10-year Treasury is today.
And look, I saw your notes on tariffs. Basically, you like that the administration is focusing on affordability and working with Latin America, for example, to bring down prices for coffee and bananas, and whether or not there may be more tariffs that come down or get reduced or lowered. So, and also affordability on housing. I mean, they've even floated the idea of a 50-year mortgage. David Dietz will continue to talk in the future. Chief Investment Strategist, Dietz Wealth Management. Always great to see you, David. Thank you so much. Still ahead, we'll bring in our panel to discuss the booming data center build-out, AI. We'll be right back.
Sometimes, you could have done better. Same goes for where you invest. Level up and invest smarter with Schwab.
Real-time market moves, earnings breakdowns, and trade-ready insights. Follow me on X at Sam_Vardis and connect with me on LinkedIn or Instagram for more.
Trading at Schwab is powered by Ameritrade. Unlocking the power of
boy, that turned green, boy.
The award-winning trading platform.
This is a critical candle right here, y'all.
on Thinkorswim Desktop. With
A critical
robust charting
candle. Watch
analysis
what I
tools,
tell you.
including over 400 technical studies. Tailor the platforms to your unique needs with nearly endless customization. And
You
track
can't tell me
market
it's saying
trends
like
with
no
up-to-the-minute
check.
news and insights. Trade brilliantly with Schwab.
Gotta have a little bit of patience.
Trading at Schwab
You know what I'm
is
saying?
powered by Ameritrade.
A little bit of
Giving
patience.
you even more specialized trading support. Connect with the Schwab Trade Desk, our team of passionate traders ready to tackle your trading questions, no matter how complex. Plus, get 24/7 live help.
Oh, they're trying to go. Look at them.
Support
They're trying to put bulls is trying to come in.
and in-platform chat. Trade brilliantly with Schwab.
What's up, Carl Nation? It's your number one broker with the best full-service wealth management skills in the biz.
Actually, I'm seeing something from Schwab.
Uh-oh. Yeah, Schwab lets you invest and trade on your own.
And if you want, they can even manage it for you.
Not to mention, Schwab has a team of specialists for taxes, insurance, and estate planning, all with low fees.
We're experiencing technical difficulties.
Carl.
Oh, we need another green candle like that.
Schwab.
Another green candle like these
Approach to
two.
wealth management.
And this is going to be a breakout.
I have a question for you.
Sure.
When did Granddad first start investing?
Granddad had an account with Schwab before there were branches in the area. He really started with nothing. He worked hard, and after he passed away, the torch has been passed to me, and my advisor, Jennifer, she was with me with the journey, helping with the estate distribution. The two grandchildren, planning for their college educations. Someday it'll be their turn.
Trading at Schwab is powered by Ameritrade, unlocking the power of Thinkorswim, the award-winning trading platforms. Bring your trades into focus on Thinkorswim Desktop with robust charting and analysis tools, including over 400 technical studies. Tailor the platforms to your unique needs with nearly endless customization. And track market trends with up-to-the-minute news and insights. Trade brilliantly with Schwab.
Welcome back to the watch list. I want to bring in our panel to talk about the data center build out. We just had a conversation with the CEO of WYFI, Sam Tabar, just talking about AI power scarcity. And that's what we're talking about here now with Mark Gibbons, CIO of Gibbons Capital Management, and Lisa Martin, business technology strategist at Lisa Martin Media. Thank you both for being with us. Mark, we think about these hyperscalers, and Sam was saying that the slowdown, I know they're doing a lot of circular funding. He said the slowdown is the data center build out.
Yeah, you know, individual issues are going to come up with individual companies with these data centers. But as far as really large bottlenecks, you know, we aren't seeing too many. And I think the largest bottleneck, you know, that we face really
Look at that. It's bullish.
is power.
Look at that power.
When you think about the development of power and the way our economy works, players will come in to, you know, adjust to that. So the data centers could become more efficient, or we maybe rely on a new source of power like nuclear. So as far as I'm concerned, I believe in the long run these issues will get addressed.
And also, Lisa, you were saying there are major players that are the winners. Which ones would you say are the winners?
You know, I think, great to see you, Nicole. I think some of the winners are really clear. We're seeing the hyperscalers. We're seeing Amazon, Google, Microsoft, Meta. They're all funding this expansion. We're also seeing hardware suppliers like NVIDIA, one of our darlings. They're providing the essential AI accelerator chips. The primary winners so far are the companies that are really, ultimately at the end of the day, Nicole, they're providing the core infrastructure and high performance components. And really, we're really at the beginning of what could be a massive global infrastructure wave in AI and data centers.
I mean, there's no question there's demand is there, but Lisa, are you concerned now about the build out and doesn't catch up? So why, how and why does that slow us down?
Well, the scale of the investment is staggering. If you look at what JP Morgan estimates in terms of annual funding needs for data center AI infrastructure, they say this might reach by 2026 $700 billion, 2027
Market
2026 is
like
around
this
the
one.
corner. They say this will exceed 1.4 trillion by 2030. But the boom about the AI data center and funding, it's not just about tech companies. We need to kind of expand this. It's really about major capital markets. So the question of which markets will finance the boom is already shifting to how will financing be structured. And because the growth is so big, so is the risk. It's significant both in execution, construction, power, real estate, and in return, expectations.
And, you know, Mark, I know you were talking about delays, whether it's power constraints or even just construction delays. It seems so simplistic. Is that the problem?
Microsoft is gone.
Yeah, you know, again, like I said, I really don't see that as a long-term problem. I do see it as a short-term problem. Sure, there's going to be delays. You know, could be construction delays. There could be, you know, problems with equipment as we build these out. But, you know, this is going to be a large, you know, super cycle type of an event. And, you know, short-term problems with individual issues and individual companies can easily be addressed over time.
And what names do you like here, Mark? I mean, for the long term?
You know, I say keep it simple. So, you know, I like Meta. I like Microsoft, Google, Amazon. So I like the hyperscalers. I also like NVIDIA. There's no need to really complicate this. And we've got this recent pullback, this, really pretty significant recent pullback. These are great opportunities to buy these great companies and ride this important wave of innovation.
And how do you feel about, both of you, about the U.S. versus China? You know, NVIDIA has noted that not having the Blackwell chips going to China is problematic. At the same time, I heard that Jensen Huang was very positive about the data center revenue going forward. What are your thoughts, Lisa?
You know, my thoughts, Nicole, are on the investor side in the U.S. They're rushing in because the sector, it's matured. Some of the things Mark said I completely agree with. We're seeing that financing models that are moving to more sophisticated models. Returns, we're getting some clarity there. And next-gen designs like liquid cooling, high-density racks, they're promising higher long-term value. And if we add in global factors like sovereign AI mandates, data sovereignty rules, we have multiple regions really racing to build capacity. And I think the result, even with some of the things Mark talked about, power, construction challenges, 2025 is really shaped up to be another record year for data center developing from a financial perspective. And we'll only see that momentum carry us in and through 2026.
Yeah, and Mark, I mean, you noted the power. I mean, we think about utilities and nuclear power even, right?
Yeah, so obviously that's what I view as the main constraint here is power. There will be other issues, but I think power is the main one. But again, the way our economy works, right, we live in a capitalistic society. There will be players that come in. They'll make the data centers more efficient. They will find ways to deliver this power to these data centers.
What about real estate, Lisa? Is that something, another sort of idea here that we got to contend with?
We do, because it has been a challenge from a constraint standpoint. At the end of the day, even though power, as Mark said, real estate, those are constraints, we've seen investment in AI data centers simply booming. The physical build out from a real estate perspective hasn't quite caught up because of the power limits, permits, construction, getting that specialized hardware in place. But the next steps really are, as we head into 2026, to ramp up infrastructure, complete construction, get these centers fully operational for the AI workloads that are no doubt coming down the pipe.
Lisa, next week we're going to hear from NVIDIA. You're constantly following these names. I mean, you're sort of breathing these names, these tech kind of hyperscalers, generally for the most part for all of our conversations. Can you expand some of your thoughts, whether it's a particular company or a trend you're seeing for 2026? Do you expect more records? Is there a particular name you're watching closely?
Besides NVIDIA, Nicole, it's the darling of the Mag 7, right? We're always watching it because it seems like at what we've seen trajectory-wise, NVIDIA can make no mistakes. I have a lot of friends that work for NVIDIA. I think we're seeing so much opportunity where companies like CoreWeave, Microsoft, they're OpenAI, they're partnering with NVIDIA because the momentum is there.
Look at
I think the
market
trajectory
right
only shows us getting stronger, and that will help from a U.S. I think, China relations perspective, give us an edge.
Oh, no, it is.
And Mark, you talk about the tech boom, this revolution that will continue with all the CapEx spending. And you mentioned the names. You said keep it simple. The ones that are doing well continue to do well, right? You mentioned Microsoft, Google, NVIDIA, Amazon, and Meta. What other names or sectors do you put in a portfolio that you think can work for 2026?
Well, you could look at different areas. You could look at software. There's security providers out there, CrowdStrike, Palo Alto. There's also power providers themselves. So a name like, Quantus Services. There's lots of ways to play it. There's even new names out there. Back to software is Palantir. It's definitely a new name. Some people would argue higher price, but it does certainly have a long runway in front of it.
And we think about all the materials that are needed in the world of tech. A final thought, Lisa, as we give you the final word here.
I think what we've seen is that all these folks Mark and I are talking about, Amazon, Google, Microsoft, Meta, NVIDIA, they're all funding this expansion. NVIDIA is giving us this foundational layer of AI accelerator chips. The primary winners are going to be the companies that are providing the core infrastructure and the high performance components. So the ones that we mentioned as we go into 2026 are still the ones to watch.
All right, Mark Gibbons, CIO, Gibbons Capital Management, Lisa Martin, Business Technology Strategist, Lisa Martin Media. Thank you both for being with us. And thank you, friends, for being with me here on the watch list. We've seen the S&P 500 turn into the green. It's up 25 points now. The Dow is still lower, but energy, tech, utilities, real estate helping to lead the way. NVIDIA, Salesforce, Microsoft, Chevron, also winners here on Wall Street. Keep it right here. Market on Close is next.
From earnings shocks to sector rotations, we're tracking the catalysts that move markets right into the close.
Here on the floor, I bring you real-time sentiment from traders driving the action.
And in Chicago, we break down the data, technicals, and trades you need to see before the bell rings.
Live coverage of the close every single day. This is Market on Close, live weekdays 3 p.m. Eastern, only on Schwab Network.
Opportunities don't stop when the market day ends, so neither do we. Schwab gives you round-the-clock access to over 1,100 of the most popular stocks and ETFs, plus a wide variety of futures markets. All with 24-hour support from trading specialists who understand the ins and outs of 24-hour trading. No matter the hour, you can trade brilliantly with Schwab.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. Are you a long-term investor? Our investing webcast series breaks down different investing styles, including growth, value, income, and more. Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or on demand. Head over to schwab.com/coaching and start learning today.
Right here. This is where it's going to fall at. This is what's going to break out at right here. Right here.
Schwab Network delivers real-time market insights, live from the NYSE, NASDAQ, SIBO, and beyond. From earnings to economic data, we cover what matters as it happens. Streaming 24/7, anytime, anywhere, free on schwabnetwork.com.
Whether you're an experienced investor or just getting started, Charles
Watch
Schwab
this.
offers
Watch
a
this,
webcast
people.
that's right
You
for
said they going down, right?
Are you a long-term investor?
You said they pulling back?
Webcast series
Is that what you
breaks
said?
down different investing styles, including growth,
Watch how much we print.
income, and more. Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or on demand. Head over to schwab.com/coaching and start learning today.
Schwab Network delivers real-time
Market
market
is filling up
insights
the gas,
live
y'all.
from the
Go
NYSE,
higher a little bit
NASDAQ,
more.
SIBO, and beyond.
I'm looking for them to break
From
this
earnings
out
to
right here.
economic data, we cover what
go a little
matters
bit higher,
as it
yeah.
happens. Streaming 24/7, anytime,
They could get a
anywhere,
rejection
free
right here,
on
too.
SchwabNetwork.com.
Hey, investors.
I always
you know
gotta
the
think
market
of it on both
moves,
sides.
and
It's
Schwab is
resistance
here to
and
help
split
you
out here.
move with it. So, whether you're buying, selling, holding, or planning, whether you're ETFing or 401k'ing,
Bounce right
saving,
here.
spending, or
They found a
even
double
retiring,
support right there.
you can count on Schwab
Bounce.
for market insights, live support, powerful
My
trading
phone said.
platforms, and 400 branches. All at your service, all so you can invest your way. Sounds nice, right?
I'm Sam Vardis, live from the New York Stock Exchange. When the market moves, we're on it. Getting the reaction, the strategy, and sentiment in real time. Stream Schwab Network at schwabnetwork.com.
Happy Friday. It's 3 p.m. on Wall Street, and this is Market on Close. I'm Marley Caden, coming to you live from our Chicago headquarters.
And I'm Sam Vardis, coming to you live from the floor of the New York Stock Exchange. Let's take a look at what is coming up on today's show. We'll be joined by the CEO of Extreme Networks to discuss the company's latest quarter and dive into what lies ahead for the company in 2026. In Options Corner, we'll check in on a DoorDash, which is higher today despite a price target cut by the analysts. They still see a buying opportunity despite an over 25% decline from highs last month. And today's overlooked stock is Topgolf Callaway after reports that the company is looking to sell its Topgolf unit to private equity. So Jules Tillis will break that down for us a little bit later on. But for now, Marley, take us through what you're watching today.
Yes, Sam, I'm watching a move in these memory stocks. We're seeing Micron Technology, one of the top performers on the S&P, moving higher alongside of SanDisk after getting a boost from reports that Samsung is raising its chip prices. Reuters says that Samsung has significantly increased its memory chip prices amid worsening supply shortages, sending some of these memory names higher today. And Applied Materials is recovering after being under pressure following a better than expected earnings report. We'll talk through those numbers as well as their decline in China sales shortly. And NVIDIA also higher today following a series of price target hikes ahead of its earnings next week. We'll discuss why their bullish moves are helping despite this recent stock pullback and how analysts are looking at the company going into earnings. Before we get to all of that, though, let's take a look at the markets as we get closer to the close on this Friday to close out our week. We are mostly in positive territory here. The S&P 500 up 0.4%, 6764.07. On the Nasdaq, we're trading more than half a percent higher at 25,138.89 right now. The Dow still under some pressure, down 1/3%, 47,296, and the Russell 2000 up 0.5% as well, 23.96 right now. The dollar trading at 99.21, just a little over a tenth higher. Gold, though, down on the day, 2.5% lower at 4,091. Crude oil trading higher, though, up more than 2%, 2.3% at 60.05 a barrel. And Bitcoin still under quite a bit of pressure, down 2.3% today at 95,835, under that very important mental round number of $100,000. Now, before we get to some of those top stories, I do want to check back in with Sam in New York and see what stories caught her eye today on the floor of the NYSE. Sam?
Well, Marley, watching the retail space today ahead of a big week of earnings. It's the end of an era over at Walmart. Shares in that company are moving lower today on an announcement that its CEO, Doug McMillon, will retire at the end of January after more than 10 years at the helm. John Furner will take his place after leading the U.S. business since 2019. He joined the company in 1993. The retail giant is set to report earnings on Thursday, which will give us a health check on the consumer, many of which, of course, are becoming more choiceful about their spending. Home Depot is out with earnings on Tuesday. Shares also under some pressure today after a downgrade from Stifel. The analysts turning more cautious ahead of the company's report card, moving from a buy to a hold with a price target of $370 down from $440. They say the home improvement category is at best stagnant and potentially deteriorating, and that the estimates reflect a weaker second half of a delayed home improvement category recovery. Now, shares in Alibaba reversing course this afternoon, plunging after initially starting the day higher. The Financial Times now reporting that the US is accusing the company of providing technological support for Chinese military operations against American targets. The warning coming from an official memo provided to the FT, which included top secret intelligence on how Alibaba supplies the PLA with capabilities that allegedly threatens US security. KWeb also falling following the news. Alibaba reportedly rejects the claims. The company will report earnings on November the 25th. For now, I'll send things back to Marley and Jenny in the Chicago studio with some of today's top movers.
Thanks so much, Sam. Yes, like you said, Jenny Horn, co-host of Next Gen Investing, joining us here in our Chicago studio to talk about some of these stocks we're seeing on the move today. Let's talk about Micron Technology. They're having a really strong move to the upside. SanDisk, an even stronger move to the upside, but not quite as large a company there. On this news from Samsung.
Yes, and news that you wouldn't necessarily, I think, initially read as a huge positive, but is showing, at least right now, the overall demand we're still seeing overseas for these high bandwidth memory players. So we did see Samsung hike its prices on key memory chips by as much as 60% in the month of September, and squeezing buyers with these steep price increases as panic ordering is spreading across the industry. So this does come in response to the global crisis we're seeing, triggered by, of course, this unprecedented demand for AI data centers, which has created a global shortage. But the memory chip maker delayed its usual monthly pricing update for October before implementing then these steep hikes. So as a result of this, and right now we're primarily seeing these memory chips being seen in like servers, now facing higher costs, which could eventually push up prices for these various products, which is the last thing you want to hear when you have all these companies shelling out huge sums of cash. But so industry executives and analysts have said that China's top foundry, which is Semiconductor Manufacturing International, reported the shortage is forcing customers to seek other companies for various components. And so while Samsung has trailed its rivals, it's seen only as a boom for names like SK Hynix as well as Micron, of course. And so this is read as, hey, if they're going to raise their prices and Micron can keep their prices stable, perhaps you'll see more and more interest in seeking Micron products. But again, the relationship with us versus what we see in Asia Pacific does still remain in a bit of an influx, although they have not been a target of these export controls. So we'll have to see how, of course, Samsung's pricing right now could actually be a boom for Micron.
Yes, certainly. The streets seem to think there's potential here. We're up more, almost 6% still on this news here. I want to move to this next one. Interesting moves as we've watched them today. Applied Materials. They were down following their earnings. They were down this morning when I was talking about them. Then on Trading 360, they reversed course, and now they're in positive territory following better than expected results.
I know, so this is amazing because I was discussing this name off the top of the day today on Morning Mover. And I was like, it didn't really make sense to me why we were seeing such pessimism. But now, speaking on things a bit different, because we're obviously higher on the session, I think then illustrates this was a pretty strong report. I mean, better than expected earnings. Shares, again, initially traded lower before bouncing back. We saw earnings per share that came in ahead of estimates. Revenue also topped, and they did say that they're now forecasting a range of their revenue for the current quarter, which at the midpoint would imply roughly $6.8 billion, which was, again, ahead of estimates. So guidance was, stronger than expected. And they did mention that they are continuing to be at this leading edge front technology with DRAM as well as advanced packaging, really continuing to grow over the coming years. So the company's key customers have included, like Intel, Taiwan Semiconductor. And last month, we do know that they did say that they had to trim their workforce because they need to operate more efficiently. And so I like to think about the ways in which these companies basically support one another. And so if you were looking at the supply chain, you need the Micron memory chips, then be supplied, of course, to a name like Applied Materials, which then is very much focused on the intricacy of these chips. And then, of course, NVIDIA would be at the end of the supply chain with everything coming together in their GPUs. So they're somewhat of a middleman. They're not so much in terms of the memory chip makers, but they're somewhere in between that and, of course, the GPUs.
Yeah, they're the equipment supplier in the center. But you can see, as we see the chart here, you can see the considerable move we saw to the downside and the move up. And some of the conversation we had on Trading 360 60 around them today, and why that was happening was that the analyst I was speaking to felt it was just some play-safe behavior. It was just the timing of their report and what was happening in the broader market. It was not that there's not optimism to be seen in this report. Also, speaking of optimism, NVIDIA turning it around. They're, had a recent pullback in weeks, a pretty considerable one in advance of their earnings, but some price target hikes today and a strong move to the upside.
Yeah, and really interesting to me is that now with this move, firmly at least higher as it stands, I know there's still a lot of time left in the session, now putting NVIDIA on track for actually a winning week. One of 3 Max 7 companies that's able to do so. So them alongside Apple, Microsoft are, at least as it stands, seeing winning weeks right now. But all of this volatility has put even, I'd say, extra focus on this earnings report Wednesday, of course, after the close. Analysts are still pretty generally positive. KeyBank said they expect some strong third quarter results. They also expect the guide for January to be higher. They said that really this is because of NVIDIA's increasing their shipments of Blackwell Ultra hardware, which could drive further upside to right now already pretty strong stock, of course, on the year. But they have, of course, declined to comment on whether they plan to resume those China shipments. I think that will be so critical on this earnings report, because I think that the ultra bulls in this name right now are saying, hey, there's all this unrealized potential from a nation right now where they were giving no guidance for any revenue. So that would be, a huge win. But we also do see, other analysts right now, like Morgan Stanley, has also said that they expect somewhat of a breakout quarter. And the debate does continue about the rage of exports. Again, what that actually looks like as far as monetization. But NVIDIA has already been doing that. They are already monetizing their very expensive, very customized, very advanced products, of course, being Blackwell. But it does then to go to show that after these slew of earnings we've already gotten from the Mag 7, it was a very difficult environment to report in. I have to imagine the same will be the case for NVIDIA, which is the most scrutinized name, trades with the highest correlation to the overall market. There's a reason that we tend to focus on these events as critically as we do.
Certainly. And just their sheer size alone is enough to move the market in whatever direction the market moves following the report. China will absolutely be in focus, and if they say anything about it and factoring sales in. But as for this week, they'll have to give up more than 1% to be down on the week in the next 50 minutes or so. This last story, Apple. We've got the China iPhone sales now. We've been hearing about demand and suspecting numbers and pull forward numbers, and now we finally have these China numbers, and they're really positive.
They are. So it's amazing to me what is the biggest source of weakness for the rest of the semiconductor trade has actually been a point of strength for Apple. So continuing to really separate itself from a lot of the trends we see in tech, but benefiting from the strong sales in China, as we do see perhaps an unlocked source of revenue, as their relatively limited spending on AI has been shielding it from the recent sell-off also in a lot of these AI-related names. Apple expecting right now to still post about a 2% gain this week. So right now, sales in China are performing well. iPhone sales in the country were up 22% in the first month after the latest launch of the iPhone 17 model, of course, compared to the prior model being the 16 a year earlier. This is according to Counterpoint research data, which was published earlier today. But Counterpoint said that we have yet to see any tapering past the shopping season in terms of the iPhone 17, and they are really attributing this to the upgrade cycle coinciding with a new device that they believe brings great value. So we do know Apple took some important steps to really clear that Chinese market. It has given very much transparent commentary on that regarding the fact that we saw it cut its App Store fees actually from 30% to 15% in the nation. I think further trying to make themselves a real player in the nation, but they're going up against, the biggest names overseas in tech, like Samsung, for example, and other various Chinese smartphone makers. But all that to be said, they have said that they continue to see this nice demand in the region. So whatever they're doing with the iPhone 17 is working. We talked about the lines outside of the Apple stores. It's really positive to see this translate outside of our own loyal ecosystem in the United States overseas, because that's really, really where a huge bulk of their growth is expected to come in the coming years.
And certainly, the numbers were staggering. 80% of the units sold to consumers were in the iPhone 17 series. All the while, their market remains weak, and their third quarter sales for the entire smartphone market were down 3% in China. So, Apple really trying to get a stronghold on their market share there with this new offering. Jenny Horn, thanks for being with us to break down those top stories for us. Co-host of Next Gen Investing here on Schwab Network. And I do want to send it back to New York to Sam to find out what we have coming up next in the show.
Well, Molly, we'll look at what's next for the economy after the government reopens.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. The Platforms and Tools webcasts are designed to help you broaden your knowledge of platform features and resources available from Schwab. You'll learn tips and tricks to help navigate Schwab.com, Thinkorswim, and mobile-based platforms. Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or watch on demand. Head over to schwab.com/coaching and start learning today.
Looking for a balance somewhere around this area. I don't know where it's coming from, but somewhere around here.
Welcome to Schwab Network, where real-time market coverage meets expert strategy.
From the opening bell to the closing bell, we've got you covered.
See what they do. ID pointing downward.
Get inside the minds of pro traders.
My point is that they're getting a higher rate of change in sales based on their guidance, but not the same rate of change on EPS.
Follow the biggest headlines, live analysis, breaking news, and sharp trade ideas minute by minute.
With shows built for action, we break it all down in real time with speed, accuracy, and precision.
I think one of the most important things is you're making a play in a risk-defined way here going into earnings.
So that would be a further downside area to watch.
Smart insights, actionable data, veteran traders, and trusted financial journalists streaming live and on demand.
Schwab Network, streaming 24/7, any screen, anywhere, free. SchwabNetwork.com.
Sometimes, you could have done better. Same goes for where you invest. Level up and invest smarter with Schwab.
Welcome back to Market on Close. I'm Sam Bardas on the floor of the New York Stock Exchange alongside Marley Caden over in our Chicago headquarters. Let's just check in with the markets with about 45 minutes to go in the session to cap off the week. And we have seen the stocks here actually staging a turnaround in the session this morning, actually starting the day lower, but making a comeback. The S&P 500 up 0.25% at 67.54. The NASDAQ also helped out by a nice turnaround as far as tech is concerned after, of course, we've seen that sell-off very much across the sector. It looks like the Mag 7 is obviously helping out things today as well. The Dow Jones continues to remain under pressure, but we've got the Russell 2000 also participating in somewhat of a little bit of a rally this morning that we saw from this morning, I should say, up around 0.5%. Let's check in on the futures products because we've got the US dollar slightly higher there, but holding steady at 99. Crude oil has been a big focus given some of the geopolitical cross currents that we're dealing with. Russia, Ukraine, also over in Iran today, $59 a barrel. So some of those supply concerns, of course, coming back into the minds of traders today. Bitcoin is down, of course. So we have seen that very much under pressure as far as that key 100,000 level. It's been sub 95 today, although we have picked up from the session's lows. The 10-year yield picking up as well. We're at 4.15. In fact, the 10-year yield, the chart on that has been pretty much moving in tandem with equity, so that tells you something. Here's a look at the sectors. Looks like we're seeing technology, as I said, do the heavy lifting today, 0.9% higher, but the rest are actually lower today. So we've got communication services down, so is consumer discretionary, staples, and financials all lower. So very much it seems like big cap tech is doing the heavy lifting here, along with utilities, which has been very much linked to the whole AI trade. Real estate is doing well, so are industrials, and energy marching higher, very much off the back of these higher crude prices as well. Materials are 0.6% lower. Mega cap tech is a mixed picture right now. Of course, we were just talking about some of the China numbers for Apple that looked good, 0.3% higher on that name. Nvidia is flying high today, recovering some of the losses we've seen in recent sessions. We've got some price target boosts ahead, of course, its earnings next week. Meta is just fractionally higher. Microsoft is up by 1.4%, and the rest are lower. So we're seeing a bit of a mixed picture, but certainly things looking a little bit more up than they have in recent sessions. So let's welcome in our next guest, and that is Eric Lascelles, who's the chief economist over at RBC Global Asset Management. Thanks so much for joining me, Eric, and happy Friday to you. What's your read on where we're at right now, post the government reopening and given all these tech AI valuation concerns?
Well, gosh, I mean, from an economic standpoint, we economists have been operating, I guess, wearing sunglasses at night for the last few months, not having a great sense for what's been going on, and there will be some extra clarity that emerges over the next
some of the alternative indicators, this has been a U.S. economy that has been slowing modestly, and so not a collapse by any means, setting aside the artificial temporary effect of the shutdown itself, but one that it is in slight decline, and one in turn that I would say still leaves rate cuts on the table for the Fed in December, but maybe not quite with the precision that all once thought as of just a few weeks ago.
Looks like the markets have sort of changed their tune this week as far as some of that pricing in with regards to that December rate cut. I mean, the odds are looking at below 50% chance now. I mean, so it's not even a coin flip at this stage. And I mean, you've had some voices coming out of the Fed even today with Kashkari talking about the fact that, you know, maybe the economy is actually resilient. And also, of course, Schmidt, who was the lone dissenter there and talking about how we don't really know what's going to happen next. So what do you make of some of that commentary, just because of the fact that we've heard more people giving a little bit more credence to the inflation side of the mandate, which hasn't really been the emphasis?
I think that's quite fair, and let the record show when we look back to dot plots as an example that has been significant dissent on the Fed. This was always set to be a bit of a battle royale as to just how much cutting would be delivered in 2025 over this fall, and if anything, we've even had a little more, I think, than some of those dot plot voices might have initially thought likely. It's fair to say the inflation and the economic numbers are pointing somewhat in opposite directions. I would still say the inflation figures aren't coming in quite as hot as I had feared, and as much as tariffs are inflationary, we're seeing some absorption at the corporate level, at the foreign manufacturer level as well. And to me, the thing I keep coming back to, and I suppose why I'm still maybe more sympathetic to a December cut than not, is just it's still a fairly high Fed funds rate. If you believe 3% is a neutral rate, this is still a restrictive setting. The inflation hit from tariffs are, in theory, temporary, and so it probably is appropriate to be working closer to home over time. And again, there's no right answer to whether December or January is the perfect time to make that next step, and it certainly could be either. But I think they might get there. And again, it's going to depend a lot on this data that comes out, and we're getting 2 or 3 months worth of data all in one fell swoop. So there's going to be a lot more information fairly shortly. And again, I think we will see certainly some weakness associated with the shutdown, and so that's something that could, I suppose, spook voters a little bit and prompt them to be more on the dovish than the hawkish side as that comes out, even though some of the shutdown damage is temporary. But I think more broadly, we may discover that the economy was slowing a bit even without that shutdown.
What do you make of all this talk of this sort of characterization of a K-shaped economy in the stock market?
Yeah, well, certainly there is some element of that. It's obviously an economy in which high-income consumers have been doing fairly well, and just about everyone else has been doing much less well, pardon me. And so I think that does very much exist. It's fairly narrow set of shoulders that we're counting on in terms of driving consumer spending forward. I would just say that high-income consumer is, though, doing fairly well. They're much less reliant on the hiring side. They've enjoyed some big stock market gains. They've benefited from the tax cuts. They haven't been hurt as much by the tariffs as well. And so I think we can see that consumer keep pushing forward, but a large fraction of Americans aren't feeling great right now, and there are numbers that certainly point to a bit of suffering on that side. And of course, as you mentioned in markets, it's been very similar. It's a highly concentrated market, and today, I guess, is an example of that, with those big tech companies rallying, I guess recovering, you could say, today, but having been the key drivers over the last few years. And it's certainly right to ask questions, I think, about that, and to worry that perhaps something has been overdone there. But I would say that we do think this AI push is for real, in the sense of unleashing major productivity gains over a period of decades. And so I think there's something legitimate to that. You can still debate whether the capex is too high right now or whether it can continue to grow or not, but I'm inclined to think it probably can. This doesn't look too much like the late 1990s, and you're seeing these big companies that are actually fairly diversified, with profits, with lower valuations in the late 90s, and they're dedicating in general less than half their free cash flow to this capex. And so whether it continues to grow or not, I don't think it spells doom if there has been some over investment. And then ultimately, you think about some of the bubble talk that's come out recently, and we'll see where that goes, and maybe markets feeling better today. But do recall, when the bubble concerns were growing in the 90s, and again, it is an imperfect parallel, but when they were, we had Greenspan talking about irrational exuberance in 1996. There were still 3 or 4 years of the market rising before that actually came to a head. And so I'm inclined to give the benefit of the doubt to the big tech players for the moment.
What about energy costs with all this data center build out? I mean, there seems to be a view out there that the retailers are going to have a hard time dealing with the rise of prices if we continue to build out this AI, and I suppose that supports what you're saying, because with all this capex, the market does want to see ROI, and with ROI, you're going to obviously see that innovation, you're going to see that efficiency and that productivity, which could perhaps feed into some of those energy prices. I mean, that's the view out there. What's your take?
Yeah, that's right. And so, whether or not all this money ultimately is well spent from the perspective of the big companies themselves, I don't think we'll know with any precision in the next year or two, but we might have a better sense over a longer time frame. I do think you could still call that worthwhile spending in a societal sense, in the sense that we may end up in a world where there is a lot more electricity generation. You've got to get there, obviously, first, but when you get there, it's a situation where perhaps other innovations can work off the back of that, much as we had excess fiber early in the 2000s, and that proved useful in other regards. Again, whether the companies doing this, innovating, are the ones that fully benefit or not, having more advanced AI is something that will benefit a large swath of the economy and a large swath of households. And it really is important to think of this, maybe not as an investor, but as a member of society, as something that is a potentially general purpose technology and that can make us all more prosperous and more productive over a sustained period of time. Obviously, a key question, a key pinch point potentially right now is whether the electricity generation can keep up and can just rise quickly enough along with the intended capex. And that is potentially one of the pinch points out there. And there is a concern in the short run that the cost of electricity might end up higher as a result of that. I wouldn't want to underestimate the ingenuity and the push that gets us to a world in which there is more electricity production, but that's a multi-year story. And so I don't doubt that may be a constraint over the next few years.
Okay, and obviously comparisons have been made by even influential names like Jensen Huang about, where China is at in its AI race and also its energy capabilities. I'm just wondering, when you look at the US and China, I see that you have some thoughts on very much how they're dividing up the world. We've seen very much this split taking place as a function of, this diversification of supply chains. Can you give us your sense of what you're seeing playing out here?
For sure. I mean, this is a multipolar era. It's one in which the U.S. is no longer the only sheriff in town. And, there are some implications that come from multipolar eras. And from an economic standpoint, it tends to be a period of more protectionism, which we're seeing, and more nationalism, which we're also seeing, and a bit less economic growth as a result, and a bit more inflation, obviously, and perhaps slightly larger risk premiums in markets as well. So there are some pretty major repercussions that reverberate over potentially decades going out. We've done work just looking at so-called Team USA versus Team China and trying to gauge which one is bigger, and countries really would prefer not to have to pick between the two, but there is some pressure on them to align on one side or the other. And I think the way you would put it is that Team China is much, much bigger in a trade context. The trade flows with China are far greater than with the U.S., and that divide is probably going to get even larger given the U.S. retreat and tariffs and so on. Conversely, though, financial flows still very much favor the U.S. Immigration type flows very much favor the U.S. as well. And so Team USA is still significantly larger, and it includes obvious countries like Canada, Mexico, the UK, much of Europe, and so on. But Team China is growing and includes, of course, a lot of Asian and Central Asian and even Middle Eastern countries at this point in time. And I'm hoping that we continue to see reasonable relations between the two. But history shows you tend to get these cliques of countries forming, and it certainly becomes a much more complicated world at a bare minimum. And China, as you mentioned, does have its own technology infrastructure, and they're pushing hard on AI, and they're probably not quite where the U.S. is, but there is a parallel ecosystem that exists there, and it's sort of an interesting place potentially for investors to play, to the extent that there are these other very similar sort of tech companies that exist, and maybe they haven't run up quite as far. And in general, we're fairly positive when it comes to both EM and EM Asian equities in particular.
Well, fantastic chat. Thank you so much for joining us. Happy Friday. Have a great weekend. RBC Global Asset Management there. We'll send things back over to Marley in Chicago for now.
Thanks so much to Sam and Eric for that. Coming up next, we'll be joined by the CEO of cloud networking company Extreme Networks to discuss its latest quarter and how it's benefiting from AI. Market on Close. We'll be right back.
Opportunities don't stop when the market day ends. So neither do we. Schwab gives you round-the-clock access to over 1,100 of the most popular stocks and ETFs, plus a wide variety of futures markets. All with 24-hour support from trading specialists who understand the ins and outs of 24-hour trading. No matter the hour, you can trade brilliantly with Schwab.
I'm Diane King Hall on the floor of the New York Stock Exchange. When markets react, we are live with analysis that matters. Watch now, only on SchwabNetwork.com.
Sometimes, you could have done better. Same goes for where you invest. Level up and invest smarter with Schwab.
Welcome back to Market on Close. I'm Marley Caden alongside Sam Vadas in New York. The bidding war for Warner Brothers Discovery is starting to heat up as reports say that Paramount, Skydance, Comcast, and Netflix are preparing bids for the company. The deadline to submit non-binding first-round bids is November 20th. That's next Thursday. Warner Brothers holding an auction process in the hopes of having this completed by the end of the year. So let's take a look. We are seeing Warner Brothers up about 4% so far today. But as far as the potential suitors, Paramount, Skydance moving up to the positive today, about 2%. But we are seeing Comcast under some pressure today, down 1.7%. Netflix under greater pressure, down about 3% here. So those are just a few of the potential suitors that we're hearing reports of, but we'll know more next week when those first non-binding bids come in. I do want to bring Sam back into the conversation and welcome in our next guest to talk about their company, which is celebrating a pretty significant anniversary. Joining us now, Ed Meyercord, the president and CEO of Extreme Networks. Now, Ed, we know that you just celebrated 26 years as a public company. You rang the bell at NASDAQ on Monday to celebrate. We'd love, before we dive into your earnings and others about the company, we'd love to just know some of your favorite memories from your history with the company.
Well, it was great. I used to be chairman of the board, and then, some people would say I did a silly thing, and I jumped off as chairman of the board into the operating role as CEO, and it's been 10 years for me in that role, and I have to say, what an adventure it's been. But, Extreme is in the strongest position in its history. It was great to be there to ring the opening bell for NASDAQ. We had the whole team. We had Investor Day. And then we carried that over. And yesterday, we had our first AI summit at Major League Baseball headquarters. Very well attended. And we're in a really unique place. We have a really unique growth opportunity. 6 quarters in a row of sequential growth at Extreme and margin expansion. And we had a beat and raise quarter. And the outlook is good.
Let's dig into some of those numbers, Ed. You say that revenue was up 15.2% year on year. As you said, 6 consecutive quarters of growth. What drove those sales, that revenue number, and how else would you characterize the quarter?
Well, so we're playing in what we would call the enterprise networking space. Sam, I think you're sitting on the floor of the New York Stock Exchange, so you're getting your Wi-Fi from Extreme Networks. So you think about like being at an NFL stadium, getting your Wi-Fi, being in a large campus and environment like in a healthcare organization or a hospital, in a manufacturing setting. We have large customers at retail like Kroger, the world's largest grocer. All of these enterprise customers rely on Extreme Networks, and it's our systems. They're using our networking systems to deliver that high quality connectivity, security to all of their customers. And so we provide them with these systems. We compete with some companies that you may have heard of, a small company called Cisco and another one called HPE that just acquired Juniper. These are the companies that we go head to head with every day, and we've got some competitive advantages which are driving the strength of our results as far as our technical differentiation in terms of what we can bring to customers, and then how we're innovating. And I know the hot topic for everyone is AI.
It certainly is, but I'm glad that you brought up this HPE and Juniper merger because that's causing a significant disruption in the networking industry. I'd love to know where you see the biggest market share opportunities for Extreme as some of their customers may potentially be reassessing their vendor choice.
Yeah, I mean the issue there is uncertainty, right? When you have two big companies coming together, customers, and remember we sell through a very big channel, so we have value-added resellers that position our technology, and there's just a lot of confusion about what's going to happen as far as the product roadmap, the technology. Hey, I just bought from one vendor. Now they're combining. Is the technology that I bought going to be around in 3 to 5 years? Potentially they change the roadmap. And the same is true with the economics of partner programs. And Cisco just came out and changed their partner program. So there's a lot of uncertainty among partners about their business. And customers and partners out there need a place to turn. And when they're looking for an alternative, they're surprised when they come across Extreme Networks. We've been in business, as we talked about, for a long time, but we present a really compelling and attractive alternative for both customers and partners out there. We're not in the business of supplying networking for AI, which is getting a lot of the hype. And I know there's discussions about capital expenditures and AI, et cetera. We're actually applying AI to networking. And because of our size and because of what we're doing, we've stood up the very first platform, AI-driven platform for networking, and people are interested. And we talked about our AI summit at Major League Baseball headquarters yesterday, very well attended by large customers. And the opportunity for us is to have these conversations with these really interesting large enterprise customers who want to figure out how to apply and get that productivity gain and get the result out of AI. And we're the company, and we're the best choice in the marketplace to deliver on that. And so for us, we're having much more interesting conversations. We're moving up market. We would say we're winning up market, winning larger customers, and we're probably better positioned than anyone to help enterprise customers on this journey to apply AI and AI-enabled applications to drive better outcomes. And what does that mean? It means that you're much more intelligent, you're much more efficient, and you can go up to senior management, and you can go, if you're a CEO like me, you can go to your board. If you're a CIO, you can go to your CEO, and you can say, you know what, I'm actually applying this AI technology, and I'm driving use cases. This company, Extreme, is helping me deliver on that promise.
Can you talk us through some of your recent client wins then, Ed?
Yeah, so I mentioned Kroger, the world's largest grocer. Okay, in this case, they have 2,800 stores. All of them have their own network, but in the case of Kroger, they're all connected. And from their headquarters in Cincinnati, they have one screen and they can see and click on every single environment. And these are complicated environments because everything is connected to the network. When you think about IoT devices, et cetera, et cetera. Look, it's football season, so we'd love to talk about the NFL. We're the exclusive Wi-Fi provider for the NFL, and there we also provide stadium analytics. So teams want to understand what's going on with their fans in the stadium. They want to understand what is performance. How can they enhance the fan experience? This is an area where we shine. When you walk into an NFL stadium, you automatically flow over into Wi-Fi, which is a technology that we have, and we're able to support teams in delivering a high quality experience in that stadium environment. The very first casino in the world that's being built in the Middle East by Wynn, they chose Extreme because the differentiation technology that we have in building out unique capabilities for the first casino in the Middle East, which is a massive undertaking. So we have customers all around the world. You think about airports, you think about manufacturing facilities. This is where we shine in complicated private networking environments. And because of our size, as I mentioned before, it's easier for us to put together, and we stood up the very first platform for networking in our industry. So even relative to the bigger, it's not something you can throw dollars at or people at to solve for. It's very complicated and mission critical things like networking, like you can imagine the floor of the New York Stock Exchange, how important that is to work, it's got to work. It's mission critical. So when you combine that nature of being mission critical, how important that is with the
Oh God, I got the
complexity,
hiccups.
that's where we have the ability to simplify this, and size is an advantage for extreme networks going up against these larger companies.
Yeah, I'm messing with you,
And it sounds like a very exciting time for Extreme. We want to thank you for being with us and wish you also a wonderful weekend on this Friday. That's Ed Meyerkorth, President and CEO of Extreme Networks. Coming up next, we've got Options Corner. Rick Ducat will join us here in our Chicago studio to take a look at DoorDash, which is on the move higher after an analyst call from Needham. That's next on Market on Close.
Opportunities don't stop when the market day ends. So neither do we. Schwab gives you round-the-clock access to over 1,100 of the most popular stocks and ETFs, plus a wide variety of futures markets. All with 24-hour support from trading specialists who understand the ins and outs of 24-hour trading. No matter the hour, you can trade brilliantly with Schwab.
I'm Diane King Hall on the floor of the New York Stock Exchange. When markets react, we are live with analysis that matters. Watch now, only on SchwabNetwork.com.
Sometimes, you could have done better. Same goes for where you invest. Level up and invest smarter with Schwab.
Hey, investors, you know the market moves, and Schwab is here to help you move with it. So, whether you're buying, selling, holding, or planning, whether you're ETFing or 401k'ing, saving, spending, or even retiring, you can count on Schwab for market insights, live support, powerful trading platforms, and 400 branches, all at your service, all so you can invest your way. Sounds nice, right?
I'm Nicole Petalides, live at the New York Stock Exchange, and this is
Oh,
the
Lord.
Watch List. Your
Watch out,
midday
bro.
view into the trends driving the markets with a sharp focus on technology, innovation, and companies leading the next wave of growth. Big movers, real-time interviews, and insight from analysts, founders, and market voices you trust. The Watch List, 2 p.m. Eastern, only on Schwab Network.
Welcome back to Market on Close. Shares of DoorDash are higher today after Needham cut its price target on shares to 275 from 300, but it kept its buy rating. The firm said the latest quarter continued what looked to be a banner year for the company, showing continued acceleration in orders and gross order value. Shares are down 18% this month, but they are still up 20% on the year. Now it's time for Options Corner. We're going, of course, to welcome in Rick Ducat, our lead market technician, to talk more about DoorDash, which is making a pretty good move to the upside right now, up 6 1/3%.
Yes, certainly best performer in the S&P 500 today. Taking all of this at face value with no context, that sounds great. But you have to also consider that we had earnings recently on November 6th. We had a one-day 17.4% drop here, despite strong beats on the top and bottom line. That's one of those situations that can kind of confound newer traders because it's like, well, earnings were good. Why did we go down then? In this case, it seems to be that the street did not exactly love some of the things DoorDash executives said, such as big plans for investments to the tune of several hundred millions of dollars here. So that was a difficult situation for the market, it seemed like, as well. If we were to look at how DoorDash stacks up against some of the competition, Lyft, Uber, and Maple Bear, kind of in the middle of the pack here, but Uber and Lyft are also quite different, really, if you think about it. They're kind of just entries into this space.
And, as we just look specifically at just them, when we look at their chart and some of the technicals, we did have that massive sell-off on the earnings, that significant drop. I think you said a little more than 17%. But, since then, what are the technicals showing us?
Well, this is a situation where we often talk about the bull flag type of pattern here. This would be the reverse, the bear flag or bear pennant type of price activity, where we have a sharp pull to the downside here. And in this case, we'd be looking for a brief period of appreciation in price here. We would be looking for perhaps even a price to take out those initial highs that we reached, but then we would be in store rather for a decline from that point here. So that would be the setup maybe to be aware of, be kind of more on the lookout for if it starts to materialize. For now, though, it seems like we've formed this floor near 195. We have this shorter term downward sloping trend line that perhaps could be being broken right now. If we were to consider some of our other studies here, our 252-day exponential moving average is our longest term moving average here. That comes in around 215. So look for that to also be potential resistance here. RSI actually improving a little bit. A small amount of bullish divergence. Price made a lower close. RSI made a higher reading and also is coming out of that oversold area at this point here. So some mildly positive news there as well. Finally, we can see that we did happen to bounce off of our volume profile point of control here, our heavy trading area, as well as our -2 standard deviation channel. So perhaps this bounce may have a little more staying power and strength than it might have seemed at first.
And, as we look about analyst action, whenever sometimes we see these sharp fall-offs, we often get revisions or commentary. What have we heard from the sell side?
Well, for positive analyst activity, this is like when you get delivery and the fries are all cold. You know what I mean? Because we have Wedbush gave an upgrade, but they left their price target unchanged at 260. Needham, they reiterated their buy, but they actually cut their price target to 275 from 300. But nevertheless, they both said this is more of a buying opportunity that seems like just an excessive pullback after an overreaction to the earnings event.
All right, so in a buy the dip, what are we seeing in terms of the options action?
Yes, one of the lighter names, about 26,000 contracts changing hands today. Even split between puts and calls today. Sizzle, just about average. No exceptional activity here. If we were to think about the December 19th expiration here, about a plus or minus move of 11.6%. Not lining up too terribly cleanly with any of our technicals, except for right here. We have our 21 EMA on our +1 channel lining up with the upper edge. But, that could change quite a bit as we start to move forward in time there.
And as far as any notable trades or any notable action you saw today, was there any?
One trade that stood out by far the biggest dollar amounts, sold 1,500 November 21st 240 puts and bought 3,000 November 21st 210 puts, a $2.8 million net credit. Probably a closing trade, though. And there were some big opening positions around August 7th and 8th in both those strikes as well.
Market like is trying to bounce.
Thanks for being with us for DoorDash for Options Corner today. We appreciate it. That's Rick Ducat, our lead market technician here on Schwab Network. And I do want to send it back to Sam to find out who we'll be talking about for overlooked stocks today.
Well, Nali, George Tillis has his eye on Top Golf Callaway brand heading into the close, so he'll break down the news and what you need to know about that coming up next on Market on Close.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. Do you like using charts when analyzing your stocks? Our technical analysis webcast series breaks down different charting techniques like trend analysis, price patterns, moving averages, oscillators, and much more. Best of all, you can ask questions directly to an education coach. It's interactive learning at its finest. Tune in live or on demand. Head over to schwab.com/coaching and start learning today.
I'm Kevin Green, and I track options flow daily, identifying who's buying, who's selling, and how it's going to impact the markets. Watch live on Schwab Network at schwabnetwork.com.
Welcome back to Market on Close. I'm Sam Vardis, live from the floor of the New York Stock Exchange. It's time now for overlooked stocks. Shares of Topgolf Callaway are rallying today after, of course, the company is in talks to sell the Topgolf unit of the business. So I'm joined now by George Tillis, senior markets correspondent, to tee things off. What are you seeing as far as the story? What's the significance and what do you make of the reaction in the stock today, George?
Yeah.
I think this is a pretty significant deal for Topgolf Callaway, which again, Callaway Brands is a golf brand, lifestyle apparel brand. They also produce and sell the marketplace, not just golf equipment, but also golf technologies. And back in 2021, they actually wanted to expand horizontally into to purchasing Topgolf, which is basically a restaurant chain, if you will, but also sort of an entertainment venue, which includes golfing. That seemed to have been a good play for the business of Callaway, having purchased that back in 2021. They actually expanded the total footprint to over 100 locations in the United States. But if you look at the price action in the last few years, particularly since they made this acquisition and expanded, the stock is actually down about 48%, really underperforming some of the other major players in the golf equipment space. That includes Titleist, which is owned by a company called Acushnet or Symbol Golf. That stock is actually higher over the last 3 years. So there seems to be some issues in terms of the sales and earnings profile for Topgolf, which is sort of anchoring, if you will, the Callaway brand, which again is still a prominent brand in the golf equipment and technology space, and of course a lifestyle apparel. But there's some talks now of potentially spinning the Topgolf business out once again to unlock some value that is underpinning the Callaway brands altogether. One of the things I did notice about the income statement when I looked at the financials prior to this segment is it looks like they took about a $1.4 billion charge, an accounting charge in Q4 of last year, and that was essentially an asset valuation write-down of the Topgolf business. So it seems like they were already expecting to declare that this asset is being written down quite significantly, and now they're looking to spin it off, raise some cash, and of course use that to potentially pay down some debt, which is quite large, I suggest, around $4.5 billion, considering the market cap at around $2 billion.
Sale that we're talking about here could actually be coming at quite a significant discount as far as that valuation is concerned?
Yeah, I think so. I think it is, because like I said, they took an impairment charge, a write-down of the value of the balance sheet asset, which again is the Topgolf brand or business. And there are some challenges with that particular business. If you think about this, and this used to be the case with me when I used to work in an office, we would frequently go as a group and employ as part of work to these locations. If you think about the nature of working from home, but also the way the labor market is behaving right now, corporate spending from a discretionary standpoint, things like corporate outings are down. I think that's actually impacted their business. And discretionary spending from a consumer standpoint, also looking at restaurants, even Chipotle, for instance, Starbucks, just to name a couple of, coffee and food outlets are down as well. So I think right now the restaurant and leisure space is weak, and then of course the corporate spending, discretionary spending down for outings has really impacted Topgolf. So, for what it's worth, expectations are somewhere around $1 billion to retrieve from the business, and maybe some other competitors, for instance, like Drive Shack, as an example, may pick up these assets and rebrand them. And they'll focus on, of course, their core scalable business, which is providing leisure and entertainment and outings. And then, of course, Callaway will focus on brand, lifestyle, and technology.
Yeah, you raised a really interesting point about some of the discretionary spending, because the Wall Street Journal, which initially broke this story, had sort of gone into the background here as to, what kind of went wrong, certainly from a sort of consumer lifestyle type of point of view here, about how, they thought this was going to attract younger consumers, more casual players to the sport, but that didn't really go as planned. Anything sort of stick out to you about this story, about the significance here, maybe Leonard Green's portfolio as well, how notable that is?
Well, I think it's significant because, again, they took the impairment in Q4 last year, which was quite large. And so what that ended up doing was creating a one-time loss for the business. That might be priced into the stock. So if you look at the last year, the stock is performing okay. It's up about 24%. But again, the trend in the stock, at least in the last 3 years, is still down. So a lot of times with businesses like this that are combined together, a spinoff of an unprofitable unit, either spinning it off or essentially selling it off, actually is generally good. And that's why it happens from a capital structure and financing standpoint. And again, assuming they can retrieve about $1 billion, certainly be used to add to the already $865 million cash they have. So you just look at the market cap of the business, $2 billion in equity, $865 million of that is cash. That's a pretty significant chunk already. That gives you an idea that the business is struggling to maintain or achieve profitability. So spinning it off will raise more cash and then maybe focus on their core business. But they could also do things like a share buyback, pay down debt, and so forth, which would certainly help alleviate some of the pressure on equity.
Okay, George, thanks so much for getting us across the story and the developments there. Have a great weekend. George Sillis there. I'll send things back over to Marley in Chicago.
Thanks so much to George and Sam. We are nearing the end of our market session, closing out our week. We'll bring in Kevin Green to break down the levels he's watching on the S&P 500 as well as today's action. That's next on Market on Close.
Big one falling.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. Are you an active trader? Our active trading webcasts are designed to help you develop a deeper understanding of technical analysis, options, futures, and more. Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or watch on demand. Head over to schwab.com/coaching and start learning today.
I'm Jenny Horn. We go beyond the headlines, tracking the trends, sector moves, and fundamentals shaping the markets in real time. This is Schwab Network. Subscribe at schwabnetwork.com.
How's it going?
First day, so sometimes
Next.
Try it again. You could have done better. Please. Same goes for where you invest. Level up and invest smarter with Schwab.
What's up, Carl Nation? It's your #1 broker with the best full-service wealth management skills in the biz.
Actually, I'm seeing something from Schwab.
Uh-oh.
Yeah, Schwab lets you invest and trade on your own.
And if you want, they can even manage it for you.
Not to mention, Schwab has a team of specialists for taxes, insurance, and estate planning, all with low fees.
We're experiencing technical difficulties.
Carl.
Schwab, a modern approach to wealth management.
Stay connected to the markets with Schwab Network.
Tune in 24 hours a day, 7 days a week on schwabnetwork.com.
And on all your favorite streaming services. Schwab Network.
Available anytime, anywhere, on any device for free.
We're back here on Market on Close. I'm Sam Barnes here on the floor of the New York Stock Exchange alongside Marley Caden in our Chicago headquarters. So there's just a few minutes left in today's session and for the week. So let's welcome in Kevin Green, Senior Markets Correspondent, to help close things out for the day. So we did see a bit of a rebound, very much staging a comeback, particularly in technologies, although we are looking a little bit wobbly as we head into the close here, KG. What are you seeing?
Yeah, I would agree with you. Obviously, the move that we had off the lows actually was very aggressive, and I think that's actually a positive sign if we're able to kind of hold these current levels for the S&P 500. This morning, obviously, we saw a flush to the downside, getting fairly close to around that 66.40-ish area, and then some buyers really did try to step in. We had this 67.80-ish area as an area of resistance that was highlighted early on today. We got within about 6 points of that, kind of faded a little bit, tried to retest, and now we are pulling back a little bit here. 6,700 has been that stable area of support. If we're kind of looking at the close, though, I'm looking at 67.30 as your pin risk area for the market. That gets us close enough to try to have a flat day, especially when you're looking at the technicals here, trying to recapture that 50-day moving average, which has been very key here. And I would call that a win for the bulls for now. I mean, you did see aggressive selling overnight, getting some buyers to really step in, and this is really similar to what we actually saw this time last week on Friday as well. Then we did see a follow-through day on Monday, if you will. That was also on the optimism of a potential deal for the government shutdown and things of that nature. I'm not sure what the news catalyst can be this time around for us to kind of push a little bit higher. But overall, I think this is actually a decent day for the bulls, at least for now, at least setting us up for a decent Monday. And a lot of the Mondays that we've had, I think over the last like 10 or 12, I think we've only had 2 down Mondays out of like 12 of them, 12 previous. So they tend to be actually very bullish for the setup.
And KG, I know you like to keep keep a close eye on the E-mini S&P 500 futures. As far as those charts, either for the day or for the week, what are they indicating to you? Are there any trends that you're noticing?
Yeah, I would say if you look at the daily chart, you can make a bullish case here. Obviously, once again, this time last week, we had the same type of price action. We saw a flush to the downside. We were able to close slightly into the green, and then we had that follow-through day. Now, unfortunately, on the daily chart, we do have a lower high that has been established, but we are still making higher lows. So at the end of the day, we are now going to be forming this like asymmetric triangle, if you will, making lower lows, making lower highs, making higher lows, and then we will kind of come to an apex if this consolidation continues to last here. RSI still making lower highs as well as lower lows. MACD a little bit in a bearish formation, 12 EMA below the 26. But you like the candle structure, at least for now, if you're a bull, that you could maybe get a follow-through day on Monday. If we go to the weekly chart, though, I do believe the weekly chart's a little bit more bearish in nature, and that's because we have seen this consolidation. Consolidation time is actually healthy in some respects here, but if you look at that MACD or the moving average, convergence, divergence indicator, if you will, is about to cross in a bearish formation, and this is the weekly chart. Weekly charts usually carry a little bit more weight, so if we do actually see some follow-through next week, maybe we have another consolidation week, but we usually do not resolve that bearish cross for the MACD without hitting that 20-week moving average, which right now is sitting at 65.60. So RSI, once again, bearish divergence, that's correcting. MACD, a little bit of a bearish formation here. The weekly doesn't look that great.
Okay, so looking promising. Things didn't get worse, at least today. We saw a bit of dip buying, and we had one bull, Ives, out talking about how this could have been an opportunity, certainly in tech, after what we've seen in recent days. But certainly it does look like, even with the volatility and some of the pullback this week, we are in for a winning week for some of these stocks too.
There's the bell.
Line today, the S&P 500 just closing out on the line to the downside at 67.34, but certainly off the session's lows, as we mentioned, as we did very much see this dip buying mentality throughout the course of the Friday session. The Nasdaq just managing to scrape through there on the line to the upside. We'll take it because we have very much seen somewhat of a tech wreck, very much the air coming out of some of those names in recent sessions, a rotation into some of the areas like healthcare, for instance, which has been catching a bit this week, but we did see a nice day for tech, particularly when you look across big cap tech. Dow Jones finishing the day down 0.7%, of course, hitting a record earlier this week. Technology was very much the winner on the day as far as some of the sector performance is concerned, 0.6% higher. The rest in the red. We had financials down about 1%, consumer discretionary also lower on the day. So we did see a bit of a mixed performance beneath the surface there. And if we flip the boards and take a look at what else we saw across the 11 sectors today, I do believe we saw utilities higher. There we have it, about 0.2%. Real estate also catching a bit today, 0.4%, and energy higher on these crude prices jumping off the back of a few developments there around geopolitical tensions with Iran and also, of course, Ukraine and Russia too. So, of course, supply concerns and conversations are creeping in there, and we did see that sector ending the day up almost 2% higher in line with those prices. So here was your mega cap tech scorecard, and we had Nvidia, a couple of price target boosts there ahead of what is described as the Super Bowl of earnings next week, up almost 2%, even though we've had Amazon and Microsoft reportedly talking about how they're behind a campaign to stop those chips from going to China. But no worries for Nvidia. Microsoft is up 1.4% right now, and the rest are lower. In fact, Apple took a turn lower. I don't know if you call that an Apple turnover, but 0.2% lower, even as we saw those nice sales in China. Okay, let's bring back Marley and KG back into the conversation. Kevin, how did we round out the week?
Yeah, we still had a gain on the week. Obviously, we did see a lot of rotation. Volatility did creep into the market as well. And I think this is actually a pretty healthy volatility environment, to say the least here. We're sitting at around a 20 VIX, and that does provide good opportunities, both to the upside and downside on an intraday basis, as well as if you are swing trading. And then also if you're looking at selling premium, this is a pretty decent environment as well. We have some economic data coming next week, but we're really looking at the following week, where we are expecting to actually have some government data actually hitting the tape here. And then we have NVIDIA earnings. So I think right now the setup, you can make the case that potentially trying to buy this dip here for a follow-through day on Monday and Tuesday makes sense. You can also make the case that maybe the market is starting to break down structurally. Looking at Bitcoin, I mean, it's still trading at the lows of the day. Last time that I checked, you're not catching a bid there. That's a risk-on indicator, and it's not really reflecting that at the moment here. And then you also have this yield complex and the dollar complex that still looks like it's trying to figure itself out. Yields were higher today. Dollar for the
Yeah,
most
market's
part
not
flat to
looking good,
slightly
but
lower in some
I believe they're
respects.
going to buy the dip
Equity's
this
kind
week.
of gyrating a bit, so it seems like the market's really trying to figure out what's going to happen next. A lot of the indicators right now are in favor.
Yeah, I play
I
chess.
think that navigating this market through the technicals is probably better than trying to make a narrative as to what's going to happen next.
And KG, we saw the NASDAQ snap its 3-day losing streak in big part, NVIDIA moving to the upside, also snapping their losing week with their move to the upside today on some price target hikes ahead of their earnings. We've already seen what a big mover they can be in terms of the markets. What are some of your expectations for next week with them reporting?
With NVIDIA reporting? Yeah, well, so if you're looking at it from a market maker moves perspective here, it's better to sell premium. It has been profitable to sell premium against NVIDIA's earnings rather than to try to pick a direction to the upside or downside. Market makers have actually gotten pretty good at trying to pad the premium, if you will, in order to absorb some of the shocks that we might see to the upside or downside. It's a very transparent company. Every week, every 2 weeks, it seems like we have a new announcement that's coming from them or a partner of theirs. So I think the market's really obviously dialed in and trying to figure out what's going to be next when it comes to this space. I don't think that we're going to get any fireworks. Usually the fireworks for NVIDIA are announced before the earnings announcements. So at the end of the day, I think it's going to be a non-event. And then unfortunately, a non-event for NVIDIA could actually lead the stock to slightly lower on the week for next week. That has been the trend in the past when you're looking at the earnings. I think that's going to be the same. I don't think that we're going to get anything that's going to be remarkable, that's going to really shift the direction for technology stocks or the semiconductor space as a whole.
Yeah, certainly I've been putting that to a lot of guests, as to what is likely to be the next catalyst. I mean, are they paying attention to NVIDIA or are they paying attention to the data? And many say the latter, and it does look like we're going to actually get some of the September jobs reporting out on Thursday. So as we look across the closing session, let's get to some earnings now, and I believe we've got Qubit hitting the wires now, Marley.
Yes, we do. Quantum computing just coming across the wire here. Not huge expectations here. Expectations, we're looking for a loss of 5 cents. They are coming in with EPS of a cent, so they are significantly beating that. They are putting in their third quarter operating expenses at $10.5 million. They posted an operating loss of $10.4 million on revenue of $0.38 million. So 380,000 here, significantly better than the 100,000 that was expected, though, for this company. And I think that, interestingly enough, these are not big numbers, but we thought this would be interesting to look at, moving heavily to the upside now, up 7% already. As quantum is one of those spaces we're watching for any signs of traction, any signs of growth, and they're showing some here. So KG, as we're just getting these numbers across, they're not the usual numbers that we're generally talking about here, but as far as what this indicates for the quantum space, what are some of your takeaways?
Well, obviously, this is still an emerging industry here. I think that penny that was actually reported was a lot better. I think the market was actually looking for a loss for this quarter, so I'm not sure how the financial breakdown actually occurred, that they actually had an adjusted earnings per share that was positive, which is great. They actually did raise some cash, though. They actually talked about raising an additional $750 million for the quarter. That's what matters. What matters right now is the contracts that they are signing with not only the U.S. government, but also other research programs that are going to be leveraging the devices as well as the other software technology that they're going to be provided. That's going to be key. And then being able to manage and raise capital, because this is an R&D intensive company at the moment. So burning cash is going to be a part of their business. So if they're able to backfill that cash burn, which it seems like they're able to do so now, it looks like they're actually able to get some of these DoD contracts as well as some of these other government contracts that's outside of defense. And this is a stock that, once again, very speculative. And we've seen a lot of the quantum stocks getting completely demolished this week, but it looks like there's a little bit of optimism for this name. Very small revenue, obviously, but it's a good report. There's nothing negative that I can say about it.
Yeah, and Sam, we've talked a bit about quantum. I know we discussed yesterday on the show how under pressure some of the quantum stocks have been this week. I want to talk about some of those figures that KG just mentioned. They said they ended the third quarter with $352 million in cash, 461 million in investments. Subsequent to the quarter, they raised an additional 750 million. So they have a substantial liquid position now of over 1.5 billion dollars today for their long-term growth strategy. We've talked at length about cash burn and balance sheet health, and because this is emerging tech, how important those things are. We are seeing now up almost 10% on this news. As far as what you're hearing and people you're talking to about what they were looking for, is this going to be a good indicator for the space?
I think it shows progress. And I mean, to KG's point, I mean, this falls in the bucket of what has been a highly speculative type of trade. I mean, we've just seen huge amounts of capital pumped into some of these names across the space on this thinking that obviously this is going to be some sort of absolutely revolutionary type of technology, even though you have had the Jensen Huangs of the world sort of trying to stop it in its tracks at some point, but then sort of retracting some of those remarks as well. But I mean, as far as this earnings report is concerned, I think KG's really right. I mean, we want to see evidence or at least progress as far as deals are concerned, particularly around some of the strategic partnerships. This has been the case with a lot of these quantum computing stocks, even in the nuclear side of the equation as well. We do also want to see, obviously, anything that gives us some sort of evidence as a sort of differentiator as to who is on the path to commercialization,
I had learned
who's still sort of stuck in the lab.
a long time ago.
Certainly, KG,
Uncle
final
Troy.
thoughts here as I'm just looking, with their revenue numbers. That was compared to 100,000
Chess.
In the quarter, same quarter last year. They've got 33% gross margins, up from 9% gross margins.
I want to say like maybe.
Yeah,
I don't know.
They're showing improvement. We'll get probably more context
I
in
used
the conference call as
just
well. When
destroyed.
you're looking at these numbers in the grand scheme of things, they're still relatively small.
Got a bunch of trophies.
When you're looking at the business just in itself, but there's a lot of optimism here. I'm also looking at
Life
the
hit
options
me. I
market.
just can't
Look,
stop.
there's actually a significant amount of trading at the $11 calls.
This stream right here
that
is
are expiring next week.
killer.
If we do get some good commentary in the conference call, this thing could actually squeeze. I mean, this is a mover for a stock here, and
get up. I was like,
you didn't see anything negative on the earnings. I think the conference call is going to be that nail in the coffin for them, as long as they are seeing some.
But Chris's rating is higher than
mine. Public space, but also in the commercialized and private space.
Well, I had stopped playing.
I think this is going to be a stock
I just
that
talked to him.
many
He said he's
investors
like
are looking for the long
1,700.
term, not next week. Looking at the next 10, 15, 20
No,
years.
he plays
We're
rapid.
optimistic around this.
He's like
name.
1,700 on
May
his
find some
rapid.
value. It might be
Matter of fact, I need to get his.
on a happy note, if you will, because the company is kind of following.
Certainly, anytime you post earnings when a loss is expected, the investors feel good about it. Kevin Green, have a great weekend. Thank you for being with us to break down quantum computing.
I just kind of slowed down because I've been getting that.
Of 1 cent when a loss of 5 was expected on revenue for the third quarter of 384,000, where 1,000 was expected. Now, coming up, we're going to focus on metals. We'll take a look at price action in gold and silver and some long-term price targets to watch. Market on Close. We'll be right back.
I love you. Appreciate you, Schwab. Thank you, babies. Well, they better not balance it, boy. See, I miss Daniel, though, man. We used to watch Daniel play. Oh, hold on, I got a call. do it. I asked Uncle John and not Uncle John, Uncle Terry if he wanted to play East West. These speed games are something else. I don't know how they see that far. Motherfuckers is scrapping out here, boy. Alright, let me call my kids for a second. Please tell them hi. Yes, mom. her assisting up, and the other assistant asleep. gonna lie to you guys, man.
To sweet holiday
I
memories.
tried on Moo with Moo and
Simply
trading
say
and investing
yes
in
to
Moo
simple.
changed my life, man. Seriously.
T-Mobile's Guide to Moving Day. Step 1, get T-Mobile 5G home internet with 2-day free shipping. Step 2, get online in 15 minutes. Step 3, unpack, maybe tomorrow. Make your house a home on day 1. Get T-Mobile 5G home internet for just $50 a month.
Which I need to take advantage. All-in-one trading platform. They got everything you need. Data, the trading, research, 24/7 news. They got everything. Anything you can imagine, they got everything. All the tools. Advanced tools, option tools, earnings, zero commissions. Man, this is amazing. You can copy Warren Buffett's portfolio, Nancy Pelosi's portfolio, Trump's portfolio. Man, AI tools. Like, this is literally the best one, y'all. Hands down. So I love Moo, man. So gotta take advantage. Handle your business. SheldronFrost, man. Like, follow, subscribe, go on live. Every Monday through Friday, 9 to 4. Yo. Hold on. Hey. I'm ready. I start flipping. Nigga, me and Tuck be flipping, don't we? Your ass be flipping too, don't you? I gotta get up. I gotta go outside. I'm gonna just wait real quick. I've been sitting down too long. I'm sleepy. I gotta get up. I gotta run. I gotta breathe. I gotta move. I gotta get back moving. I gotta get hype. I gotta get hype. Come on. I gotta get hype. I'm getting sleepy. I think the engine running. Yeah. Come on. Come on. Yeah, Frost freestyle. Y'all want see me freestyle? What's up? Y'all want me to turn the camera on? I'll freestyle for y'all. Yeah, what's up? What's good with it? Gotta go get some Morellas, so I gotta go outside. I gotta do the voice first. He ain't Dude, I gotta read what she's talking about, bro. She sent me a bunch of shit, bro. Oh, she called me. I didn't know you called me, bro. Must have been up there sleeping. Why debate? Why debate? Get it right now. I'm trying to tell y'all, man. Stocks every day. Monday through Friday. 9. Oh. Now we out here in the chess field. You get me? Ross is gonna work on his book and work on his contact with his clients a little bit more we are. Ross is a busy man. I gotta get these kids. This is when I'm supposed to be usually picking them up. Bread. Whole bread. Rub me the frost. Word. That's what I'm saying. Like, and I used to get up early with them. Cause like around this time, I used to really be ready to fall asleep. Well, I'm glad. I'm glad you guys are all doing okay. Actually, I'm glad you're doing okay too. Okay. Hey, guess who hit me up? Yo, mama. Yeah, she said what's good. I had to tell her I'm starting my own business. What's up? She wants some money. I said I got it. And she also said if you say get me, she gonna get me. Oh yeah, no, I know. I know. I know. I remember your mama. You know, look, like you know her making money, and I got big things moving. She going on some business. But I have to. I don't have no problem telling people about it if I can't help it. But if I can, I can. I can really help myself. I have to, you know. Once I get in a position where I can get work straight, I don't have no problem helping. That's all I do. Literally, some people. But some people just want flat out money. You know, I know a way to help you passive money. You know what I'm talking about? So, what did you say? What did you say, Ashley? Nigga, I was calling for my kids, but then I called on the video call. You called me on this call. You know how you know if I call, and plus I try to send gifts for my kids, so you can that cash out not rejecting the money because anything I said is for my kids. It wasn't for you. It did. Anala. I told you I sent them. There was a message with that though. You do know what to do. Read the message and give my kids the money. No, I had just got a donation. I had to pay a couple people. I had to pay like three, four people, and I had a donation, and I had to give you some headphones. Look, I just gave them a little bit of what I could do. Okay. Now, all right. I understand. All right. Next time I'll just send $5 at minimum. All right. Hey, I just send you $3. Have you had a hug lately? When was the last time you had a hug? I don't need no hugs. Well, look, that's what I'm talking about. That's what I'm talking about. We need more hugs. That's what we need. That's all the hugs I care about is when my kids help me out. Yeah, that's great. I'm glad you're happy over there. And it's hey, well, listen. I got the food.